Good morning, everyone. So, welcome to Rocket Revision Batch CA Final Indirect Taxes. Actually, I went to Kerala few days before, like 3-4 days before only. Some flu got attacked, so I could not complete the batch also there. So, I have returned and I took rest for 2 days. So, today only I recovered. I was praying. So, at any cost, I need to take the batch like that. So, because of that only, my voice is not that great. Okay, kindly bear with me. Huh? Then even otherwise also my voice is not great. So this 3 days, so we are going to learn the subject indirect taxes in a completely fast mode. So therefore I know that you are not attending this in the sense like for the first time. If you are attending for the first time, I just wanted to give a disclaimer, please don't listen to this classes. So not only to you, even for those who are watching in YouTube also I am telling. So please don't listen to these videos. If you are watching it for the first time, you want to learn the subject. No, definitely not possible. So come on, in 3 days if a person can learn the subject and go to the exam and complete the exam, come on. So am I a god or what? No, definitely no. So if I have that much of power, I would have become long back Tarunananda Swami and I would have enjoyed my life with babes, okay? So no, not possible. So practically that is impossible. So already if you have the knowledge onto the subject, then it will be useful. So then this particular rocket revision is completely based on That's It book. So That's It book, I think many of you might be having it. So because I have given it to all my regular batch students, fast track students, etc. and even others also might have purchased it. So mainly from that book only I will be taking, and along with wherever required I will be giving some little bit of illustrations, etc. just to understand the particular concept. And then so this is the index. So all the segments we are covering, total 31 segments are there. That is the entire portion I just divided into 31 segments. So these segments do not match with the ICI chapter numbers. So but all the concepts of ICI study material is covered in this. And I have also given here ABC analysis, so which is in page number 5. You can see that ABC analysis. So these are the 8 chapters. So these 8 chapters repeatedly. So because I'm taking the index from 2018. So May 2018 till November 2022. So all attempts, they are following the same ABC analysis. There is no difference. So even I thought maybe for like November 22 or May 22 they would have changed. No, they did not change. So which means this is going to be the template, and that too last 2 more attempts are left. So these 2 according to me are golden attempts, because by November 23 is the last attempt for old syllabus, and May 24 definitely I say is going for new syllabus, and they don't want to give any phase over or transition, etc. and all. So stock clear and sale. So kindly get cleared, so somehow, and we need to come out of this, and this is possible. Little bit of effort and positivity that you should have in your heart. And yes, see, even though how much ever you have prepared, some of you might be appearing it again, or some of you might be writing it for the first time. So nothing is in your hands except the hard work. So you have to put the hard work. Maybe so this is not sufficient, just increase a little bit. So that is also not sufficient, increase a little bit. That's what it is. So it's a gradual process with which you should never have rest. It's like okay, this much if I study, sir, it's okay. No, not okay. Till the moment you go for the exam, so the feeling should be like, is this really sufficient? So still I have to study more, or I have to revise more. So that should be there, and you should never go into the comfort zone. That's the problem with many students. They go in the comfort zone, they feel like, okay, so this rocket revision I will be attending, and some 50 questions I will be solving. So therefore, okay, I believe in this faculty. So this last minute revision, one day before exam and all, people are preparing, and they feel like, okay, this is sufficient and all. So come on, yaar, see a final exam, yaar. This is not board exam, okay? So November 22 exam paper is just an example for you to know as to how the paper will be. So this is according to me the standard paper, and that's how usually the paper should be. And lengthiness will be there, and the evaluation also, it's not like okay fine, so he's my son-in-law, so she's my daughter-in-law, we can give marks like that. No one will give. So they will be pakka evaluating everything, and beyond that, so some mistakes, silly mistakes that we will be doing, so that mistakes and all we should not do. So with that objective, so segment A, so this category A topics, weightage is minimum to minimum 40 to 50 marks from this, and B category easily from 20 marks to 30 marks. So which means A and B together 60 marks guaranteed. So from the past analysis of the paper, what I am seeing, 60 marks so guaranteed, and if everything goes good, so then it can go to even 70, 75 marks also, and the remaining is from category C. But category C topics, so how the strategy should be for this ABC? For A, it should be completely thoroughly we should be knowing and do as many number of problems as you can. That is for category A. And category B will be like, okay, so to the extent if you have the knowledge of the subject, enough. Category C, at least one day before the exam, you should be revising it and going for the exam. So that's how the strategy will be. A, you should be thorough along with problems and solutions. B, before exam itself, before exam in the sense like by April end itself, you should be completing category B. So you should be having it in your heart. And category C, it's okay, even one day before the exam also you can revise it and go. So that is the liberty that you have when it comes to category C. But category C also you need to prepare. It does not mean without preparing we can go for exam, because there will be connecting points. So because of that reason, because we have MCQs now for 30 marks. So for the 30 marks, definitely this category C will be helpful. That's why. Next. So but I am not discussing in this order, category A, B, C order. I am discussing in a flow, but wherever it is category A topics, so there I will be giving little bit more time, and wherever it is category B and category C, automatically the time will come down. And category C, I will just give you the quick recap of everything, but all these three things I will be covering, and only thing I am asking you to put more effort. So where you should put more effort? If I am putting 100% effort, you should also put 100% effort in category A. And if I am putting 100% effort, you should put at least 50% effort in category B. If I am putting 100% effort in category C, you should be putting at least 25% effort. So about you, I am not going to change. My flow will be the same. So I am asking you to revise a number of times. So that revision should be more in terms of A, little less in B, and thereafter less in C. That's a simple strategy. Then, so I have handpicked 50 questions, mighty 50 questions. So those mighty 50 questions also will be uploaded in the YouTube. So but in these 3 days we are focusing only on this That's It book, and that 50 questions I will be uploading in the YouTube, and the PDF is also will be shared along with the YouTube video in the description. You can see that. But now I did not upload because I want to complete this first. So thereafter when you start solving the questions, it will be good. That's why. Okay. Next, let's start with the first segment number 1, introduction to GST. Basic concepts of GST. There is nothing great in this, just the basic concept. So what is the effective date of implementation of GST? 1/7/2017. So that we know. And how GST is formed? So we have lot of old indirect taxes. All those old indirect taxes got subsumed into GST. In that, the first one is central government levies called as central excise duty, service tax, central sales tax, and customs duty not got subsumed into GST. But in that customs duties, there used to be some additional customs duties called as countervailing duty and special additional duty. So these are the levies of central government that got subsumed into GST. So countervailing duty is to counterbalance excise duty. So on like article, if imported, which is manufactured in India, will attract CVD. So if manufactured in India, there is excise duty. So suppose if it is not manufactured in India, there is no excise duty. But when we are importing that product, to counterbalance that excise duty, we have got something called as CVD. So as excise duty got subsumed into GST, so even CVD also got subsumed into GST. Like how to counterbalance excise duty, we have CVD. The same way to counterbalance sales tax, we have special additional duty. As sales tax got subsumed into GST, so therefore SAD also got subsumed into GST. Then when it comes to customs duty, other than these two, so that is outside the ambit of GST, that is not got subsumed into GST. And indirect taxes levied by state government in the past. So 6 specified indirect taxes: value added tax, advertisement tax, luxury tax, entertainment tax, betting tax, and purchase tax. Purchase tax, that is octroi. These are the 6 indirect taxes levied by state government in the past that got subsumed into GST. But the other indirect taxes levied by state government, like professional tax or local body tax or any other indirect taxes levied by state government, apart from these 6, not got subsumed into GST, still it is outside the ambit of GST only. Whereas indirect taxes levied by local authorities like entertainment tax or any other property tax, etc., that is also not got subsumed into GST. So which means at present there are only 2 major indirect taxes, that is customs duty and GST. And this GST that we have in India is dual GST model. Dual GST model means on the common tax base, both central government and state government will be levying the taxes. So that is known as dual GST model. And India adopted this dual GST model from Brazil and Canada. And what is the need of this GST? So there is a constitutional amendment that is required, and that constitutional amendment is Constitution 101st Amendment Act 2016. The year is not 2017, it is 2016. Constitution amendment happened in 2016, and thereafter in 2017 only GST law came into the picture. And dual GST model means where both central government and state government has power to levy tax on the common tax base. And as this dual GST model means both central government and state government's participation is required, so due to that reason, so we had a GST council, which is a common decision making body between central government and state government. So this GST council is constituted under Article 279A of the Constitution, and this is a constitutional authority. It is not a government body, and it is a decision making body under GST. So this GST council will have total 33 members. And how 33 members? So 1 union finance minister and 1 union MP for 5 union territories without state legislature. 5 union territories without state legislature are Andaman and Nicobar, Lakshadweep, Chandigarh, Daman, Diu, Dadra, Nagar Haveli, and Ladakh. So for these 5 union territories without state legislature, 1 union MP is there. So who is looking after the finance? So that person plus union finance minister, and then 31 states. How 31 states? 28 states plus 3 union territories with state legislature. That is Pondicherry, Jammu and Kashmir, and Delhi. So these 31 states will have 31 state finance ministers. So that is what total 33 members. And in this 33 members, if 50% is present in the meeting, then the meeting is considered to be valid. Quorum is 50%. And generally central government will have a 1/3 weight of vote and state government will have a 2/3 weight of vote. And in order to take a decision, what is the weighted majority that is required? So 3/4 of weighted majority that is required. So weighted majority, so central government vote into multiplied with 1/3 and state government vote multiplied into 2/3. So that is what the weight we will get. So weighted average we need to take. The weighted average should be more than 3/4. So which means 75% majority that is required for any decision to be taken. State finance ministers and MP of state affairs in charge of revenue are its members. So this is about GST council. And basically GST council is what? Decision making body of GST. And what are the various types of GSTs that we have? CGST, SGST, UTGST, IGST, and compensation cess. CGST refers to Central Goods and Services Tax Act, and CGST is levied by central government on intra-state sale. SGST levied by state government on intra-state sale. UTGST, Union Territory GST levied by central government again on intra-state sale, which means what is intra-state sale? If the location of supplier and place of supply is in the same state or same union territory, it is known as intrastate. If it is same state, then the taxes will be CGST plus SGST. If it is same union territory, then it will be CGST plus UTGST. Then in case of interstate sale means if, or interstate supply means if the location of supplier and the place of supply is in 2 different states or 2 different union territories or a state and a union territory, Then in case of interstate supply, the tax will be IGST, integrated GST, levied by central government. And this integrated GST is collected by the central government but fully not retained by central government. 50% will be shared with the consuming state. Suppose if the recipient is registered, so then how the recipient is going to use that IGST, depending upon that the movement of IGST will be. For example, if the recipient is registered person and he is taking ITC of IGST credit, if he is setting off with CGST liability, then that IGST revenue will go to central government. If IGST credit is set off with SGST liability, then that will go to the state government. If IGST credit is set off with IGST liability, still it is in IGST account only. And thereafter we have seen, if the recipient is unregistered, so recipient anyhow will not take ITC, so there is no manner of utilization of credit and all. So therefore flat 50% will go to the consuming state based on place of supply. That is this. And then GST compensation cess. GST compensation cess is levied in order to compensate the loss on account of implementation of GST. So whenever because of implementation of GST to the state governments, if there is loss of revenue, indirect tax revenue, to compensate that, central government will be compensating them. For that purpose, to fund this compensation, so they have levied GST compensation cess on some notified goods, and this compensation cess can be extended for a further period beyond 5 years. Actually, the original implementation was for a period of 5 years, from 1/7/2017 till 1/7/2022, and thereafter they have further extended it, and that's an amendment for your exam. So it is extended up to 31st March 2026. So they have extended up to 31st March 2026, means up to this date GST compensation cess can be levied, and this compensation cess collected will be given to the states for compensating the loss of revenue on account of implementation of GST. It will be collected across the country on intrastate sale or interstate sale on notified goods. Okay, so that is with respect to this, you need to remember. And IGST levied by central government, and 50% out of that is transferred to the state based on place of supply. What if the place of supply is not ascertained? So then it will be paid to the consuming state. So how that consuming state will be determined? So based on the goods or services where it is consumed, so there it will be distributed. Then intrastate supply and interstate supply, so it is given under section 7 and 8. So 7 is interstate supply, 7 is interstate supply, 8 is intrastate supply, of which act? IGST Act. So section 7 of IGST Act deals with interstate, location of supplier, place of supply, 2 different state, 2 different union territories, state and a union territory. Whereas section 8 of IGST Act, intrastate supply, location of supplier and place of supply is in same state or same union territory. Then section 16 of IGST Act, so we have zero rated supplies. So I have given at the end of this book the section reference. So like each and every section, what is the corresponding page number. So therefore, whenever you wanted to revise the section numbers along with what is the provision on that section number, that is a heading of that section number, you can see at the end like a reckoner, it will help you. So therefore, any section, and because it is imperative, you should definitely quote the section numbers in the exam. If any person is telling you that you don't have to quote section numbers and all, so don't believe in them, because they don't know the section numbers, so they will say that way. No need to write the section numbers and all. But no, definitely in order to prove that you know the subject and you have command over the subject, you have to quote the section numbers at CA final level. That is definitely required. So that's the reason why, to the extent possible, try to remember the provision along with the section number. That makes a difference. That definitely makes a difference. Then section 16 of IGST Act deals with zero rated supply. Zero rated supply, there are two things which are treated as zero rated supplies: export of goods or services, supply of goods or services to SEZ. So these two are considered as zero rated supplies. Does it mean the rate is zero? No. So rate is not zero, but the burden will become zero. How the burden is going to become zero? There are two options in case of zero rated supply. Option number 1, my outward supply, I will be paying IGST. So for paying this IGST on my inward supply, whatever input tax credit I have, that I will be using for payment of GST on my outward supply. So once I pay the IGST on my outward supply, partly by using my input tax credit and partly by cash, Now I will get the refund. I will get refund of what? Gross IGST I will get as refund. So not the net IGST. For example, the IGST that I am paying on outward supply, exports or supply to SEZ is 1,20,000 rupees, and I have some credit of 50,000 rupees. So which means how much net I would have paid out of my pocket in cash? 70,000 rupees. So 1,20,000 minus 50,000, 70,000 I would have paid. How much refund I will be getting? I will get entire 1,20,000 as refund. So that is with respect to option 1. So option 2 is that I will not pay any IGST on my outward supplies. So which means whenever I am exporting or supplying it to SEZ, I will not pay IGST, but it will be exported under bond or LUT, letter of undertaking. Now whatever I have paid as ITZ on my inward supply, GST paid on my inward supply, that ITZ, that I will get as a refund. But remember, ITC refund is only with respect to inputs and input services, but not with respect to capital goods. So that is with respect to zero rated supplies. Again, about how to compute the refund, etc., we will be coming across in refund segment. So whether GST paid on inward supply, yes, and it can be availed as ITC, yes. There is one important point here, that is, if a product is exempted, basically when a product is exempted, we cannot take ITC on our inward supply. But if the same exempted product or if an exempted service is exported or if it is supplied to SEZ, it will become zero rated. When it becomes zero rated, can I take ITC on my inward supply? Yes. So a product is exempted or a service is exempted. So generally when a product or service is exempted, then I cannot take ITC on my inward supply. But the moment this exempted product or exempted service is exported or supplied to SEZ, I can take ITC on my inward supply, because the character of this product or the character of this service will be changed from exempted to zero rated. So which means I can definitely enjoy the ITC on my inward supplies. Okay, and therefore under these two options, any one option I can go, or only one option is possible. Of course, only one option is possible. Which option? That is option 2. Because the product is exempted, the service is exempted, then how can I pay IGST? I cannot pay IGST. So therefore, only one option is possible in that case, that is option 2. That is, don't pay IGST or GST on outward supply, but get the refund of ITC with respect to GST paid on inward supply. Okay. Then next one. So state of Jammu and Kashmir is divided into now 2 union territories. What are those 2 union territories? Union territory of Ladakh and Union territory of Jammu and Kashmir. Ladakh is considered as union territory without state legislature, and Jammu and Kashmir is considered as union territory with state legislature. Means the type of GST that is applicable in Ladakh will be UT GST, and the type of GST that is applicable in Jammu and Kashmir is SGST. And Union Territory of Dadra and Nagar Haveli and Union Territory of Daman Diu got merged into a single Union Territory. So that's why we have only 5 Union Territories at present. Then as per section 146 of CGST Act, we have GST network. So GST network is common portal, so wherein all communication between the government and the taxpayers will be through this GST portal, so called as GST network. And this GST network provides information technology infrastructure for the purpose of implementation of GST, and it is commonly referred to as common portal, and they provide services to whom? Taxpayers, central government, state government, banks and other stakeholders. So what are the various functions of GST network? It facilitates registration, payment of taxes, filing of returns, then matching of credits, correct? So like whatever GST portal work that you have done, that you can write. So maybe these are all like jackpot questions in question number 6. So question number 6 is usually a theory question for 14 marks. So there in that ABC, sometimes they will be asking like this. So in what attempt they have asked, so write a brief note on GST council and who are the members of the GST council. For 5 marks they have asked. For 5 marks they have asked. Like that sometimes jackpot also we will be getting. So then it's good. So these concepts, if we know, we can elaborate that and we can write. So therefore, it facilitates registration, payment of tax, furnishing of return, settlement of IGST and e-way bill. So what is the meaning of settlement of IGST? Settlement of IGST will arise in a situation where when I am using SGST credit for payment of IGST liability. So which means the state government has to pay that money to the central government, because SGST credit means it is with state government. IGST liability is payable to central government. So state government has to pay that money to central government. Same way when IGST credit, I am setting off with SGST liability. So IGST credit means it is with central government and SGST payable to state government. So therefore central government has to transfer that money to the state government. So this settlement between the central governments and state governments will be done by GST network. So these are the basic concepts that we have with respect to GST, which you need to remember. Then segment 2, we are moving. In segment 2, there are total 4 subtopics. Number 1, supply. Number 2, composite supply, mixed supply. Number 3, liability to pay GST. And number 4, TDS and TCS. So right now I am discussing the first subtopic, that is supply under GST. So supply is the taxable event under GST, which is given under section 7. So supply is defined under section 7 of CGST Act. Supply is broadly divided into 3, that is supply includes, supply excludes, and classification of supply into goods or services. Thereafter 7 subsection 3, one subsection is there which is not effective at present, because 7 subsection 3 says central government is empowered to reclassify supply of goods or supply of services and vice versa, but at present we don't have any notification under 7 subsection 3. But so whatever we need to remember is 7 subsection 1 inclusions, 7 subsection 2 exclusions, and thereafter classification of supply into goods or services as per 7 subsection 1 capital A. Now this 7 subsection 1 supply includes 7(1)(a) any activity for consideration in the course or furtherance of business, and 7(1)(aa), like that one new clause is there, that is any activity between a person other than individual and its members. So that should be for a consideration. So between a person other than individual means HUF, AOP, BOI, partnership firm, LLP, etc. and between their members. So members, for example, HUF and its members, or company and its shareholders, partnership firm and its partners. Between them, if there is any activity for a consideration, so that will be coming under supply under 7(1)(aa). For example, if there is a partnership firm, that partnership firm is receiving services from its partner, not in the capacity as a partner, but separately the professional services or technical service are provided by the partner to the partnership firm. Now partnership firm has paid some money which is not as per partnership deed. As per partnership deed, they are entitled to take the salary. So that salary is withdrawal of profit. So that withdrawal of profit is not a supply. But separately, if there is any contract between the partner and the partnership firm, where partner will be providing the services to the partnership firm and collecting some money from the partnership firm, even though partner and partnership firm are one and the same, but this activity between them will be treated as supply under 7(1)(aa). So that is any activity between a person other than individual and its members for a consideration. The words used here are between. So which means partner to partnership firm or partnership firm to partner. Both ways are covered here. Not only in case of firm, but also in case of a company. Company providing services to its shareholders or shareholders providing services to the company. So everything is covered here, even a club association. So a club or association which is providing facilities to its members is also now covered under 7(1)(aa). Then 7(1)(b). The difference between 7(1)(a) and 7(1)(b) is that in 7(1)(a) it is any activity, but in 7(1)(b) it is import of services. 7(1)(a) also for consideration, 7(1)(b) also for consideration. 7(1)(a) in the course or furtherance of business, but 7(1)(b) whether or not in the course or furtherance of business. So import of services should always be seen from the recipient point of view, whereas 7(1)(a) should be seen from the supplier point of view. And 7(1)(c) total 4 activities. What are those 4 activities? D, R, I, P. D for disposal of business asset on which ITC is availed. R for related party transactions, including transaction between distinct persons. Then import of services from a related person or other establishment located outside India, and P for principal agent transactions. Now we need to remember here few points. The difference between import of service in 7(1)(c) versus import of service in 7(1)(b) is that in 7(1)(b) it should be for consideration. In 7(1)(c) it is without consideration. 7(1)(b) import of service from any person, but here import of service from a related person or another establishment located outside India. 7(1)(b) import of service whether or not in the course or furtherance of business, but when 7(1)(c) import of service should be in the course or furtherance of business. Then we have here principal agent transactions. So when principal agent transactions will become supply under 7(1)(c), only when the agent is acting on behalf of principal. generally when agent will be acting on behalf of principal, when agent is raising invoice in the name of the agent, so but not in the name of the principal when he is making the supply, or in case of purchase transaction, the invoice is in the name of the agent. For sale transaction, invoice should be raised by agent in his name, and for purchase transaction, the invoice should be, purchase invoice should be in the agent's name. Then agent is acting on behalf of principal. Only when agent is acting on behalf of principal, any transaction between the principal and agent will become supply under 7(1)(c). Then R for related party transaction, including transaction between distinct persons. So disposal of business asset, D is disposal of business asset on which ITC availed. What if ITC is not availed? So then this will not become supply. So these activities DRIP is given in schedule 1. So there are total 3 schedules in CGST Act. So schedule 1 talks about 7(1)(c). So that is, what are the activities which are treated as supply under 7(1)(c). Whereas schedule 2 is 7 subsection 1 capital A, that is classification of supply into goods or services. And schedule 3 is about 7 subsection 2, that is exclusions from supply. So whenever we are referring to 7(1)(c), we need to also write read with schedule 1. 7 subsection 1A classification, when we are writing, we need to refer read with schedule 2, and whenever we are referring to 7 subsection 2, we need to write read with schedule 3. So these 3 schedules you need to remember. Now when an activity becomes supply, first we need to check, is it in 7 subsection 2, exclusions from supply. If it is in exclusion from supply, then it is not a supply, leave it. Then suppose if it is not in 7 subsection 2, then we need to check whether it is in 7 subsection 1. If it is not in 7 subsection 1 also, then also it is not a supply. So when an activity is not a supply, if it is in 7 subsection 2, it is excluded from supply, so not a supply. If it is in 7 subsection 1 also it is not there, then also it is not a supply. Not in 7(2) but in 7(1). Not in 7(2) but in 7(1), then it will become supply. Okay. So now whenever in exam they are giving some questions in MCQs like transaction in securities. Transaction in securities, option A, not a supply. Option B, neither supply of goods nor supply of services. The correct answer, both are actually same, but the correct answer is A, that is not a supply, because the wording neither supply of goods nor supply of services should be used only in case of exclusion from supply. That is 7 subsection 2 read with schedule 3, wherever it comes, there only you need to use the word neither supply of goods nor supply of services, because that is the wording, legal wording which is given in the act. But in all other places, when a transaction is not covered under anywhere in 7 subsection 1, then we have to just write it as not a supply, or it is not coming under the meaning of goods or not coming under the meaning of services, then also we need to write not a supply. Only when it is specifically excluded from supply, we need to write it as neither supply of goods nor supply of services. Then these are the sub definitions that we need to know. That is, section 2 clause 52 deals with goods, 2 clause 102 deals with services, 2 clause 17 business definition, 2 clause 31 consideration, and 2 clause 84 person definition. In that, so goods definition we will see goods and other services, etc. But before that, exclusion from supply. So we have completed 7 subsection 1, what are all included in the meaning of supply. So 7(1)(a), AA, B, C. Then 7 subsection 2 exclusions from supply, you need to remember a keyword, that is spalled slow. Yes, for sovereign functions of government. Means what? All activities of government is excluded from supply except 4. Means 4 activities are only covered under supply. What are those 4 activities? Department of Post, airport or port services, transportation of goods or passengers, services to business entities. These 4 activities are only covered under supply and all other activities are excluded from supply. Then P for post. Post refers to government post, constitutional post, nominated post. Government post refers to MP, MLA, etc. Constitutional post refers to governor, president, collector, etc. Nominated post refers to SEBI director or SEBI chairman or IRDA director, CBI director, RBI governor. These are all called as nominated post. There are some bodies or boards under government and the head of that body is nominated by the government. So that is post, nominated post. Then A for actionable claims other than lottery betting gambling, which means only lottery betting gambling is covered under supply, all other actionable claims are excluded from supply. L refers to legal fees. Legal fees collected by court or tribunal. So court or tribunal collecting some fee for the purpose of giving the judgment. So no, it is not a consideration. So that court fees is only for documentation purpose. So that court fees or tribunal fees cannot be treated as consideration. That's the reason why it is excluded from supply. Then land sale. Sale of land always excluded from supply, but sale of building is also excluded from supply if the entire consideration with respect to that building is received after obtaining completion certificate or first occupation, whichever is earlier. Completion certificate refers to a document which is given by the local authority, and first occupation is usually in that particular project if any one flat is occupied first, so and registered in the person's name first and occupied by that person, so then the first occupation has taken place. Thereafter all sale of flats will be excluded from supply. If part consideration is received before and part consideration is received after, so whether it will be excluded from supply? No, it is covered under supply and GST payable on entire consideration. Then E for employee to employer in the course of employment. So employee providing services to employer in the course of employment is excluded from supply. Then death related, but remember employee to employer only in the course of employment. If it is not in the course of employment, that is not excluded from supply. When it is not excluded from supply directly, we should not write it as treated as supply. We should refer in 7 subsection 1. If it is coming in 7 subsection 1, then only it will become supply. Then D for death related. Death related, funeral, burial, crematorium, mortuary, including transportation of deceased. So all death related activities are excluded from supply. Then sale in high seas, sale before import. Sale before import means whenever the goods are in transit, so not yet imported. I have a document of title called as bill of lading or airway bill. I transfer that bill of lading or airway bill to you. Now I get some consideration. On that consideration, I am not required to pay any GST. It is excluded from supply because you are the subsequent buyer. You will make the clearances of those imported goods. As you are making the clearance of the imported goods, you will pay the customs duty along with the IGST. So therefore, I am excluded from supply. Now, you will pay customs duty on what value? So you will pay customs duty on the last purchase price. Last purchase price means, say for example, I imported for $10,000 and I sold to you for $11,000. You need to pay customs duty on $11,000. Means for the purpose of customs, the assessable value should be taken as $11,000. And on that only you need to compute the basic customs duty, social welfare surcharge, IGST, etc. Now, there is one more point also called as sale of warehoused goods under customs. So, in case of sale of warehoused goods under customs, what is the difference? Now, in case of sale on high seas basis, the goods were in transit. But in case of sale of warehoused goods, the goods have come to India and I filed a bill of entry for warehousing. I deposited the goods in the warehouse. Now I have got the document of title known as warehouse receipt. That warehouse receipt I am transferring it to you. So when I am transferring the warehouse receipt to you, I got some money. Now I am excluded from supply with respect to money collected from you. Why? Because now also the same way, the subsequent buyer go to the warehouse and clear the goods upon payment of customs duty. So when you pay the customs duty, so you will pay customs duty on what value? So you will pay customs duty, basic customs duty on the original import price, not the price at which you have purchased. In my example, if I am importing for $10,000, but I am selling to you for $11,000, you will pay basic customs duty on $10,000 only. So because this is not sale on high seas basis, this is sale of warehoused goods. So you will pay basic customs duty on $10,000 and you will pay social welfare surcharge on basic customs duty normally. But IGST computation will differ. So you will compute IGST on what? IGST will be computed on A or B, whichever is higher. What is A? Assessable value plus all customs duties up to IGST, or B, that is $11,000, the price at which you purchased from me. Whichever is higher, on that you need to compute IGST. So that is the difference between in case of high seas basis and sale of warehoused goods under customs. Then Liquor license, L for liquor license by state government. So whenever state government is selling the liquor license to sell the liquor, so on that license fee, GST is not payable, it is excluded from supply, because alcoholic liquor for home consumption is not under the ambit of GST. So due to that reason, even liquor license granted by state government, that particular license fee is also excluded from supply. However, if I got the liquor license and from state government, I paid 40 lakhs, that 40 lakhs is excluded from supply. Now I transfer this liquor license to some other person. So that is also excluded from supply? No, that is covered under supply. Only liquor license granted by state government is excluded from supply. But when I transfer the liquor license to another person, that is not excluded from supply. That is this. And then O for outside the country movement of goods. That is seller and buyer both are in India, but the goods are originating outside India and terminating outside India. So even though its financial impact is in India, but the goods are not coming into India or leaving India. Due to that reason, it is excluded from supply. So these are the activities spelled slow that is excluded from supply. Apart from that, one more point is there, that is gifts by employer to employee. This employer-employee concept can be tested in the forthcoming exam, because there is one circular related to employer-employee perquisite, etc. So let's have a wholesome discussion related to this. Employer is giving something to the employee, either goods or services. So this will be divided into two, for a consideration or without consideration. If it is for a consideration, definitely it will be covered under supply 7(1)(a). Why? Let's analyze this. So employer, when he is giving some goods or services to the employee, so it will be definitely in the course or furtherance of business. So because there is no personal relationship between employer-employee, it is business relationship only in the course or furtherance of business, and that too for a consideration. That consideration may be a nominal amount also, but it will be consideration. So therefore it will become supply under 7(1)(a). And valuation. How to do the valuation in that case? As employer and employee are treated as related parties, we should never take transaction value. We should determine the value as per rule 28. Even though there is value, consideration, etc. and all, but whenever two parties are related, so we need to determine the value as per rule 28 of CGST rules. So therefore we have to determine the rules value as per CGST rules. So don't take the transaction value. This is over in case when there is consideration. When there is no consideration, then either it will be called as a perquisite or it will be called as a gift. If it is a perquisite, so what is the criteria? What is the basis of difference to be called it as perquisite or gift? For that, we have one CBIC circular which says that perquisites provided by employer to employee in terms of contractual agreement entered between them, which means, so if something, goods or services which are given by employer to employee is mentioned in the contractual agreement, so then it will not be subject to GST. So when it is provided in terms of the contract. So therefore, the criteria here is simple, CTC. So is it part of CTC or not part of CTC? So how do you know it is part of CTC? If it is mentioned in the contractual agreement, it is part of CTC. If it is not mentioned in the contractual agreement, it is not part of CTC. If it is part of CTC, it is called as perquisite. So if it is perquisite, it is excluded from supply, because perquisite will form part of salary. Salary means employee to employer in the course of employment, therefore it is excluded from supply. Whereas if it is not part of CTC, not covered under salary offer document or not covered under that contractual agreement between them, then it will be called as gift. So gift can be goods or services, anything, okay? Gift is a generic thing. It can be goods or it can be services. So if the gift, value of the gift does not exceed 50,000 per annum per employee, then it is not a supply. So if the value of gift does not exceed 50,000 per annum per employee, then it is not a supply. If it exceeds 50,000, entirely it will be treated as supply. Here we need to see per annum per employee, and we need to see value of the gift. Value of the gift means while computing the value, we should exclude GST. So not including GST. For example, I purchased a mobile phone for 45,000 excluding GST, and I gave it as a gift to my employee. If you add GST, it is more than 50,000. Excluding GST, it is less than 50,000. So is it supply or not a supply? Not a supply. Don't include GST. Generally, whenever we use the word value, value will not include GST because of section 15 subsection 2 clause A, which says that all taxes, duties and cess by whatever name called other than GST should be included in the value. So GST will never be included in the value due to that reason. So we need to take out the GST component. So therefore here it is value of gift does not exceed 50,000, then it is not a supply. If it exceeds 50,000 entirely it will be treated as supply. Then one more circular is also there as per the latest amendment related to this sale of land. Generally some builders or real estate people, what they do is that they will procure the land, and after procuring the land, so which is in a like undeveloped form, so they will do the leveling, they will put the pipelines, drainage system, then they will divide it into proper blocks, electrical lines, etc. Then they will be selling it like plots, developed land. So sale of developed land. So this development land and sale, will it be treated as supply or it is also excluded from supply on par with sale of land? It is also treated as sale of land only. So sale of land before development or after development, it is still sale of land only, that is excluded from supply. But for the purpose of this development, so that builder will be receiving services from various people, so that activities will become supply. That is this. Sale of land after some development such as leveling, laying down drainage lines, electric lines, etc. is also sale of land and excluded from supply. However, services provided for development of land is not excluded from supply and that shall attract GST. So that is with respect to these exclusions, and this is the summary of 7 subsection 1 inclusion. 7.1a, so any activity, consideration yes, course or furtherance of business yes, point of view supplier and coverage, goods or services. Then 7.1aa, any activity between person other than individual and its members, consideration yes, course or furtherance of business yes, point of view supplier, coverage is either goods or services. Whereas 7.1b, import of services, from whose point of view? Recipient point of view. Coverage is only services because import of goods is subject matter of customs, and whether or not in the course or furtherance of business. 7.1c read with schedule 1, DRIP, in all these cases consideration is not required. And in case of disposal of business asset, if it is disposal of business asset, that is sufficient. That disposal may be in the course or furtherance of business or may not be in the course or furtherance of business, that is irrelevant. And here only goods is covered. And in case of R and IP, all these cases, it should be in the course or furtherance of business. And wherever import of services come, that will be from the recipient point of view. And import of service is only service, but related party transactions is both goods and services, and principal agent transaction is only in the context of goods. Then meaning of goods and meaning of services. Goods is defined under section 2 clause 52. Simple definition. Goods means goods includes and goods excludes. Goods means what? Any kind of movable property. Goods includes what? Two things will be included in goods: actionable claims, growing crops or things attached to or forming part of land agreed to be severed under the contract of supply, that is known as inclusion in the meaning of goods. Okay, and thereafter what are excluded from goods? Only two activities, that is money and securities. These two are excluded. So this money and securities is also excluded from the meaning of services. So therefore money and securities is excluded from both goods and services. What is the meaning of services? Anything other than goods. If a transaction is not covered under goods definition, then it will come under service definition. But money and securities, even though it is not goods, it is also not goods under services because it is specifically excluded. Then sale of land. Will sale of land come under supply of service? Yes. Sale of land is supply of service. Sale of building is supply of service? Yes. Sale of business is supply of service? Yes. Anything which is not goods will come under service. However, it is excluded from supply. Sale of land, sale of building is excluded from supply. Then in these services we have two inclusions, that is, as money and securities are excluded from the meaning of goods and services, but transaction in money for a separate consideration, that separate consideration will be treated as service. For example, exchange transaction for a separate consideration. So then that separate consideration will be treated as supply of service. For example, I have $100 and $1 is 80 rupees. I am giving you $100, you are giving me 80 rupees into $100, there is no consideration. So therefore it is neither goods nor services, it is a pure transaction in money. Suppose for this doing this conversion, you are collecting from me 2% as a markup fee. The 2% markup fee will be treated as the consideration. So that consideration is treated as supply of service. So that is this transaction in money for a separate consideration. Then facilitating or arranging transaction in securities. So as such, transaction in securities is neither goods nor services. Okay, that is, it's not in the goods definition as well as not in the services definition. But facilitating or arranging transaction in securities like stockbroker services, depository services, etc., that will be treated as supply of service. So that is this meaning of goods and services. Then what is the meaning of actionable claims? Because goods includes actionable claims, and thereafter again supply excludes actionable claims other than lottery, betting, gambling. So actionable claims means any instrument that satisfies the 4 conditions. What are those 4 conditions? Right to receive benefit or recover a debt. And can it be transferred from one person to another person? Yes, it can be transferred to any other person. Is it legally enforceable? Yes. And the holder of such right is entitled to receive the benefit or recover the debt. For example, if a person is having bill of exchange, whomsoever is having bill of exchange, they have right to receive a debt or recover a debt, and transferable from one person to another person, legally enforceable, and whomsoever is holding that bill of exchange will be recovering the debt. Lottery ticket, promissory note, bearer check, etc., all these are examples of actionable claim. Right to receive benefit or recover debt, easily transferable from one person to another person, legally enforceable, the holder of that right is entitled to receive the benefit. So actionable claims are broadly divided into 2. Those which are covered under money definition, like bill of exchange, promissory note, bearer check, are covered under money definition. So as money is excluded from goods and services, so therefore this actionable claim which is covered under money definition is neither goods nor services. Whereas other actionable claims are treated as goods. But in that also only lottery, betting, gambling is covered under supply, and all others are excluded from supply. Then we have section 2 clause 31, meaning of consideration. Consideration includes, consideration excludes. Consideration includes monetary or non-monetary consideration. Monetary consideration means amount received or receivable, and non-monetary consideration can be in the form of goods or in the form of services. So therefore this monetary or non-monetary should be in respect of, in response to, or for the inducement of supply of goods or services. So that is, whenever we mention this product is 10 rupees, so which means that is in respect of. So means if you want this product, you have to pay 10 rupees. So the 10 rupees is in respect of that product, supply of goods or services. So the 10 rupees is the consideration. In response to means, say for example, one movie became a hit and one producer has given gift to the director of that movie or actor of that movie, etc. So that gift, whatever the producer is giving it to the actor or director, etc., that is in response to, making a movie. So therefore that is also treated as consideration in response to. For the inducement of, so inducing a person, so to join one party or to join one club, etc. So that is like, or to sign a movie. So this is also an example of inducement of, that is also a consideration. So therefore in respect of, in response to, for the inducement of supply of goods or services. Then consideration excludes subsidy from CG or SG. Subsidy means like a grant. So which means it is not certain that we should always get the subsidy. It all depends upon the other person. If the person wanted to give, they can give. If they don't want to give, they may not give. And therefore, for example, LPG subsidy, like that one subsidy was there and today it is not there. Can we question why you are not giving LPG subsidy? No, because subsidy means it is gracious payment. So it's like Tommy catch. If you could catch, you catch. And tomorrow there won't be anyone to throw that also. So it's okay, fine, we have to die out of starvation. But contract, if it is there, then it will not be called as subsidy. Subsidy means, so which is without any contract. So keep that in mind, okay. So subsidy means it should not be out of any contract. It's a gracious payment. So that subsidy from CG or SG is not treated as consideration. Then refundable security deposit. Security deposits which are refundable in nature is also not treated as consideration, but if it is a non-refundable security deposit, then it will be treated as consideration. Consideration should be received from recipient or can be received from any person. any person. What we need to see is presence of consideration. And activity without consideration is not a supply, and consideration without activity is not a supply. For example, I am taking the classes and I am not charging any amount. So then activity without any consideration. So it is not a supply under 7(1)(a). And consideration without an activity, donations. So in case of donations, there is consideration without any obligation to do anything. So that is also not treated as supply under 7(1)(a). First of all, this donation is not treated as consideration, because against, when it is treated as consideration, against some money, I have an obligation to supply goods or services, then only that money received will be treated as consideration. So donations are not treated as consideration, okay. But donations are divided into two: conditional donation, unconditional donation. Conditional donation means against that money received, I have an obligation to do something. So then it is conditional donation. Conditional donation is treated as consideration and it will become supply under 7(1)(a). What if it is an unconditional donation? Means against that donation, I don't have any obligation to do anything, means it is not treated as consideration. Therefore, it is not a supply under 7(1)(a). Consequently, it is not a supply. Now, for example, display of donor name on the premises as insisted by the donor. You are giving me donation, asking me to display the name of the donor. So on the top of the building. So then it is a conditional donation. So the money I receive from you will be treated as consideration for the activity of displaying the name. So it is supply under 7(1)(a). You gave me money and you did not insist anything, and I also did not put your name. No one knows that you have given me the donation. So then it is like unconditional donation. But here there is a third part that could come into the picture. That is, so the recipient, that is the donor, is giving money, and that donor did not insist the name to be displayed. But the person who is receiving the donation as a gratitude displays the name. So it is like unconditional donation only. But if the display of name gives any business advantage to the donor, then it will be deemed as conditional donation. So means it will become supply under 7(1)(a). For example, donated by Mr. Aman Goyal, okay, individual name, donated by Mr. Aman Goyal, there is nothing else. So therefore, it will be unconditional donation only. And Aman Goyal is not insisting me to display the name, you understood. Whereas donated by Aman Goyal, proprietor, Goyal Industries Private Limited or Goyal Industries Limited, something like that. So then in that case, will it be treated as conditional donation? Yes, because display of name gives a business advantage to the donor. Therefore, it will be treated as conditional donation and it will become supply under 7(1)(a), and it should be treated as sponsorship services, and sponsorship services will be taxable under RCM if the recipient is body, corporate or firm. That is this. So if donor name displayed anywhere in the premises against donation, display of name does not give business advantage to the donor, it is not a supply, and display of name gives business advantage to the donor, it is supply under 7(1)(a). And then we have person definition. Person definition is given under section 2 clause 84. So person under Income Tax Act plus central government or state government is person under GST. So who is person under Income Tax Act? All, individual, HUF, AOP, POI, etc. So therefore, what is that extra that we need to remember is person under GST includes even central government or state government. However, not all activities of central government or state government is covered under supply. Only 4 activities are covered under supply, that is Department of Post, transportation of goods or passengers, airport or port, and services to business entities. Then meaning of business. So business has general meaning and specific activities. General meaning of business is trade, commerce, manufacture. Then profession, occasion, adventure, wager or any other similar activity. So total 7 activities you need to remember: trade, commerce, manufacture, profession, occasion, adventure, wager. And these activities, it's incidental or ancillary, means its supporting activities is also covered, and irrespective of volume or frequency. So even if it is a one-time activity or it is a recurring activity, whatever it may be, it is covered under business, whether or not for a pecuniary benefit. Pecuniary benefit means, so profit motive, whether there is a profit motive present or not, it will always be treated as business. Then there are some specific activities which are treated as business even though whether it is covered under the general meaning of business or not. So what are those specific activities? Entry tickets. So any entry ticket will be treated as business. Even entry to temple is also treated as business. Then holding an office accepted in the course or furtherance of trade, vocation, profession. That is, there is a person who is appointed as chairman of SIRC. So Southern India Regional Council of ICI, or president of ICI. So a person holding an office accepted by him in the course or furtherance of his profession. Like that, one trader appointed as head of trade union in the course or furtherance of trade. Like that, one actor who is appointed as head of a movie actor association. So in the course or furtherance of vocation, that will be coming. And an actor, being an actor is a vocation. Same way, being a farmer is also a vocation. Farming is a skill. So that skill they get out of practice. So that is called as vocation. If they get the skill out of qualification, that is known as profession. And if they use that skill as a passion, not for making a living, but as a passion, then it will be called as adventure. Okay. A doctor becoming a magician is adventure. A chartered accountant acting is an adventure. You understood? So being a doctor, being a chartered accountant is their profession. But when they do something as a passion, yes, of course it is adventure. Okay, that is the logic there. Then an actor starts making some paintings. So being an actor is a vocation, and when they draw paintings, that will come under adventure. Okay, so knowingly, unknowingly, they kept the correct word only. Adventure is correct word. Okay, so adventure. And then, so this activities, that's what here connected. Vocation, in the course or furtherance of trade, vocation, profession. Then supply of goods or service in connection with commencement or closure of business. That is at the time of commencement of business or at the time of closure of business. If there is any supply of goods or supply of services, so that will be, even though that supply of goods or service is not my business. For example, at the time of closure of my business, so when I am selling the assets of my business, even though selling of assets is not my business, but it will be treated as my business activity, and on those sale of assets I have to pay GST. Then provision of facilities, benefits by a club, association or society to its members. So this is business and it is covered now under 7(1) AA. And then any activity of a race club including betting transactions. So all activity of race club like admission to the race club or like sale of merchandise, sale of food and beverages, even betting activities carried out by them, everything will be treated as business, and all activities of government is also treated as business. So this is about the specific meaning of business. So why it is relevant is that whenever you are writing the said activity is supply or not a supply, remember a 4-point approach. So for the purpose of arriving at the answer, so first you need to check whether it is supply or not a supply. So this is a checklist. Okay, you read a transaction. In the question you read a transaction. When you read a transaction, so this checklist you need to apply. First, is it supply or not a supply? Second, is it taxable or exempted? So if it is exempted, so that list we have, what are all exempted? So the balancing figure is taxable. So if it is not a supply, you will clearly mention it as not a supply. If it is supply, then you need to proceed to the next aspect. That is it taxable or exempted? If it is exempted, you will write it as exempted supply. If it is not exempted, then you need to proceed to the next aspect, that is FCM or RCM. So RCM means recipient will pay, so don't add it to the supplier liability. Yes, because of that don't write not a supply, because of that don't write exempted supply, even though your answer is correct, but because of your explanation you should not lose the marks. So therefore it is supply. It is taxable supply, but don't add it to the supplier liability, add it to the recipient liability. They will be asking about supplier liability, you should write it as taxable. However, the GST is payable by the recipient under RCM and not included in the value of taxable supply of the said person. Like that we need to write the note. And in the outer column you will not write any amount. Okay, so therefore FCM or RCM. If it is not RCM, if it is RCM, you will not add it to the liability. So therefore you will leave it because it is payable by the other person. Whereas if it is FCM liability, so means that person has to pay GST under FCM. FCM is a balancing figure. RCM is defined, but what is not RCM, the balancing figure is FCM. But even then when it is FCM, fourth point, which is crucial point, which we will miss in exam, that is whether that person is registered or not. So even if there is liability on him, but first he should be registered to pay the tax. If he is not registered or not compulsorily required to get registered, he is not required to pay GST. Because he is not registered or not compulsorily required to get registered, don't change the service as exempted. So service is still taxable. GST payable by the supplier under FCM, but GST not payable in the present case as the said person is unregistered. Like that we need to write. Okay. So that is with respect to this 4 points. What are the 4 points you need to keep in mind? Supply or not, taxable or exempted, FCM or RCM, registered or not. Registered or not. For every transaction you analyze these 4 ways, you will definitely get the answer. Even for inward supplies also. Inward supplies also, if it is covered under RCM, you know that it should be added to your liability under RCM. So you are purchasing something and you analyze this, it is supply, it is taxable and it is RCM, which means you need to pay GST under RCM, so it should be added to your liability. Is it clear or not? So for that 14 marks question, this is the place where many students are missing out. So these 4 checklists you apply and write properly. Actually the note also you will be developing this way only. That is, first you will write the said activity is not a supply as the same is excluded from supply under 7 subsection 2 over. Suppose if it is covered under supply, the said activity is not excluded from supply under 7 subsection 2, but it is covered under supply under 7 subsection 1. Therefore it is supply. And as the same is covered under notification number 12/2017, therefore it is exempted supply. You got it? Suppose if it is taxable, what you will write? The said activity is supply under 7 subsection 1, and as it is not covered under notification 12/2017, it is taxable supply. You got it? So this checklist, if you can understand properly, so writing a justification in the answer will not be difficult for you. So easily you can write the justifications, okay? But writing justification is very, very important. Just because you are presenting the answer and the answer, final answer is correct, so don't tap your shoulder, okay, superb, I wrote perfectly. No, so you will not get full marks. So the justification should be there, the note should be there, then only you will get full marks. So for a student who got 60 marks, for a student who got 80 marks, actually there is no difference. All the answers are correct. All the answers are correct, but only the presentation is the difference. So therefore I am asking you to decide where you want it to be. So I have seen n number of answer sheet. A student who got 60 marks, a student who got 80 plus marks, both answers are same, ditto, ditto. But only thing, a student who got 80 plus marks has made presentation superbly, notes and all perfectly. So that's where the extra difference will be there. In one question, 3 marks if it increases also. So somewhere like 14 marks difference you will be able to see here. Okay. So due to that reason, then next. We are moving on to the next definition, meaning of related. And students, those who are watching online, if you have any queries, you just post it. So in the break time, I will go through all those questions and I will immediately incorporate, because I don't want it to see there and answer. It will take time. For that reason only, kindly bear with me. For you also, in the break time, whatever queries that you have, you can ask me, okay? And so that the flow will not get affected. So meaning of related. Related is defined under explanation to section 15. It is not given in section 2. But given under explanation to section 15. Why we need to know about related definition? Because of 2 reasons. Number 1, any transaction between related persons, even though without consideration, constitutes supply under 7(1)(c), and even import of services from a related person is also constitutes supply under 7(1)(c). So who are treated as related? Total 9 relationships we have. We will divide it into 3 and we will remember. So first 3 is such persons are officers or directors of one another's business. That is, in your business, you are appointing me as officer, means in top management, you are appointing me as officer or director, and mutually in my business, I am appointing you as the officer or director. So which means that we both are treated as related because we both have the mutual interest in our businesses. So such persons are officers or directors of one another's business or each another's business, okay. Number 2, they are legally recognized partners of a firm. That is, so legally recognized means that partnership deed should be registered. So as per that registered partnership deed, who are all the partners? Those partners will be treated as related, but remember, the firm and partners are not treated as related. Only the partners are treated as related, not the firm and the partners. Okay. And then third point, their employer and employee. Already we have seen that employer and employee are treated as related parties. And then next 3. So next 3 is related to investment. Okay. So first, there are two companies having a common shareholder. That common shareholder is holding 25% or more in these two companies. So two companies with common shareholder holding 25% or more. So therefore these two companies, any transaction happen between them, it's a related party transaction because it has a common shareholder with how much? 25% or more. That is that fourth point. Then fifth point is that one person directly or indirectly controls the another. What is the meaning of control? Control means by way of investment, that is more than 50%, or composition of board of directors. For example, you know, company A is having 5 directors and company B is having 5 directors, and 3 out of these 5 directors are common between company A and company B. So then also they both will be treated as related. Control exists. And number 3 is control by way of operations. So that is, so A Limited and B Limited are two companies, and these two companies are having like common control of operations. A Limited is controlling the operations of B Limited. Investment not there. For example, there is one ABC Hotel. ABC Hotel, Oyo is taking the operations of ABC Hotel. Means they have not invested anything, but the entire operations of ABC Hotel is taken away by Oyo. So Oyo will run the hotel, and to the owner of this ABC Hotel, they will be paying some money. So this will be also treated as related. So because controlling by way of operation. So what is the meaning of control? So investment more than 50 or majority common board of directors or control by way of operations. That is fifth point. Then sixth point. So two entities having the common parent, two children with a common parent. Okay. So then they both will be treated as related or not. Father is same here, mother different. So then definitely they will be treated as related. Like the two companies are under the common control of a third person, common parent company. Okay. So they both are treated as related. Point number 6. Then point number 7. So first 3 such persons are officers or directors of one another's business. Number 2, they are legally recognized partners of a firm. Number 3, employer and employee. Then 4, 2 companies with a common shareholder holding 25% or more, and one company directly or indirectly investing, controlling the other. And then number 6 is 2 companies under the common control of a third person. And then 7, together they directly or indirectly control a third person. That is, there are 2 shareholders of a company, and together these 2 shareholders, investment in the company is more than 50%. Individually each shareholder, out of these 2 shareholders, individually each shareholder is not controlling the company. But 2 together, if you see, their investment is more than 50%. Means these 2 people are having the common objective of control in the company. Therefore, between those 2 shareholders, if there is any transaction, that's a related party transaction. And then 8, they are members of the same family. So who are treated as family? Spouse and children, whether are not dependent, but grandchildren is not given. Spouse and children is only given. Grandchildren they did not give. So grandchildren is not treated as family. Okay. So then what, sir? Something else. Okay. They are not family for the purpose of GST definition. So children, then spouse, whether are not dependent. Then brothers, sisters, parents, grandparents, if they are wholly and mainly dependent on that person. Only these 4. Brothers, sisters, parents, grandparents. Sir, what about in-laws? All in-laws are not treated as family. Whether step relationship is also considered here? Yes. So step brother, step sister, step mother, step father, all steps are considered here. So for the purpose of family, but only thing, in-laws are not considered as family, and grandchildren is also not considered as family. Then number 9, sole selling agent or sole distributor or sole concessionaire by whatever name called. So is also treated as related. That is, I have one agent, I have only one agent, and all the transactions I make through that agent is called as my sole selling agent. So therefore, if any transaction takes place between me and that agent, that's a related party transaction. These are the 9 relationships. Then meaning of various supplies. We have taxable supply, exempted supply, non-taxable supply and zero rated supply. Zero rated supply already we discussed, export of goods or services or supply of goods or services to SEZ. Then what is non-taxable supply, which are not leviable to tax? What are not leviable to tax? So alcoholic liquor for human consumption and petroleum products. What are the petroleum products? Crude oil, petrol, diesel, aviation turbine fuel and natural gas. Is kerosene oil a petroleum product? No. Is LPG a petroleum product? No. Engine oil, lubricating oil? No. So these are not petroleum products. Only these 5 will come under petroleum products: crude oil, petrol, diesel, aviation turbine fuel and natural gas. And alcoholic liquor for human consumption, they are non-taxable supplies. It is not leviable to GST. Then exempted supplies. Exempted supplies means 3 for the purpose of payment of GST: notified as exempted, nil rated and non-taxable. So non-taxable is included in exempted supply. Notified as exempted means by way of notification. So if they are exempting a particular transaction, that is notified as exempted. Nil rate means the rate of GST is nil. And then these 3 are exempted supplies. So that's the reason why taxable supply do not include exempted supply, as exempted supply includes non-taxable supply. Then what is taxable supply? Balancing figure. That is the goods or services which are chargeable to GST, that is on which GST payable, is known as taxable supply. So that is the breakup you can see in the next page. Supply of goods or services which are chargeable to GST, that is GST payable, is known as taxable supply, which is a balancing figure. So not chargeable to GST. Why not chargeable to GST? May be leviable to GST but notified for non-payment, or nil rated, or not at all leviable to GST. All these 3 are treated as exempted. Then next we have export of goods versus export of services. So what is the meaning of export of goods? Goods taken from India to a place outside India is known as export of goods. Very simple definition. Is forex condition? No, forex is not a condition to call it as export of goods. However, if at all we claim the refund on export, because in case of export it is a zero rated. In case of zero rated, 2 options are available. Option 1, you pay IGST and get refund of IGST, or option 2, don't pay IGST and get refund of ITC. So you are claiming refund, correct or not? If you are claiming refund, ensure that you are bringing the forex proceeds within the time limit prescribed under FEMA. If you are not bringing the proceeds within the time limit prescribed under FEMA, then whatever refund that has been granted to you will be recovered along with interest. Is it clear or not? So therefore, for becoming export of goods, there is no condition that forex should be there. But if you claim the refund, you should ensure that the forex proceeds are realized. So consideration in forex is not a condition. For what? Export of goods. Okay, then for export of services, what is the meaning of export of service? Logically, where the supplier is located, India, and the recipient is located outside India. Where the place of supply should be? Outside India. How the consideration should be? In convertible foreign exchange. But in case of services to Nepal and Bhutan, it can be in Indian rupees. And supplier and recipient are not merely establishments of the same person. Now say for example, if there is like head office in India and branch office outside India, if there is any transaction between them, even though first 4 conditions are satisfied, but because of the last condition, it is not treated as export of service. What if that branch office is incorporated outside India separately there under the law of that country? Then will it be treated as a different person? Yes. If it is incorporated separately outside India or in India under the laws of that particular country, then it will be treated as a different person only, not 2 establishments of the same person. See that note. Supply from a company incorporated in India to its establishment outside India, which are incorporated under the law outside India, would qualify as export of service subject to fulfillment of other conditions. Then there are some transactions which are deemed as interstate supplies. Means irrespective of the location of supplier and place of supply, it will always be deemed as interstate supply. What are they? Supply to SEZ or by SEZ. So both to SEZ, by SEZ. To SEZ is only zero rated supply. By SEZ is not zero rated supply. But even then it will be treated as deemed interstate supply. Same way, import of goods or services, export of goods or services. So easily these 3 points you can remember. Supply to or by SEZ, import of goods or services, export of goods or services. Then location of supplier in India and place of supply outside India. As per 7.5a, it will be treated as deemed interstate supply. Supplier is located in India. Place of supply is outside India. Sir, then it will be export of service, not necessary, because supplier in India, place of supply outside India, recipient in India. Recipient in India, will it become export of service? No, because recipient also should be outside India. Then it is what? It will become deemed interstate supply. So chargeable to IGST. Or location of supplier in India, place of supply outside India, recipient outside India, but consideration is not in foreign exchange. Then also it is not export of service. So, but it will become deemed interstate supply. Location of supplier in India, recipient outside India, place of supply outside India, consideration is in forex, but they both are two establishments of the same person. So, then it is not export of service, but it will become deemed interstate supply. That is the meaning of this. Location of supplier in India and place of supply outside India. Supply of goods to a tourist. At present, this provision is not effective. So, therefore, you don't have to remember this. Then supply of goods or service beyond territorial waters and up to exclusive economic zone of India. So territorial waters is up to 12 nautical miles from baseline and exclusive economic zone is 200 nautical miles from the baseline. India, according to GST, India definition is up to 200 nautical miles from the baseline. So therefore, beyond 12 nautical miles and up to 200 nautical miles, if the supply takes place, then it will be deemed interstate supply. That is this. Supply in taxable territory not elsewhere specified. Then location of supplier in India and place of supply is also in India, but that place of supply is determined under section 13. Once place of supply is determined under section 13 and it is in India, don't see anything, it will always be deemed interstate supply. Supplier Tamil Nadu, place of supply also Tamil Nadu. But that place of supply is determined under section 13, deemed interstate supply, because once the place of supply is determined under section 13, what is section 13? That is place of supply, we have total 4 sections, 10, 11, 12 and 13. So section 10 deals with place of supply in case of goods domestic, section 11 deals with place of supply in case of goods international, import and export, section 12 deals with place of supply in case of services, where both supplier and recipient are located in India. When one in India and the other outside India, then place of supply is as per section 13. One in India, other outside India. Either supplier in India, recipient outside India, or supplier outside India, recipient in India. Then place of supply will be determined under section 13 for services. And once the place of supply is determined under section 13, it will always be deemed interstate supply. Okay. Then next, security lending scheme. So under SEBI, so there is a security lending scheme where, so whenever a person who places the short sales, that is places the sell order, but the order got executed, but he is not having shares in his demat account, he can temporarily borrow the shares from the stock exchange, and these shares the stock exchange will get whenever a depositor deposits his shares with the stock exchange. So like I am lending the shares and you are borrowing the shares, and you will replace the shares and you will pay the lending fee. That lending fee I will receive, as the lender don't know who is the borrower and borrower who don't know who is the lender. That's the reason why we cannot determine the location of supplier and place of supply. Always it is deemed to be interstate supply, and it is also covered under RCM. So that is security lending. Then trading in priority sector lending certificates. That is, whenever one bank which is having shortfall with respect to loan to priority sector is required to fulfill that loan to the priority sector, can either give loan to the priority sector or can purchase the priority sector lending certificates. So that bank which is having shortfall in giving loan to the priority sector will purchase the priority sector lending certificate from another bank which has achieved in excess the priority sector loan. But this trading of priority sector lending certificates will happen through e-Kuber portal of RBI. So due to that reason, no one knows the location of supplier and the location of recipient, etc. So it will always be deemed interstate supply. Then whenever we receive some advance and we don't know what is the nature of supply, intrastate or interstate, it will always be deemed to be inter. So these are the 10 transactions which are deemed to be interstate supply irrespective of the location of supplier and place of supply. Then supplies in territorial waters. Section 9 of IGST Act. Section 7 of IGST Act deals with interstate supply. Section 8 with intrastate supply. Section 9 is supply in territorial waters. Whenever the supply takes place in the territorial waters, we need to see the nearest coastal state or union territory as the location of supplier or place of supply. For example, there is one foreign shipping company which has brought one ship to India, and that ship is somewhere in the territorial waters, and that ship has got some issue. So there is a marine engineer who is in Tamil Nadu who is going to that ship, and he is providing the repair services to that ship. So in case of service in relation to performance based service in relation to goods, so we need to take location where services are actually performed. Where is it actually performed? In the territorial waters. So due to that reason, we need to take territorial waters as the place of supply, but logically we cannot determine. So therefore, what is the nearest state for that ship? The nearest state is say Tamil Nadu, then Tamil Nadu will be taken as place of supply. Location of supplier Tamil Nadu, place of supply Tamil Nadu, intrastate. What if the ship is somewhere near to the Andhra Pradesh? Then it will be taken as interstate. So therefore, the nearest coastal state or union territory will be taken as the location of supplier or place of supply, as the case may be. Okay, that is given in section 9. So supply in territorial waters will be always interstate or depends, intra or inter. But beyond territorial waters and up to 200 nautical miles, exclusive economic zone will be always deemed interstate. Then meaning of aggregate turnover. We discussed taxable supply, exempted supply, non-taxable supply, zero rated supply. Whether all four will come into the meaning of aggregate turnover? Yes. Aggregate turnover includes taxable supply, exempted supply. Exempted supply includes non-taxable supply. Exports also zero rated. And interstate supply. Supply to SEZ is interstate supplies. So everything will come in aggregate turnover, and aggregate turnover is always computed on a all India basis. But aggregate turnover excludes two things, that is inward supplies on which GST is payable under RCM, then CGST, SGST, UT, GST and IGST, that is taxes. So these two are excluded from the meaning of inward supplies. Okay, meaning of aggregate turnover. Why inward supply should be excluded? Because turnover means always outward supplies. So even though you have some inward supplies on which you need to pay tax under RCM, that will not come. Even CGST, taxes also will not come in aggregate turnover. And then this GST on sale of flats or buildings, already we discussed. Suppose if money received before completion certificate entirely, then GST is payable or not? Yes, it is not excluded from supply and it will be treated as works contract service. What if the money is entirely received after completion certificate? Then GST payable or not payable? Not payable, because it is excluded from supply. What if part consideration is received before and part is received before and remaining is received after? Then GST payable on entire consideration? Yes, GST payable on entire consideration, and it will be treated as works contract service. So here, what is the meaning of first occupation? Date on which a flat is occupied by the buyer in the project is deemed as the completion. So therefore, that is the deemed completion date. Thereafter, if any flat is sold, so that will be excluded from supply. After the date, whatever is the flat that is unbooked and sold, so that will be treated as excluded from supply. Then meaning of works contract. So what is the meaning of works contract? Works contract means there is a contract in which property in goods as well as services, both are there. And it should be in relation to movable property or immovable property. It should be always in relation to immovable property. Then only it will be called as works contract and against a single consideration. For example, I am a builder and you are giving me a contract to do the construction. I will buy the material required for construction. I will also do the construction and I will collect a lump sum amount. Then this type of contract is known as works contract. That's the reason why sale of flats is treated as works contract service. Then job work. Generally, job work means carrying out process on the goods belonging to the other person is known as job work. For example, you are giving me some cloth and on that I am doing a stitching of garment and I give you the garment. It is known as job work. So therefore carrying out process on the goods belonging to the other person. But very, very important point here is that the one who is giving the goods, that person should be a registered person. So then only it will be called as job work. What if the recipient who is giving the goods is not a registered person? Then it is not called as job work, it will be treated as some other supply of services. Okay. And job worker, supplier may or may not be registered, but the principal manufacturer, recipient who is giving the material should be registered. Process carried out may or may not be manufactured. So what does it mean? That is, when I do the process, that process may result into conversion of finished raw material into finished goods or mere process. See, not every process will result into finished product na. So therefore that process may result into finished product or may not result into finished product, but the process is job work. And job work is supply of service, and the rate will be usually 6% or 12%. If the recipient is unregistered, means if the principal, that is who is giving the material, is unregistered, then it is not treated as job work but treated as some other services, means the general rate of GST will be applicable, that is 18%. So therefore what plays a major role here is contract. Contract plays a major role. If the contract stipulates that supplier should purchase goods but it is supplied by recipient, then it will be treated as supply of goods. For example, see this, substantial material I should only purchase, I am the supplier. Substantial material I should buy and I should stitch the garment and I should give it to you. It is still treated as supply of goods even though some material is given by the recipient. Okay, if substantial material is to be given by the recipient, on that if I do the process, then it will be called as job work, supply of service. Again I am repeating, carrying out process on the goods belonging to the other person. If substantial material is given by the recipient, cloth you are giving, I am doing the stitching. While doing stitching, I will add buttons, I will add thread, etc. Still I am adding some goods, I will not be treated as supply of goods, it will be treated as supply of service only because the substantial material is given by the recipient. Suppose if substantial material I am only required to supply, for example, cloth you are selecting from my shop, I will only do the stitching and everything I will only be supplying, but you need some extra fitting to this. For that extras you are purchasing and you are giving to me and I am doing the stitching of that. So that will not be treated as supply of service, it will be treated as supply of goods. Okay. Then meaning of distinct person. So because we have seen related party transaction including transaction between distinct persons. So related parties we have completed. Who are treated as distinct persons? So one registration of a person to their another registration is known as distinct person. Also, if I have a registered establishment in a state and in the other state I have an unregistered establishment, even that unregistered establishment is also treated as distinct person. Why there will be unregistered establishment in the other state? Because I am exempted from registration with respect to those establishments where I am making exclusively exempted supplies. For example, I am having business in 3 states, Tamil Nadu, Karnataka and Kerala. In Kerala, I am making only exempted supplies. Even though my aggregate turnover exceeds threshold limit and I am liable to get registered, but I am required to get registered only in Tamil Nadu and Karnataka, but not in Kerala. Now, between Tamil Nadu and Karnataka, if there is any transaction, it is no doubt transaction between distinct person because one registration to another registration. But between Tamil Nadu to Kerala, Karnataka to Kerala, if there is any transaction, even that is also transaction between distinct persons because one establishment in a state which is registered and another establishment in another state which is unregistered will definitely become distinct persons. Okay. Okay, sir. Then within the state, if we have some place of business which is unregistered, will that also become distinct? No, distinct is only unregistered establishment only in another state. But within the state, when you have an unregistered establishment, that is not called as distinct person. Then within the state, when it will be called as distinct person, it should be a registered establishment. Now, see the logic. So, this point can be definitely be tested here. That is, so Tamil Nadu and Karnataka. So Tamil Nadu, we have a registered establishment, and unregistered establishment. In Karnataka, again we have registered establishment and unregistered establishment. Now, so this is 1, this is 2, three, 4. Okay, 1, 2, 3, 4. In this, which one will be transaction between distinct persons? 1, 2, 2 is distinct persons. No, because they have unregistered establishment in a state and another state also that is unregistered establishment, that is not distinct person. Okay, so 1 will be definitely distinct person, no doubt. 3, 3 is also 3, 2, no, 4, no, within the state also will not be. 1 and 3 are treated as transactions between distinct persons. Transactions between distinct persons. One and 3 are treated as transaction between distinct persons. So that's what I mean to say. One registered establishment in a state to another registered establishment in another state is distinct person. That is a general meaning. So from our childhood, first standard itself, we know that. Okay. But what is important here to understand is registered establishment in a state to unregistered establishment in the other state is also treated as distinct person. But if that unregistered establishment is within the state, that is not treated as distinct person. Then, when a person is required to obtain more than one registration, if they are doing multiple business from different states, each state where they are making taxable supplies, they need to get separate registration, that is mandatory. Suppose if they are doing business in the same state but in different place of business, then so separate registration with respect to each place of business is mandatory or optional? Optional. Either they can go for separate registration or they can continue with the single registration by showing one place as their principal place of business and other place as their additional place of business. Multiple businesses, same state but same place of business. Can they get a separate registration? No, cannot obtain a separate registration. Then another establishment in another state, whether registered or not, another establishment in another state, whether registered or not, is treated as distinct persons. Then who will be treated as recipient? If the consideration is payable, if the consideration is involved in the transaction, the one who is liable to pay the consideration is known as a recipient. For example, there is a holding company and there is a subsidiary company. I got an order from the holding company to provide the services to the subsidiary company. Who is the person liable to pay consideration to me? Holding company. So holding company is only my recipient, even though I am providing services to the subsidiary company. The one who is liable to pay the consideration. Okay, suppose if there is no consideration involved, then in that case, to whom I am providing service, that person only will be treated as recipient. That is, even though I got an order from the holding company and I provided the service to the subsidiary company and there is no consideration involved in this case, the one to whom I am providing services, that is subsidiary company, will be treated as the recipient. Same way, in case of goods also, if there is no consideration, the one to whom I am supplying the goods. So whenever consideration is involved, let it be goods or services, the one who is liable to pay the consideration. When there is no consideration involved and it is goods, the one to whom I deliver the goods. If it is services, the one to whom I provide the services. Then classification of supply into goods or services. First, we need to see the activity. The activity is movable property. So when it will become supply of goods, if there is a transfer of title, that transfer of title may be at present or at a future date, then it will be supply of goods. If there is a transfer of right to use without involving transfer of title, then it will be supply of services. For example, I have a car. The title of the car I gave it to you. It is supply of goods. Today itself I may give the title to you, or I may give it a future time. So like hire purchase or installment facility. So therefore it will still be treated as goods. Or I gave you the right to use the car. It will come under supply of services. Then any activity in relation to immovable property. So it will not come under goods, because goods is only movable property. So therefore will it come under supply of service? Yes. Bringing into existence an immovable property is supply of service, or giving the right to use the immovable property is also supply of services. And then intellectual property rights. Permanent transfer of IPR will be coming under supply of goods. Temporary transfer of IPR will come under supply of services. Then carrying out process on the goods belonging to other person, already we have seen. Substantial material supplied by the recipient, supply of service. Substantial material to be supplied by the supplier, and that will be treated as supply of goods. Then supply of goods along with supply of services. Notified activities. So three notified activities which involves both goods and services will always be treated as supply of service. What are they? Works contract, supply of food, and information technology software. These three things, even though it involves both goods and services, but it will always be treated as supply of services. Whereas apart from this, any other activity, if it involves both goods and services, how to classify? Based on composite supply, mixed supply. If it is a composite supply, then if the principal supply is goods, entire activity will be treated as goods. If the principal supply is service, entire activity treated as supply of service. For example, AC installation is composite supply, and there the principal supply is AC, which is goods, so entire activity will be treated as goods. Whereas in case of coaching plus study materials, so here coaching is services and study material is goods, and as the principal supply is coaching, entirely it will be treated as services. And then if it is a mixed supply, if the highest rate is goods, entirely it will be treated as goods. If the highest rate is service, entirely it will be treated as services. For example, TV plus optional warranty. TV is goods and optional warranty service, mixed supply, and the highest rate is TV, so entirely classified as TV, supply of goods. Whereas in the other case, video lectures plus pen drive, video lectures is supply of service and pen drive will be supply of goods, and it's a mixed supply. And if the highest rate is video lectures, entirely it will be treated as supply of services. Apart from these five, any other activity will be coming under supply of service, that is doing an act, not doing an act, tolerating an act, and it will not come under supply of goods. So then what about services supplied by unincorporated association or club to its members? So depends. Previously it was treated as supply of goods, supply of service, like that, but now depends. Suppose if facilities are provided, it will be treated as supply of service. If goods are supplied, it will become supply of goods. So that is with respect to this classification of supply into goods or services. So with this, the first part that we have completed, that is meaning of supply. Then you can see composite supply and mixed supply, second part. So only one section here, section 8, we completed section 7 and we are moving on to section 8. That is in section 8, first we need to check whether it is a composite supply or not. How to check whether it is a composite supply or not? For the three conditions we need to check. All the given supplies should be taxable supplies. Number 2, naturally bundled in the ordinary course of business. And number 3, principal supply is identifiable. If these three conditions are satisfied, then it will be a composite supply. First of all, there should be 2 or more supplies. If there is only one supply, then it will never become composite supply, mixed supply. It's a individual supplies, single supply only. So therefore, there should be 2 or more supplies, and these 2 or more supplies, 3 conditions satisfied, it will become composite supply. What are those 3 conditions? All supplies should be taxable, naturally bundled in the ordinary course of business, and the principal supply is identifiable. If it is composite supply, we will take the rate of principal supply and apply it on the entire transaction. If any of these 3 conditions not satisfied, then it is not a composite supply. Now we need to check only one condition, that is single price or not. If it is a single price, it will become mixed supply. If it becomes a mixed supply, we need to take the highest rate and apply it on the entire transaction. If it is not a composite supply and there is no single price also, means separate price is there, neither composite supply nor mixed supply, then it will become individual supplies taxable accordingly, separately. So, respective rate for the respective supply. So, meaning two or more supplies naturally bundled in the ordinary course of business. What is the meaning of naturally bundled in the ordinary course of business? Which means that one cannot be supplied without the other. That is known as naturally bundled in the ordinary course of business. Whereas in case of mixed supply, two or more supplies not naturally bundled in the ordinary course of business. Then type of supplies involved in composite all are taxable, but in mixed it can be in combination of taxable or exempted or non-taxable. How the price should be? In case of composite supply, there is no condition about the price. So, price can be single or separate. But in case of mixed supply, there should be a single price. And principal supply, in case of composite supply, yes, one of the supplies should be principal supply, but in mixed supply, principal supply is not relevant. Then rate of GST, in case of composite supply, we need to take the rate of principal supply and apply it on the entire transaction. Whereas in case of mixed supply, highest rate. And AC and installation is composite supply because it is naturally bundled. So, in the ordinary course of business, see, exceptions will always be there. In exam, this is where we just get confused between composite supply or not. Naturally bundled is the only criteria. All are taxable are not given in the question itself. Principal supply also easily you will identify, but the only challenge that you have is it naturally bundled or not. Simple here, that is, in the question itself, it will be clearly given that one cannot be supplied without the other. Suppose if that line is not clearly mentioned, now you need to apply your common sense. But when you are applying your common sense, you don't see the exceptions. You see the major probable side. For example, laptop and laptop bag. Laptop and laptop bag, exceptions are there. Actually, some people will sell the laptop without the laptop bag. Okay, but we should not see the exception. We should see the general. Generally, laptop and laptop bag are naturally bundled in the ordinary course of business. Are you understanding? So, generally, that is most probable which side, that side only we need to see. Because you being CA students will always be identifying the exceptions. So, remote, okay, this way also it is possible. That you don't do in the exam hall. They are more probable which side, that side only we need to take, okay. So, therefore, AC plus installation, sometimes AC can be sold without installation also, but generally in the ordinary course of business, this is naturally bundled. Same way, transportation plus insurance, replacement of parts during servicing of vehicle plus labor charges for replacement. So, these are all naturally bundled, that is why it is composite supply. Why inverter and battery is not naturally bundled? Sir, inverter will not work without battery, na sir. Then how can you say that it is not naturally bundled? You are not seeing it from the supplier point of view. Why you see from the functionability point of view? See from the seller point of view. Can a seller sell only inverter? Yes. Only battery? Yes. So, whether any person who is coming and asking the seller, I need battery, he will sell inverter also? No, na. So, which means that from seller point of view, we need to see in the ordinary course of business of the supplier. So, therefore, it is not naturally bundled. Same way, renting of building plus renting of furniture, popcorn plus coke in a theatre, these are all not naturally bundled, and if it is a single price, then it will be treated as mixed supply. What if there are two or more supplies which is neither a composite supply and also not involving single price? It is not a composite supply and also not involving a single price, then it will be individual supplies and taxable accordingly. For example, popcorn rate is 5% and coke rate is 28% and popcorn 199, coke is 299, sorry, coke is 99, and so they have given this way, whereas the total is 298. And if you buy it as a combo, you get it at 199 only. Okay. Now, this way when it is given. So, whether it is for a single price or separate price, single price. single price. Okay. So therefore it will become mixed supply, means this entire 199 will be taxable at 28%. Then suppose if they give this also, they have given separately. When you buy as a combo, so this will become 129 and this will become balance how much? 70. Okay, this will become 70. Now it became 199. Like that, if it is given, separate price is there. So separate price is there, then 129 will be at 5% and 70 rupees will be at 28%. So therefore, single price if it is there, it is mixed supply. If separate price are there, individual supplies taxable accordingly, means at the respective rates. Okay. So we'll take a break for 10 minutes and thereafter we will start with liability to pay GST, and if you have any queries you can ask during this time. Online students, your queries you please post it, and after break I will complete those queries and proceed to this. Okay, so there are some queries for online students. Doubt regarding taxability of gifts by employer. What if Diwali bonus etc. received in cash? Bonus is part of salary. So that bonus will be clearly mentioned in the contractual agreement. So therefore bonus like that, if anything is given, so that is forming part of salary, that is not treated as gift. Suppose if gift is given as cash, gift is given in cash, then as cash is neither goods nor services, we will not be taking any treatment related to that. So only when it is given in goods or services, because money is neither goods nor services. So any gift given in cash, we will ignore that. That will not be treated as gift at all per se, means it is not a supply. You have to write it as it is not goods or not services, simple. Then if we selected one place as additional place of business which is not registered, if we transfer goods to that place and get any goods from that place, can we consider the transaction as distinct person? No, because when we show that as additional place of business means we are not getting a separate registration for that place. When we are not getting a separate registration for that place means it will never become transaction between distinct persons. Then gift to employer, gift by employer to employee, if it exceeds 50,000 and value will be determined under rule 28 or transaction value, always rule 28. Employer employee transactions are treated as related party transactions, always value will be determined as per rule 28. Then next ending time of the class as per my mood or 6 o'clock, whichever is earlier. Then sir, high C sales and warehouse goods example you gave, in that high C sale you mentioned IGST computation will be different. Yes. So that I'll just give you an illustration because some students asked me that. Does supply includes manufacture? Yes, supply includes definitely manufacture. And inward supply is paid for GST and development of land. Yes, yes, correct. A doubt with regard to CBIC circular with respect to sale of land. What does service of land development mean? Land development services means like we are receiving some leveling, bulldozer services, road roller services, dumper tipper services, drainage laying down services, all those are services in relation to development of land. Then currency held for its numismatic value. Yes, money definition. So what is the meaning of money? Money means Indian currency or foreign currency or any currency, so that is, or any instrument that is recognized by RBI. So even this wallets also will be covered under money. But if there is an instrument which is not recognized by RBI, it is not treated as money. For example, cryptocurrencies. Cryptocurrencies are treated as sale of goods because it is not covered under money definition. If it is not money definition, then it will become goods. So sale of crypto will be treated as sale of goods and chargeable to GST. Same way, money definition excludes currency held for numismatic value, that is old currency, old coins, etc. So that is also treated as sale of goods only. Okay, that is that point. Then so funeral services पर GST लगा है ना? No, नहीं. No yaar, there is no GST on funeral. Everything, all death related is excluded from supply. Okay. Then I will also take class in Hindi yaar. So this is related to, imported goods on high seas versus three situations I am just taking. That is, say A Limited has originally imported, A Limited imported for $10,000. A Limited imported for $10,000 and cleared after payment of customs duty. Cleared after payment of customs duty. So this is one situation. And then A Limited imported for $10,000. A Limited imported for $10,000 and sold during transit to B Limited for $12,000. Okay, means what? It is sale on high seas, sold during transit. During transit means sale on high seas. Sale on high seas. This is sale on high seas. Then next one is there, A Limited imported, this A Limited imported for $10,000 and warehoused and transferred warehouse receipt to B Limited for $12,000. So this is what? Sale of warehouse goods. Now in these three cases, what is the difference? Let's see. So in the first case, the one who is importing is only clearing. Second case, the one who is importing, original importer sold it to another person by way of transfer of documents to title. Third case, the one who is importing again transferred the documents of title to the other person, B Limited. But the difference between the second situation and the third situation is that second situation happened when it was in transit. Third situation happened when the goods are deposited in the warehouse. So now what should be taken as the assessable value for customs purpose? So assessable value for customs, if you see, AV for customs duty purpose, AV assessable value will be 10,000. Here also assessable value for customs is not 10,000, it will be 12,000, the price at which B Limited has purchased. Whereas here assessable value for customs will be $10,000. So now, we need to multiply with Indian rupees. Say I am taking 80 rupees per dollar, so that will be 8 lakhs. And here also 80 rupees per dollar. Quickly please tell me, 80 rupees per dollar. So here it will be 9,60,000 and here it will be taken as 8 lakhs. And here basic customs duty, so assessable value will differ, and basic customs duty at say 10%. So basic customs duty 10% will be 80,000. Social welfare surcharge at 10% of basic customs duty, that is 8,000. And then IGST, normally we compute the IGST here. Say IGST at 12% on what? So assessable value plus basic customs duty plus social welfare surcharge, simple. So therefore 8 lakh plus 80,000 plus 8,000, 8 lakh 88,000, 8 lakh 88,000 into 12%. 8 lakh 88,000 into 12%. 1 lakh 6,560 will be taken. So this will be the total customs duty payable. Total customs duties payable. The total customs duty payable, who will pay? A Limited. Total CD payable, total customs duty payable by A Limited. The total of this 80,000 plus 8,000 plus 1 lakh 6,560. 194,560. Now this is simple when the original importer is only doing the clearances, whereas in this case on high seas basis, so basic customs duty at 10% on 9,60,000, that is 96,000, and then social welfare surcharge at 10%, that will be 9,600, and then IGST also regularly computed at 12% on what? Assessable value plus basic customs duty plus social welfare surcharge. So that will be, so total 1 lakh 9,60,000 plus 96,000 plus 9,600, on that 1 lakh 872, and this will be the total customs duty payable. But who will pay this total customs duty? B Limited, not A Limited, B Limited. What about A Limited? A Limited will get some money that is excluded from supply for the purpose of GST, because this is sale of goods during high seas. So then what is the total of this? 96,000 plus 9,600 plus 1,27,872. 233,472. Then last one, So here basic customs duty will be normal at 10%, that will be 80,000. Social welfare surcharge at 10%, that is also same, that will be 8,000. But IGST will differ. IGST at 12% on A, assessable value plus basic customs duty plus social welfare surcharge, or B, so 12,000 sale value. What is the sale value? 9,60,000. 9,60,000, whichever is higher. Whichever is higher. So take assessable value plus basic customs duty social welfare surcharge 8,88,000 or 9,60,000, whichever is higher is 9,60,000. 9,60,000 into 12%, that will be 1,15,200. So this will be taken as the total customs duty payable. So 8,000 plus 80,000, that will be 2,03,200. So three different answers we got depending upon the situation. So therefore when, and again this is total customs duty payable by B Limited. So therefore A Limited imports and clears, this is the total customs duty payable by A Limited. A Limited when subsequently sells to B Limited, normal GST transaction. Whereas in this case customs duty payable by B Limited, here also customs duty payable by B Limited, and A Limited is excluded from supply, they are not required to pay. So this is the illustration related to that. So at least now I think many students who got the doubt etc. got the clarity related to this. Yes. And now we are moving on to third area in segment 2, that is liability to pay GST. There are total 3 sections, 9.3, 9.4 and 9.5. 9 subsection 1 and 9 subsection 2 says that on alcoholic liquor for human consumption there is no GST. Permanently it is excluded from the ambit of GST. Whereas 9 subsection 2 says that petroleum products is also excluded from the ambit of GST temporarily. As and when GST Council decides, it will come into the ambit of GST. So this particular 9.1 and 9.2 already we know because they are treated as non-taxable supplies, and as per 9.1 and 9.2 it says that general liability to pay GST to the government is on the supplier and we call it as forward charge mechanism. But as per 9.3, 9.4 and 9.5, liability to pay GST to government is not on supplier but on some other person. Who is that some other person under 9.3? Recipient is having liability to pay GST to government. 9.4 also recipient is having liability to pay GST to government, and in case of 9.5 it is e-commerce operator who is having liability to pay GST to government. In case of 9.3, when is it applicable? There are some notified goods and services which are supplied. On those notified goods and services, liability to pay GST is on recipient. And so what are the notified services only is applicable for exam, but notified goods is not applicable for exam, and recipient will be paying GST to government, and the supplier can be registered or unregistered. So there is no restriction. But what about recipient? Recipient should definitely be registered because we have a compulsory registration here. So every recipient who is liable to pay GST under RCM 9 subsection 3 is compulsorily required to get registered. Then 9 subsection 4 is inward supplies of a promoter or builder from an unregistered person. There is a promoter or builder who is registered, who is making purchases from an unregistered person. On this, the promoter or builder is required to pay GST under RCM. Here the supplier should be unregistered and the recipient will be by default registered. And whether compulsory registration is applicable in case of 9.4? No, only in case of 9.3 compulsory registration is applicable. Then 9.4 is supply of notified services through e-commerce operator. Liability to pay GST is on e-commerce operator. Liability to pay GST on the transaction is on the e-commerce operator. What are those notified services? HATE, H for housekeeping services. So example, urban club, etc. In that case, supplier will be an AC mechanic, carpenter, plumber, etc. And urban company is the e-commerce operator, and the recipient will be there. Liability to pay GST is on that e-commerce operator. Then A for accommodation services, OYO, Goa, Bibo, Make My Trip, etc. Supplier will be hotel and e-commerce operator, and the recipient will be the guest who stay in that hotel. Liability to pay GST is on that e-commerce operator. And T for transportation of passengers in any motor vehicle. So not necessary that it should be radio taxi, motor cab, maxi cab. Now it can be any motor vehicle. Liability to pay GST is on that e-commerce operator. Example, Ola, Uber, Rapido, Redbus, etc. Then even if the service is exempted, for example, transportation of passengers through stage carriage, non-AC stage carriage is exempted. But if it is through e-commerce operator, it will become taxable. Same way, transportation of passengers through metered cabs or auto rickshaws is exempted. But even if it is through e-commerce operator, it will become taxable. Then E for eating food from restaurant. So Swiggy, Zomato, liability to pay GST is on that Swiggy, Zomato. So e-commerce operator, these are the 4 services. What are the 4 services? HATE. H for housekeeping services, A for accommodation services, T for transportation of passengers by any motor vehicle, E for eating food from the restaurant. In case of these 4 services, liability to pay GST is on e-commerce operator, and these 4 services will come into 9 subsection 5. With respect to the first 2 services, supplier should be unregistered. H and A, supplier should be unregistered. With respect to the next 2, that is T and E, supplier may or may not be registered. Always liability to pay GST is on e-commerce operator. For example, if the restaurant is registered or restaurant is not registered, if they sell food through Swiggy, Swiggy only will pay GST. Same way, if the transportation service provider is registered or not registered, always Ola and Uber will pay GST. Whereas in case of housekeeping service and accommodation service, if the supplier is registered, the supplier only should pay. If the hotel is registered, hotel only should pay. If the hotel is not registered, so then if they are supplying through e-commerce operator will pay. That is this. Then we are moving into 9 subsection 3. So that is services which are covered under RCM. So Sir CG got salads. You need to remember that keyword, Sir CG got salads. These are the list of services which are covered under RCM. Section 9 subsection 3 read with notification number 13/2017. This notification number you need to remember. Okay. And yes, for first we will see what are the services, and then we will connect it with the respective exemptions. So yes, for security lending services. In security lending service, who is the supplier? Lender of the securities. Who is the recipient? Borrower of the securities. And any conditions for RCM? Nothing. So liability to pay GST is on the recipient in this case. And I am lending the securities, you are borrowing the securities, and you are paying me the lending fee. On that lending fee, you only should pay GST under RCM. Then in next number 2 is I. SIRR. Sir CG got salads. I for import of services. In case of import of service, who is the supplier? A person located outside India. Who is recipient? A person located in India. Liability to pay GST is on recipient who is located in India. Now, in this case, we have some exemptions. So you please take exemptions, import of services, and that page number reference you need to give it here. So you please take exemptions. What's the page number, Pa? 83. So give page number 83 reference there. Have a look into import of services. In case of security lending, we don't have any exemptions. But in case of import of services, we have some exemptions and special points. See this. Import of services in page number 83. Import of services is divided into 2. OIDR services other than OIDR services. OIDR full form, online information database access and retrieval services. What service is called as OIDR service? Any service which is mediated through internet and it is automated is known as OIDR services. So 2 aspects are necessary. What are the 2 aspects? It should be mediated through internet and it should be automated. So for example, OTT platform through internet and it is automated. Then online live classes is even though through internet, but it is not automated. So but recorded classes which you watch in app will be coming under OIDR services. So any service which is through internet and it is automated is known as OIDR service. OIDR service is always taxable. Who will pay GST? If it is imported by non-taxable online recipient, liability to pay GST is on supplier under FCM. If it is imported by other than non-taxable online recipient, liability to pay GST is on recipient under RCM. Then who is non-taxable online recipient? Any unregistered person, not necessarily individual, trust or government, any person. So even firm or body corporate or company, any person who is unregistered, importing service for other than business or commerce is known as OI, non-taxable online recipient. For example, a CA student is importing Netflix or Amazon Prime services will come under non-taxable online recipient, unregistered individual importing service for other than business or commerce. So therefore, it will come under non-taxable online recipient. Import of OIDR services by non-taxable online recipient, liability to pay GST is on the supplier under FCM. So that Amazon Prime or Netflix has to pay GST under forward charge mechanism. What if it is imported by other than non-taxable online recipient? Then it is covered under RCM, but OIDR service always taxable. Whereas other than OIDR service means normal import of services like import of architect service, import of consultancy service, or import of any medical services, etc. So import of other than OIDR services will be exempted if it is imported by a non-taxable recipient. Who is a non-taxable recipient? Individual, trust, government. Individual, trust, government. Individual should be unregistered, trust can be registered, unregistered under GST, government can be registered or unregistered under GST. Individual importing service for personal purpose, trust importing services for charitable activities, and government importing service for other than business or commerce. Then they will be treated as non-taxable recipient and the said service will be exempted. If it is imported by other than non-taxable recipient, so only when there is OIDR services, we need to refer to NTOR. Extra that O will come only when there is OIDR services. When there is no OIDR services, it will be NTR. So when imported by other than non-taxable recipient, it will be taxable under RCM. What is the difference between NTOR and NTR? NTOR is any person, but in NTR we have only three people: individual, trust, government. And in NTOR, they should be unregistered, but in NTR, individual alone should be unregistered, but government and trust can be registered or unregistered. And in NTOR, they should be importing for other than business or commerce, but here little specific they are giving. Individual should be importing for personal purpose, and charitable trust should be importing for charitable activities, and government should be importing for other than business or commerce. So that is the difference between NTR and NTOR. Then OIDR services also I have given. So services mediated through internet and are automated are called as OIDR services. Then whenever GST is payable under RCM, they need to compulsorily get registered. So which means in case of these two taxable under RCM, now they need to compulsorily register. Also, the supplier who is liable to pay GST on OIDR services located outside India is also compulsorily required to get registered. And whatever GST we paid under RCM, we can avail it as ITC. Now, what you need to remember in case of import of services? Import of services, supplier is located outside India, recipient is located in India, and generally recipient only will pay GST under RCM. But non-applicability of RCM in one case, that is in case of import of OIDR services by non-taxable online recipient, supplier located outside India will pay GST under FCM. And then one case it is exempted. What is that one case it is exempted? Import of other than OIDR services by non-taxable recipient is exempted. So this is what you need to keep in mind. Okay. So supplier outside India, recipient in India, always RCM. One case it is FCM, that is OIDR services by non-taxable online recipient. And then one case it is exempted, that is other than OIDR services by non-taxable recipient, it is exempted. So this you need to keep in mind. Then come back. So we have seen SI. Now R, that is renting of motor vehicles. So here you give the reference. Here also we have some exemptions. So please refer to page number. Renting services is there, no, see 80, page number 80. Page number 80 you see, give the reference there, page number 80. Renting of movable property. See, in case of renting of motor vehicles, it comes under RCM, but we have 4 exemptions with respect to renting of motor vehicles. Hiring of a means of transport that can carry more than 12 passengers to a state transport undertaking. For example, you have a bus that can carry more than 12 passengers that you are giving to a state road transport undertaking, you receive the higher charges, that is exempted. Same way, you have a vehicle that can carry goods, you are giving it on rent to a goods transport agency, the rent collected from them will be exempted. You have an electric motor vehicle that can carry more than 12 passengers, you are giving it to a local authority, you get the rent, that is exempted. Then you have a bus that you are giving on rent to a person who is in turn using that for providing transportation service to educational institution up to 12th standard. So there is an educational institution up to 12th standard or equivalent, that is school. For that school, one person is providing transportation service. To that person you gave a bus on rent, that rental charges collected from that person is exempted. These are the 4 cases it is exempted. In other cases, renting of motor vehicles will be taxable. Wherever renting of motor vehicle is taxable, you can check there are 3 conditions for RCM. Condition number 1, supplier should be other than body corporate, recipient should be body corporate, rate of GST should be 5%. If these 3 conditions are satisfied, it will be coming under RCM. Otherwise, it will be FCM. Okay. So therefore, what you need to remember in case of renting of motor vehicle, supplier should be one who is giving the motor vehicle on rent, and the recipient is the one who is taking the motor vehicle on rent. Any exemptions? Yes, 4 exemptions are there, and in other cases it is taxable. And any conditions for RCM? Yes, 3 conditions for RCM. Supplier should be other than body corporate, recipient should be body corporate, and the rate of GST should be 5%. Who is considered as body corporate? Body corporate means, so any public limited company or a private limited company or any body established under any law for the time being in force, like SEBI, ICI, then RBI, these are all called as body corporates. Okay, understood? So any body established for under any law for the time being in force is called as body corporate. So public limited company, private limited company, or any body established under any law for the time being in force. Then what is the business entity? Because we have come across in government services provided by government to business entity. What is the meaning of business entity? Any person engaged in business is known as business entity. Means it can be individual, or it can be HUF, or it can be firm, any person. So who is engaged in business is known as business entity. So body corporate and business entity is not one and the same. It is completely different. Okay, you be careful with respect to that. Now, so we completed SIR. Now one more R is there, that is renting of residential property. This is an amendment. So same page, page number 80. Page number 80 you give reference. Renting of residential property. Previously, so we have renting of property divided into 2, residential property, commercial property. Commercial property for commercial purpose is taxable, commercial property for residential purpose up to 1000 rupees exempted, beyond 1000 taxable. Now that is not there, omitted, which means that once it is a commercial property, it will always be taxable. If it is a residential property, what we learnt past is that residential property again divided into 2, for commercial purpose, for residential purpose. For commercial purpose it will be taxable, for residential purpose it will be fully exempted. But now that residential purpose is again divided into 2, to a registered person, to an unregistered person. To a registered person it will be taxable under RCM, to an unregistered person it is exempted. So therefore renting of building, when it is exempted, only one case it is exempted. Renting of building, only one case it is exempted. It should be a residential property given for residential purpose to an unregistered person, then only it will be exempted. That is this. Immobile property, that is building, residential property for residential purpose to an unregistered person is only exempted. What if it is given to a registered person? It will be taxable under RCM. Now here one clarification is given, that is whenever an individual is taking the residential property for residential purpose, then if that individual is a registered person but using it for his family use, then it is treated on par with renting to an unregistered person only. You understood or not? There is a registered, for example, I am a registered individual, I am taking a property on rent. For what purpose? For my stay, family stay. Means I will be treated on par with unregistered person. But this exception is created only for individuals, not for others. for any other person, HUF, AOP, BOI, firm, etc., for any person, if it is registered, if they take a residential property for residential purpose also, sir, why residential purpose? Maybe like a guest house for their employees or for their clients, etc., even though for residential purpose, but it will be treated as taxable under RCM. So therefore, what is covered under RCM are renting of which property? Residential property. Who is the supplier of service? Owner of property. Who is the recipient of service? Tenant. Is there any exemption? Yes. Renting of residential property for residential purpose to unregistered person. And when it will come under RCM, any condition? Yes. The recipient should be registered. So then it will be covered under RCM. So now, in all other cases, it will be FCM. So residential property, okay. What about commercial, residential property for commercial purpose? Residential property for commercial purpose, taxable. FCM or RCM? FCM. So where it is RCM? Residential property for residential purpose to a registered person. RRR. Okay. You understood. Residential property for residential purpose to a registered person, then only it will be coming under RCM, 4 R's, okay. So that is in case of RCM, okay. Then SIRR we discussed. Then coming back to C for copyright services. So in copyright services, we don't have any exemptions. So total 4 copyrights that we have, that is original literary, dramatic, artistic and musical works. Original literary refers to books, novels, etc. Dramatic refers to story writing, screenplay, and artistic works refers to drawings, designs, paintings, and musical works refers to composing the music. All these are covered under RCM. Temporary transfer or permanent transfer? Definitely temporary transfer, because permanent transfer is treated as supply of goods, and goods covered under RCM we don't have in syllabus, only services which are covered under RCM. And then in this case, for original literary there is an option that is given, that is author has the option to pay GST under FCM. But if the author opts to pay GST under FCM, for the next 1 year from the date of exercising the option, the author only will pay GST under FCM. So he cannot authorize the recipient to pay GST under RCM. RCM to FCM, no lock-in, but FCM to RCM there is a lock-in for 1 year. But that 1 year is 1 financial year? No, 1 year from the date of exercising the option. Why author will opt to pay GST under FCM? Because whenever my outward supply is covered under RCM, for me it will be treated as exempted supply for the purpose of availment of ITC. So while computing my ITC, when my outward supply is covered under RCM, it will be treated as exempted. So I cannot take ITC on my inward supply. That's the reason why if I am opting for FCM, I can take ITC on my inward supply. But what is the disadvantage of opting for FCM? For the next 1 year, I only should pay GST under FCM. That is this point. And next, GTS services. GTS services. So there is an amendment now. So please give the reference in exemptions. Page number 83. In page number 83, you can see GTS services. Previously, total 5 exemptions were there. Now those 2 points are omitted. That is 1500, 750, like the 2 points were there. Single carriage does not exceed 1500. Single consignee does not exceed 750. I used to spend lot of time making you understand that. Thank God it is removed. Okay. For which and all we are feeling happy, you know. No? So this became taxable, and liability to pay GST is on. So supplier or recipient, depends. GTS services, both options are there. And only 3 exemptions. Number 1, specified goods. What are those specified goods? 6 goods. No change in that. That is agricultural produce, food grains including flours, pulses, milk and salt, organic manure, newspapers and magazines, relief material for natural or man-made disaster, defense and military equipment. These are the 6 goods which are transported through GTA. It is exempted. And then 4th, that is second exemption, is if the recipient is central government, state government, local authority or union territory registered only to deduct TDS. So then also it is exempted. Another exemption is if the recipient is individual, HUF or AJP, all are unregistered and not having factory. So these three cases only GTS services is exempted, in other cases it will be taxable. So what will be called as a goods transport agency? Who will be called as a goods transport agency? Any person engaged in transportation of goods by road. So transportation of goods by road. Transportation of goods by road. So they should not be transporting goods by any other mode here, only by road, and issues consignment note by whatever name called, and issues consignment note, and issues consignment note by whatever name called will be called as goods transport agency. Okay. So suppose if they are transporting the goods belonging to multiple consignors and multiple consignees by flight like airways, will they be called as GTA? No. GTA means definitely they should be transporting the goods by roadways, then only they will be called as GTA service. And GTA, wherever it is taxable, there are two options, FCM, RCM. Previously that option was chosen with respect to each invoice, but now with respect to each financial year they need to choose, which means this financial year they chose for FCM, full financial year FCM only, RCM is impossible. Again next financial year they can go for RCM. So like that every financial year they need to choose between FCM and RCM, and in FCM if they chose, again they have two options to pay GST, either at 12% or 5%, 12% with ITC, 5% without ITC, and this 12%, 5% can be chosen between invoices also. Can be chosen between the invoice also. There is no lock-in like this financial year for those two options, that is 12%, 5%. Those invoices at which they raise 5%, on which they cannot take ITC, means treated like exempted supplies. Those invoices on which they raise GST at 12% will be treated like taxable supplies. So when they have partly taxable, partly exempted, so then they will take proportionate ITC. Okay. Suppose if they go for RCM option, all their invoices will be having what rate of GST? 5%. So which will be payable by the recipient, and the recipient can take that 5% as ITC. So this is with respect to the rates applicable to GTA. So in any other case for GTA, either FCM or RCM, they can select as an option. But this FCM, again 12% is there or 5% is there. Okay, 12% or 5%. When 12% with ITC, 12% is with ITC, and when 5% without ITC, 5% without ITC, and in case of RCM it will be always 5%. And so then when they need to select this as an option, with respect to each invoice or with respect to each financial year? With respect to each financial year. With respect to each financial year. So that details I have given there. So fully the amended portion that I have given over there, you can see that. So GTS services with respect to each financial year, they need to choose this option. And when they need to choose this option? When they need to choose this option? At least 15 days prior to the commencement of the financial year, means before 15th March. For example, from 1st April, if they want, before 15th March 2023, they need to choose either FCM or RCM, then only that option will be applicable with effect from the beginning of that financial year. So this can be tested definitely. So for May 23 exam, so because GTA means definitely there are chances of asking questions that to this amendment. So mark my word, it will come. And then next one, no, it will come really. So last time also same way I said, I said 129 will come, it came. Okay. So because there is no other way, they have to ask those, like these are all the core areas. From core areas, whenever there is an amendment, they have to ask. Okay. Then next one. So we completed, yes, security lending, import of services, or renting of motor vehicles, another are renting of residential property. then C for copyright services, G for GTA services. We have seen that. Then the next G is government services. Government services to business entities. So government service to business entities, we have big list of exemptions. So you can see that. So page number 78. Page number 78, you can see services provided by government. What are the 4 activities of government which are covered under supply? Department of Posts, transportation of goods or passengers, airport or port services, and services to business entities. All other activities are excluded from supply. These 4 activities only covered under supply. In the Department of Posts, there is an amendment now. Previously, in Department of Posts, Speed Post, Express Parcel Post, Life Insurance or Agency Services was taxable, and all other service of Department of Post was exempted. But now, only these 3 are exempted, everything else is taxable. What are those 3 which are exempted? Postcard, inland letter, envelope with less than 10 grams. Equal to 10 grams? Taxable. Less than 10 grams, 9.99, okay. So then only it will be exempted. Less than 10 grams is only exempted, okay. Envelope with less than 10 grams. Sir, what will be kept inside that envelope? Maybe some one paper like that, that's it. So we cannot keep anything inside that envelope here. So therefore that only, maybe cotton and all we can keep and send. So less than 10 grams, better not to give that exemption, but they gave. Why they gave, I don't know. And these 3 cases only exempted, all other cases it will be taxable. For example, money order previously exempted, now taxable. And then Speed Post, Express Parcel Post, anyhow it will be taxable. Registered post, taxable. Book post, taxable. Saving schemes, taxable. Aadhaar application, enrollment, taxable. Every service which is provided by Department of Post will be taxable, okay. And only these 3 are exempted: postcard, inland letter, envelope weighing less than 10 grams. Then transportation of goods or passengers as per the transportation chart, okay. So like depends upon transportation, because transportation is generic, let it be government or private sector, we have the same set of treatment. Then services to aircraft or vessel inside or outside the precincts of an airport or port, this will be always taxable. And it is not covered under RCM, all these are under FCM. Wherever it is taxable, it will be covered under FCM. Only one is under RCM, that is what? Services provided by government to business entities. That is, this 4th one only is covered under RCM, but here we have specific exemptions, general exemptions, in other cases it is taxable, okay. Now first we are discussing this specific exemptions. In that specific exemptions, previously one point was there. Municipality or gram panchayat services like that, that is omitted, which means now it is taxable. So all municipality or gram panchayat services provided to government or by government? By government. To whom? Business entities will be taxable. Okay sir, what about general public? Excluded from supply, that is same. That is, see, municipality or gram panchayat services to business entities is covered under supply. And previously it was in exemption, now the exemption is omitted, so it became taxable. Whereas, if the same municipality or gram panchayat providing services to general public, it comes under other activities, so that will be excluded from supply, okay. No change in that, that remains the same. But provided to business entity, previously it was supply and it was under exemption. Now as the exemption is omitted, it became taxable, okay. Then charges collected under Right to Information Act. So example, no, you guys will pay money to get your answer sheet, so that will be exempted. On the charges, no GST, okay. Then interdepartmental services, this was there even before also, that is one department of central government, state government to another department of central government or state government. Sir, we are discussing services to business entities, where from government will come under business entities, correct? That's your doubt. because see the business definition, last specific activities, all activities of government will come under business, means even government is also a business entity, okay. So interdepartmental service, one department of CGSG to another department of CGSG. Then right to use telecom spectrum allocated. So this example is like income tax department providing like income tax department receiving service from police department is an example of interdepartmental services. Then right to use telecom spectrum allocated before 1/4/2016, okay. So this right to use telecom spectrum, so when it is assigned before 1/4/2016, why we need to talk about that? Because the royalty may be receivable now and the one time charges may be installments payable now. So then it is exempted. What if it is allocated after 1/4/2016? Entirely it will be taxable. Then right to use natural resources allocated before 1/4/2016. The difference between third point and fourth point is that third point is related to telecom spectrum and fourth point is related to natural resources. In the third point, both one time charges and annual royalty is exempted, but in the fourth point only one time charges. And fifth one, right to use natural resources to individual farmer. So right to use natural resources to individual farmer assigned any time. So the difference between, so third, fourth and fifth is that in third and fourth it should be assigned before 1/4/2016, but here it is assigned any time. And again the difference between fourth and fifth point is that here only one time charges, here both one time charges and annual royalty. And fourth point and fifth point, one more difference is that here also natural resource, but here also natural resource. Here natural resources to any person, but here natural resources to an individual farmer, okay. That's the differences here. Then number 6, merchant overtime charges. Merchant overtime charges is under customs. So whenever customs department is working after office hours or during holidays, so they will be collecting some extra charges called as merchant overtime charges. That charges collected by them will be exempted. Safety certificate charges for establishments which are dealing with public at large should get a safety certificate from the safety officer. For that, safety officer will be required to get some money. So that money collected by safety officer, who is a employee of the state government, is exempted. Then consideration for tolerating an act, that is whenever we enter into contract with the government and we breach the contract, for which we pay the damages to the government. So that damages collected as a part of the contract by the government will be exempted. However, fines and penalties are not treated as consideration for tolerating an act. Fines and penalties for breach of law is consequences on account of breach of law, and that will not be treated as consideration. For example, traffic signal, if you are crossing, helmet you are not wearing, you have to pay fine. It does not mean we can pay fine and we can cross the signal, or we can hit the person, or we can kill the person like that. No, that is not the intention behind the traffic fine, okay. So therefore, traffic fines are legal consequences, that is not treated as consideration for tolerating an act. So then consideration for tolerating an act mainly arises out of breach of contract. Breach of contract. Then number 9. So what if GTA did not select the option 15th March, if they have not selected the option? FCM by default they will be under FCM. So if they want RCM, they should have selected that option, okay. And GTAs have to exercise that option, no other go. So they are not CA students to wait till exam application date, and on that date they will make exam application, or they will forget and they will messaging in Telegram group, "Arey yaar, I missed the exam date, can I pay with late fee?" Again late fee date also will be over. Some idiot has messaged in my group stating that, "Is there any alternative that I missed exam application along with late fee also I missed?" I wanted to ask, what is that you are plucking this many days? No, what other job you have, pa? That is the only job of yours, to make an exam application. So you have to do. So don't behave that way. GTA will have to file, means they will file. So it is their headache, it is their business, they will do that. Okay, so if nothing is selected means you take any assumption and write. If question is silent, you write. So as they have not specified FCM or RCM, therefore we consider RCM or we consider FCM. Any option can be taken. Okay, for exam purpose it is up to you, any option can be taken. Then point number 9, share of profit petroleum. So profit petroleum and cost petroleum are the two terms which are related to joint venture between government and the leaseholder. So the model will work in such a way that government will enter into a joint venture with the leaseholder, wherein whatever is the revenue that is generated out of the operations, extraction of crude oil or natural gas, out of that extracted component, so it will be sold, and when it is sold, the sale will be done by the joint venture. So when it is sold, some revenue will be created by the joint venture. In this joint venture, who is the operating member? The operating member will be the leaseholder. Then who is the other member? Dormant member, that will be government. Government will not invest anything, but just will become a party to the joint venture, member of the joint venture. They will not invest 1 rupee also in the joint venture. Then why the hell they are in joint venture? To take the profit only. Okay, so then this particular joint venture will create a revenue, and the operating member is only making the revenue. So the operating member will incur the expenses and will recover the expenses. That is known as cost petroleum. That cost petroleum is exempted. So why? First of all, it becomes a supply, because operating member providing services to the joint venture and gets money from the joint venture, supply 71AA, any transaction between a person other than individual and its members, supply under 71AA, and it is exempted. So this recovery of expenses by the operating member, that is leaseholder of the joint venture, from the joint venture, is known as cost petroleum, and cost petroleum is exempted. Now, so we got revenue, from that revenue cost petroleum taken by the leaseholder, and that is recovery of expenses which is exempted. Now, government will take its annual royalty. That annual royalty will be taxable or exempted? Taxable, because assignment of right to use natural resources before 1/4/2016 also, only one time charges is only exempted, but not annual royalty. Annual royalty will be always taxable. So therefore leaseholder get cost petroleum, exempted. Government gets annual royalty, that will be taxable. Now the remainder is known as profit petroleum. Revenue minus cost petroleum minus annual royalty is known as profit petroleum. In that profit petroleum, a percentage will go to the government and a percentage will go to the leaseholder. That percentage which the leaseholder collects is not a supply. Why not a supply? He is only investing and he is only taking money. So investment activity is not a supply. Whereas government is investing. No, they are not investing, but they get a profit. So how they got a profit? Because they gave the assignment of right to use natural resources. So this share of profit is supply, again under 71AA. Any activity between a person other than individual and its members. So supply under 71AA, for which they are getting some consideration called as share of profit. That share of profit is exempted. That is this. Share of profit, that is revenue from operations minus cost petroleum minus royalty. Okay. So for assigning right to extract petroleum, crude or natural gas, government receives share in profit on extraction in addition to royalty. So that profit is known as profit petroleum. In this regard, this cost petroleum also I discussed. What is the treatment of cost petroleum? Cost petroleum is exempted. What is cost petroleum? Basically, recovery of expenses. Recovery of expenses by leaseholder. Recovery of expenses by leaseholder. Recovery of expenses by leaseholder. Then number 10, registration charges under any law for the time being in force. So like it can be company incorporation charges or vehicle registration charges or property registration charges, everything will be exempted. Then fee for birth certificate, death certificate, driving license, visa, passport, these are for individuals, but these are received by the business entity on behalf of the individuals. So then services provided to business entity on behalf of the individuals who are their employees, but the service is not directly provided to individuals, service is provided to the business entity. So therefore it is exempted. Then guarantee commission, whenever loans are taken by public sector undertakings, these loans are guaranteed by government. So from public sector undertaking, government will get a commission, guarantee commission. That guarantee commission received by them is exempted. Then excess royalty collection contractor to the extent of variable royalty. So this excess royalty collection contractors are appointed by the state governments, say state government of Tamil Nadu, and we have a leaseholder, and we have ERCC, excess royalty collection contractor. Contract number 1 is between state government of Tamil Nadu and the leaseholder. So as per this contract number 1, so state government of Tamil Nadu will be assigning the natural resources to the leaseholder, and the leaseholder will be agreeing to pay the royalty, okay, depending upon the quantity that is extracted. That is contract number 1. But the type of royalty that is received by the state government will be usually a variable royalty. That is, depending upon the quantum extracted, they will pay the royalty which they don't need. They need fixed royalty. So they want a swap arrangement. For that reason, they enter into another contract. So contract number 2 is with ERCC. So as per this contract, what they are telling is that ERCC will collect the variable royalty from the leaseholder. ERCC will collect variable royalty from the leaseholder, and they will be paying the fixed royalty to state government of Tamil Nadu. Fixed royalty to state government of Tamil Nadu. So therefore, state government of Tamil Nadu is assigning the right to collect the variable royalty to ERCC and remit the fixed royalty. Now in that case, suppose if the variable royalty is 40 lakhs and if the fixed royalty is 50 lakhs. Now in that case, already to government, that is central government, the leaseholder would have paid GST on 40 lakhs. So GST on 40 lakhs. Then ERCC is not required to again pay GST on 50 lakhs because see, ERCC is getting how much? 40 lakhs. On that leaseholder will pay GST. Again, ERCC is remitting how much to state government of Tamil Nadu? 50 lakhs. No need to pay GST on entire 50 lakhs on the difference amount. What is the difference amount? 10 lakhs. So ERCC is required to pay GST on 10 lakhs. Suppose if the variable royalty is not 40 lakhs, if the variable royalty is 75 lakhs, then in that case what will happen? A leaseholder will pay GST on 75 lakhs and ERCC is not required to pay any GST. So because already more amount of GST, that is GST on major amount, is already paid by the leaseholder, which means ERCC is exempted to the extent of variable royalty. So which means when he will pay only when fixed royalty is more than variable royalty, on the difference only he will pay GST. So that is with respect to this. So excess royalty collection contractor to the extent of variable royalty. Then 14 point. P for granting national permit to goods carriage to operate throughout India or contiguous state, that is between states. So if the lorry transporters need to take their lorries, they need to take the national permit charges or permit charges. That permit charges is exempted. These are the 14 specific exemptions. Irrespective of the amount involved in these transactions, it is exempted. However, in the remaining cases, we need to see the general exemptions. So if an activity which is provided by government to business entity is not covered under specific exemptions, then we are applying general exemptions. In the general exemptions, first point you see services other than those covered under specific exemptions, okay, provided to business entity whose aggregate turnover during the previous year does not exceed threshold limit for registration, then it is exempted. For example, there is an advertising agency. That advertising agency receives some hoarding services. For keeping the hoardings, they have to pay some rental charges to government. So they are paying some rental charges to government for keeping the hoardings. Who? That advertising agency. Whether this rental charges to government for placing the hoardings is given anywhere in the list of specific exemptions? No. So which means that it should be applied in general exemptions. Now that advertising agency started their business this year only. So previous year it was not there, means their aggregate turnover during the previous year does not exceed threshold limit for registration, therefore this service is exempted. You understood? So services provided by government to business entity, what service? Renting of hoardings, renting of hoardings. And what is the turnover of the business entity during the previous year? It does not exceed threshold limit, therefore this service is exempted. However, if it is renting of immovable property, this exemption is not applicable, because this first general exemption is not applicable in case of renting of immovable property services, that is specifically given. Okay, then we have second general exemption. What is that? Suppose if that advertising agency is already having business during the previous year, their turnover during the previous year exceed threshold limit, so first general exemption not applicable. But for placing that hoardings, they have paid 4,500 rupees as the rental. So now it will be taxable or exempted? Exempted, because where the value of supply does not exceed 5,000, it is exempted. So these two are two separate independent exemptions, either this exemption or this exemption. Okay, so therefore if the aggregate turnover during previous year does not exceed threshold limit, exempted, or if the value of supply does not exceed 5,000, then it is exempted. Whether this 5,000 point is applicable even in case of renting of immovable property? Yes. The first general exemption is only not applicable to renting of immovable property, but this 5,000 point is applicable in case of renting of immovable property services. Okay. Then previously one point was there. So FSSAI license to food business operators like that, that is omitted, which is not there. It is omitted, which means it became taxable. Whatever I have given there is only exempted. So if it is not there, which means it is taxable. Exemptions completely, there is a revamp, like lot of amendments are there in exemptions chapter. Okay, so therefore whatever I gave there only exempted. If something is not given over there, which means it will be taxable, means that would have been omitted. So specific cases I am discussing wherever it is omitted, but other points and all you try to understand. If it is not there in the book, which means it is taxable. Okay, then note, fines and penalties for breach of law is not treated as consideration and consequently it is not a supply, already we discussed now. So whenever services are provided by government to business entity, we have few cases specific exemptions, few cases general exemptions. In other cases it is taxable. Wherever it is taxable, it will come under RCM. However, in case of renting of immovable property to a business entity, and if the business entity is unregistered, then it will be taxable under FCM. So if the immovable property is to a business entity and the business entity is registered, it will be RCM only. Sir, you said unregistered it is exempted, that is only for residential property by any person to an unregistered person, that case. But here it is government is providing services to the business entity. So government providing renting of immovable property to business entity and the business entity is unregistered, government should pay under FCM, otherwise it will be RCM. So that is about government services. And then, so Department of Post always FCM, transportation of goods or passengers depends. Services to business entity, renting if recipient is registered RCM, if recipient is unregistered FCM. Service to business entity other than renting will be always RCM. Then O for overseeing committee services to RBI. So you can see there. So there is a overseeing committee which will be providing service. Come back to page number 26. There is a overseeing committee. That overseeing committee will restructure the NPAs and this committee will be providing service to RBI, and in this case liability to pay GST is on RBI. Then T for transfer of right to use. So by any person in relation to land, that is TDR, transferable development rights, or floor space index FSI, for construction of a project or long term lease of land for 30 years or more. So that is, I am a landowner, I am transferring TDR, transferable development rights, or floor space index, or long term lease, that is lease for a period more than 30 years. For transferring this, to whom I will be transferring? To a promoter or builder. What promoter or builder will do with respect to that? Use it for construction of immovable property, for which he will be giving me some consideration. On that consideration, I will not pay GST, the promoter or builder will pay GST under RCM. But in this case, the promoter or builder is having a exemption with respect to the inward supply. So please check the exemptions. So here you give the reference, refer page number, what is it, 80, refer page number 81, 81 na? 84, okay. Refer page number 84, refer page number 84. Okay, so those who are watching in YouTube, don't ask me to repeat here because this is not a regular class. Little bit you go backwards and it will be coming and you can continue, please. So say this, exemption with respect to inward supply of FSI, TDR and long-term lease. So what is exempted? See, the promoter builder will be having this inward supply of TDR, FSI and long-term lease. Using that inward supply, they will be constructing some units. So that can be residential units or that can be commercial units. Let's see this with an example, okay. So here you can see what is the value of inward supply of TDR, FSI, 10 lakhs. Means the promoter or builder has purchased the TDR, FSI for 10 lakhs excluding GST at 18%. And what is the advantage of purchasing the TDR? We can increase the number of floors, and FSI also the same purpose, okay. So TDR and FSI 10 lakhs excluding GST at 18%. So what is the GST payable on inward supply? 1,80,000. Using this TDR, FSI, they are making residential flats as well as commercial flats. But how many are the residential flats booked before completion certificate? 28,000 square feet. On this definitely GST payable, correct? On this GST payable. So then there will be double taxation. Why there will be double taxation? On these residential flats also I as a promoter or builder has to pay GST, plus on my inward supply also I need to pay GST. Whatever GST I paid on inward supply I cannot take ITC because the rate of GST for residential units is 1.5% or 7.5% without ITC. So promoter or builder cannot take ITC on with respect to their inward supply because their outward supply is taxable at what rate? 1.5% or 7.5%. Due to that reason, so they will be not able to take ITC. So there will be a double taxation. To avoid the double taxation, only this exemption has been provided. What is this exemption? To the extent of residential units booked before completion certificate divided by total units in the project, that is 50,000 square feet. So how much is the exemption? 1,80,000 into 28 divided by 50. So how much? 1,800,000 will be exemption, which means how much is the GST that is payable under RCM by the promoter or builder? 1,80,000 minus 1,800,000, 79,200. So how much is the exemption with respect to TDR, FSI and long-term lease? Total GST on inward supply into floor area of residential units booked before completion certificate or first occupation, whichever is earlier, divided by total carpet area of the project. So that will be taken as the exemption, okay. So this point, long time due, not yet tested. So this can be tested, mark it as very, very important. So we have seen Sir, CG, got, okay. So S for security lending, I for import of service, and R for renting of motor vehicles, another R for renting of residential property, C for copyright services, G for GTA services, another G is for government service to business entities, O for overseeing committee to RBI, and T for TDR, FSI and long-term lease. Now, salads we are discussing. S for sponsorship services. In case of sponsorship services, liability to pay GST is on recipient if the recipient is firm or body corporate. You can see that. So, sponsorship services, who is the supplier of service here? Organizer of event is the supplier. And who is the recipient? The one who is receiving the service, that is the one who is paying the sponsorship money is the recipient, okay. So now in case of sponsorship service, supplier is organizer, recipient is the sponsorer. Organizer will pay money to the sponsorer. or sponsorer will pay money to the organizer? Sponsorer will pay money to the organizer. So the one who receive money is always supplier. The one who give money is the recipient. So don't get confused. So whenever they say sponsorship services to this person means, so to whichever person, that person is the recipient. Okay. So therefore, if the recipient is body, corporate or firm, it will be covered under RCM. And we have one related exemption with respect to this, that is sponsorship of a recognized sporting event is exempted. You can see that in page number 81, sponsorship of a recognized sporting event is exempted. So what is the recognized sporting event? Any sporting event conducted by National Sports Federation, total 6 here. National Sports Federation, Inter-University Sports Board, and then Paralympic Committee, Indian Olympic Association, which will be conducting national games, okay? And then Central Civil Services Cultural and Sports Board for government employees, then Panchayat Sports Board. So these are the 6 sports bodies. If they conduct any sporting event, that is called as a recognized sporting event, and that particular recognized sports body collects money, sponsorship money from any person, it will be exempted. What if it is not a recognized sports body? For example, IPL board. IPL board is not a recognized sports body. If they receive sponsorship money, will that be taxable? Yes. And who will pay GST? If the recipient, the one who gives sponsorship money is body, corporate or firm, they will pay. Otherwise, so the one who is receiving FCM. So therefore, see here, recognize the sports body, example BCCI, and they provide the sponsorship services to Vivo, example of body, corporate or firm, and Duraply, example of sole proprietor. Both cases it is exempted because it is by recognized sports body. What if it is by unrecognized sports body? It will be taxable. If it is to Duraply, as the recipient is other than body, corporate or firm, it will be taxable under FCM. Suppose if the recipient is body, corporate or firm, they only will pay, that body, corporate or firm only will pay GST under RCM. That is with respect to sponsorship services. Then A for agent services. So total 5 agents are covered under RCM. Insurance agent to insurance company, recovery agent to bank, financial institution or NBFC. So insurance agent providing service to the insurance company will pay GST on the commission whatever they pay to the insurance agent. Same way recovery agent will be providing service to bank, financial institution or NBFC, for which recovery agent get commission on that bank, financial institution, NBFC will pay GST under RCM. Then direct selling agent will provide services to banking company by way of bringing the business to the banking company. So for which the liability to pay GST is on banking company or NBFC. But remember, this direct selling agent should be other than body, corporate, firm or LLP. What if the direct selling agent is body, corporate, firm or LLP? Then the direct selling agent only will pay GST. Be careful with respect to that. The moment you see direct selling agent, don't conclude it as RCM. Direct selling agent again divided into 2, body, corporate or firm including LLP, it will be FCM. If the direct selling agent is other than body, corporate, firm or LLP, then only it will be RCM. Then business facilitator to banking company. So there is a business facilitator who will do the remittance activities. So these remittance activities when they do, so in the place where ATM is not there, so these business facilitators will be doing the remittances. So for which they get per transaction some amount. On that amount, liability to pay GST is on banking company. And these business facilitators can have agents. Yes, they can have agents. And the agent of business facilitator to business facilitator, is it in RCM? No, it is not in RCM. So then it will be FCM. Same way, business correspondents. Business correspondents will be extending the banking operations like branch manager kind of work, account opening, loan processing, etc., for which also they get money. But business correspondent service is not under RCM. But which person is under RCM? Agent of business correspondent to business correspondent. Related to this business facilitator and business correspondent, we have some exemptions. So please refer to exemptions, banking and other financial services. So page number 73. You can see there, business facilitator or business correspondent providing services to banking company in rural area is exempted. Okay. Business facilitator or business correspondent to banking company with respect to its accounts in rural area branch is exempted. Suppose if it is to urban area branch, it will be taxable. So now, so what is that we need to understand here? First, there is a business facilitator, agent of business facilitator, and there is a banking company, and this banking company is having rural branch. This banking company is having rural branch and urban branch. And Mr. A is appointed as business facilitator for rural branch, for which services are provided to the rural branch and commission is earned from the rural branch. Taxable or exempted? This commission exempted. Why? Because business facilitator working for a banking company in rural branch will be exempted. Same way, there is a agent of business facilitator. Say Mr. X is appointed as agent of business facilitator. Now X will be providing services to A, and for which A will give commission. Whether that commission will be taxable or exempted, that commission is also exempted, because as the main commission is exempted, subagent's commission is also exempted. Then there is an urban branch, and Mr. B is appointed as business facilitator of the urban branch, for which Mr. B provided the services, and Mr. B provided the services to the urban branch, and for which urban branch paid the commission. Whether that commission will be taxable or exempted? Taxable. That commission will be taxable and it is coming under RCM. Then who will pay GST? Banking company will pay GST under RCM, correct? Then same way, Mr. Y is appointed as agent of business facilitator. Y provided services to Mr. B, for which B pays the commission, and this commission will be taxable, and it will be taxable under FCM. So because we don't have agent of business facilitator to business facilitator, so on this GST, who will pay GST? Agent of business facilitator, which means business facilitator shall never pay GST. You can remember this in 2 points. Point number 1, business facilitator, agent of business facilitator earning commission from rural area branch is exempted. Then business facilitator shall never pay GST on their outward supplies and inward supplies. On their outward supplies, banking company will pay. On their inward supplies, agent of business facilitator will pay. Now, what if it is not business facilitator but a business correspondent? In case of business correspondent, it will change, because what happens is that, so rural branch, rural branch will be same, no change, exempted. So business correspondent, agent of business correspondent working for rural area branch, commission earned will be exempted. But if they are working for urban branch, it will be taxable, but literally it is opposite. That is, wherever RCM came, now it will become FCM. So means who will pay? Business correspondent will pay. Here it will become RCM, because agent of business correspondent to business correspondent. Therefore, what is the point that we need to remember here again? Business correspondent, agent of business correspondent earning commission from rural area is exempted, and business correspondent shall always pay GST on their outward supplies and inward supplies. On their outward supplies to bank also they will pay GST, on their inward supplies from agent also they will only pay GST to government. Okay. So this we have to remember in 3 points, that is, number 1, business facilitator, business correspondent, agent of business facilitator, agent of business correspondent, earning commission from rural area, is exempted. Earning commission from rural area branch, is exempted. This is the first point that you need to remember. And second point, business facilitator shall never pay GST, on inward and outward supplies. So on their inward supplies and outward supplies, business facilitator shall never pay GST. And number 3, business correspondent shall always pay GST shall always pay GST on inward and outward supplies. See, shall never pay GST means to whom? Shall never pay GST to inward supplies and outward supplies to government. On inward and outward supplies to government. Okay. Next. So these are the agent services. So total 5 agents: insurance agent to insurance company, recovery agent to bank, financial institution or NBFC, and then direct selling agent other than body corporate or firm to bank, financial institution, NBFC, and then business facilitator to banking company, agent of business correspondent to business correspondent. So then we have, so S, A we completed, L, A. L for legal services by individual advocate or firm of advocates and to business entity, then A for arbitrator services. You can see that in page number 85, advocate and arbitrator services. So advocate and arbitrator services, the exemptions are divided broadly into 2. That is, services provided by individual advocate other than senior advocate and firm of advocate, one set of exemptions. Services provided by senior advocate and arbitrator is another set of exemptions. So first set of exemption is normal advocate. Other than senior advocate we call as normal advocate. Normal advocate and firm of advocates, whereas senior advocate and arbitrator. First we will see normal advocate or firm of advocate. 4 exemptions are there. Please check the chart. If they are providing services to an individual other than business entity, is it exempted? Yes. So are they providing service to a business entity? No. Means they are providing service to whom? Individual. Then it will be exempted. Then suppose if they are providing services to another individual advocate or firm of advocate, then also exempted. If they are providing service to central government, state government, local authority, government authority or government agency, that is also exempted. If they are providing services to a business entity whose turnover during previous year does not exceed threshold limit, even then it is exempted. In remaining cases it will be taxable. Then when it will be taxable? Services are provided to a business entity and that business entity is not advocate or firm of advocate, not government, and that business entity turnover during previous year exceeds threshold limit, then it will be taxable. Wherever it is taxable, liability to pay GST is on the business entity under RCM. Okay. What are the 4 exemptions? Services provided to individual other than business entity, exempted. Services provided to individual advocate or firm of advocate, exempted. To a central government, state government, local authority, government authority, exempted. So to a business entity whose turnover during previous year does not exceed threshold limit for registration, exempted. So remaining cases it will be taxable, and wherever it is taxable it will come under RCM, which means advocates will never pay GST. On their outward supply, either it will be exempted or it will be covered under RCM. And whenever my outward supplies are exempted or fully covered under RCM, as per section 23, I am exempted from registration. I am not at all required to get registered. That is one section we have. Then here, suppose if this service is provided by senior advocate or arbitrator, what is the change in the exemptions? Rather than 4, we have only 3 exemptions. That is the first point, same. Services provided to a person other than business entity, individual other than business entity, exempted. So to central government, state government, local authority, government agency, exempted. To a business entity whose turnover during previous year does not exceed threshold limit is also exempted. But what is the point that is missing? Individual advocate or firm of advocate. Then what is the treatment? If senior advocate is providing service to individual advocate or firm of advocate, then we will not take the individual advocate or firm of advocate as the recipient, but in turn they will be providing service to an ultimate litigant, applicant or petitioner. That litigant, applicant or petitioner will be deemed to be the recipient, and accordingly we will determine the taxability. For example, if senior advocate is providing services to if senior advocate is providing services to firm of advocates and this firm of advocates in turn is providing services to an individual, then so senior advocate will be raising invoice to whom? Firm of advocates or to individual? Firm of advocates, they will not raise invoice. So because who will be considered as a recipient to the senior advocate? Even though this activity is done through firm of advocates, but the senior advocate will raise invoice to individual only. That is, the ultimate litigant or applicant or petitioner is only deemed as a recipient to the senior advocate. So senior advocate will raise invoice to individual and the firm of advocates also will raise invoice to individual, which means there will be two invoices. One invoice is of the firm of advocates invoice. Second invoice is the firm of advocate which receives the services of the senior advocate on behalf of the individual. Is it clear or not? So for example, we go to a hospital. That hospital will charge some amount for what? Hospital charges. And that hospital may bring a specialist doctor. That specialist doctor will also raise an invoice on us only, na? That logic, okay? So therefore, senior advocate will be raising invoice to the individual. Firm of advocate also raise invoice to the individual. With respect to the first invoice which is raised by senior advocate, what is the treatment? It is exempted. Why exempted? Services provided by senior advocate to an individual is exempted. Then this invoice is also exempted. Why? Services provided by firm of advocate to an individual is also exempted. So invoice 1 is exempted, invoice 2 is also exempted. Okay. Now, what if this individual is a business entity XYZ Limited whose turnover during previous year exceeds threshold limit? Then in that case, senior advocate providing services to XYZ Limited will be taxable, and who will pay GST? XYZ Limited will pay GST under RCM. Again, firm of advocate providing service to XYZ is also taxable. Who will pay GST? XYZ Limited will pay GST under RCM. Is it clear or not? Sir, what if senior advocate provides service to firm of advocates and we are unable to identify the litigant, applicant or petitioner? That's a hypothetical situation. That's a hypothetical situation because senior advocate, when they provide service to firm of advocates, literally they are not providing service to firm of advocate, they are providing service to an individual. Because why firm is receiving service for their personal capacity, then it will become an individual. You understood or not? For the partners, for their personal purpose, because other than that, officially they cannot directly receive service. On behalf of one person only they will receive the services. So which means that's a hypothetical situation. Okay, what if arbitrator is providing service to individual advocate or firm of advocates? Again hypothetical, because they both operate in two separate line of business. So advocates will do the settlement through the court of law, arbitrator out of the court settlement. So therefore that situation also will not arise. Is it clear or not? So this is the only situation which is possible, but if it is given in the exam, you need to take this ultimate litigant or applicant or petitioner is deemed to be recipient. That's what I have given here. Services provided by senior advocate to individual advocate or firm of advocate is not exempted. In such case, the ultimate litigant, applicant or petitioner shall be deemed to be recipient. Then there is one more point here which we need to understand. So there is a individual advocate. Individual advocates outward supply. Individual advocate is providing services to business entity. So this will be covered under RCM, taxable under RCM, correct? Now this individual advocate is importing some services, import of services. So in case of this import of services, it is also taxable under RCM. The individual advocate is required to pay GST under RCM. Is it clear? Now, if you see that way, individual advocate is compulsorily required to get registered because on their inward supply they need to pay GST under RCM. And again on their outward supplies is exclusively covered under RCM, so they are exempted from registration. So as their outward supplies are exclusively covered under RCM, so they are exempted from registration as per section 23. As their inward supply on which they need to pay GST under RCM, so therefore because of section 24 they need to compulsorily get registered. So which section will override? Section 23 will override section 24. So that is this. An advocate, individual or firm, and arbitrator is not required to get registered as they are exclusively engaged in supplies which are covered under RCM. Section 23 overrides section 24. So this is about advocate and arbitrator services. So yes, A, L, A we completed. Now two more, D and S. So after that we will take break. Say this. D for director services. D for director services and S for security agency services. So there is a director who is providing services to a company or body corporate on which the liability to pay GST is on company or body corporate. But remember, the company or body corporate should deduct TDS under 194. So J, only when in that case GST is applicable, because if the company or body corporate is deducting TDS under 192 of Income Tax Act, then it will become salary. Salary means it is excluded from supply. So therefore TDS should have been deducted under 194 of Income Tax Act to constitute supply. In that case, liability to pay GST is on company or body corporate. Then last, security agency service. Security agency is like manpower but not manpower supply. Not all manpower supply is covered under RCM. So that should be security personnel. They should be supplying what? Security personnel. And security agency services. Supplier should be other than body corporate, and recipient should be registered. But recipient should not be registered for opting composition scheme, or registered only to deduct TDS. Suppose if supplier is body corporate, don't say anything, it will be always FCM. If supplier is other than body corporate and the recipient is unregistered, then also FCM. Supplier other than body corporate, recipient is registered but opting for composition scheme, FCM. Supplier is other than body corporate, recipient is registered, central government, state government or local authority only to deduct TDS, then also FCM. In remaining cases only it will be covered under RCM. Liability to pay GST is on recipient. Okay. So with this we completed section 9 subsection 3, Sir, CG, got salads. Along with that the relevant exemptions also we have seen. Now we will take a break. We will meet at 2:15. Yes, 45 minutes. Okay, 2:20 we will meet, and so we will be continuing with section 9 subsection 4, inward supplies of promoter or builder from unregistered person, 9.5 e-commerce operator, and then so exemptions as we have completed little bit. So the remaining exemptions also will complete and then come back to segment 3. Okay. So because exemptions from here we completed few exemptions, so remaining also we will try to complete, that's why. Okay, welcome back. New, not necessary. I have already given one addendum to the old edition of solved workbook in my website. I don't know whether you are aware of that or not. You can just go to my website. In the downloads, you can see addendum to previous edition. So just see that. I have given all the corrections in that. Okay. So section 9 subsection 3, we have completed list of services which are covered under RCM. Sir CG got salads, and then 9 subsection 4, before that, in 9 subsection 3 there is one exception. That exception is in case of transportation of goods by vessel from where to where, outside India to India, where both supplier of service and recipient of service is located outside India. So then liability to pay GST is on importer of such goods. For example, there is a shipping company. That shipping company is located outside India, and shipping company is providing services to an exporter, and that exporter is also located outside India. Now with respect to this freight, for transportation of goods from outside India to India, liability to pay GST is on importer of such goods. Importer to the transaction of transportation service, importer is no way connected to the transaction. Importer of goods is neither supplier of service nor recipient of service. Here the service is transportation service. For the transportation service, importer is neither supplier nor recipient, but a third person, but they need to pay GST. So why is it exception to 9 subsection 3? Because in 9 subsection 3, generally who will pay GST to government recipient? But in this case, importer of goods, even though he is not recipient, but he is having liability to pay GST. That's what I mean to say as exception to 9.3. Okay. Then next we have 9 subsection 4, purchases from an unregistered person. That is, there is a promoter or builder who is making purchases from an unregistered person. That promoter or builder is required to pay GST under RCM. So this has to be decided in 3 steps. So we have to compute this in 3 steps. Step number 1, first check capital goods. Capital goods purchased from registered person or unregistered person. If capital goods is purchased from a registered person, GST not payable under RCM. If capital goods is purchased from unregistered person, then they need to pay GST under RCM section 9 subsection 4 at the rate applicable to capital goods. So suppose if the capital goods is taxable at 12%, then 12%, capital goods at 28%, then 28%, whatever is the rate applicable to that capital goods, we need to pay. That is step number 1. And step number 2, you need to see cement. Cement, we need to check whether it is purchased from a registered person or unregistered person. If cement is purchased from a registered person, okay, no issue. If cement is purchased from unregistered person, we need to pay GST under RCM at what rate? 28% on that cement purchased from unregistered person. Then, so with respect to cement, always we need to pay GST under RCM at 28% when it is purchased from an unregistered person. Then step number 3, other goods and services purchased or received from an unregistered person divided by total inward supplies. Total inward supplies, inputs and input services other than TDR, FSI, long-term lease. Why TDR, FSI, long-term lease should be excluded? Because anyhow on this TDR, FSI, long-term lease 9 subsection 3 will be applicable, anyhow it is RCM. Then electricity, because there is no GST on electricity, high-speed diesel, motor spirit and natural gas. These 3 are no way connected to construction due to that reason. So other than electricity, high-speed diesel, motor spirit and natural gas, the other things are there. Alcoholic liquor for human consumption, no way connected to construction. That's why it is not given. And then crude oil, no way connected to construction. ATF, no way connected to construction. That's why those 3 are not given. But these 3, even though connected to construction, but these are all non-taxable supplies. So therefore, total 5 exclusions we need to make. What are they? Electricity, petrol, diesel, natural gas, TDR, FSI and long-term lease. Okay. So out of this, 20% is allowed to be purchased from an unregistered person. Suppose if it is more than 20% purchased from an unregistered person, we need to pay GST under RCM on the differential amount at what rate? 18%. At 18%. So the 3 steps. So this already what I have given itself is like a simple chart, but I am just simplifying it further. So what we need to see is that step number 1, take capital goods. Capital goods divided into 2. Capital goods from URP or RP. So RP, no GST under RCM, correct? No GST under RCM. Suppose if it is from URP, unregistered person, then what we need to do? GST under RCM at applicable rates, Then second step, you need to see cement. Again cement, we need to see from RP or URP. Suppose cement is purchased from registered person, we don't have to pay any GST under RCM. Suppose if it is purchased from unregistered person, then GST is payable under RCM at what rate? At 28%. This is step number 2. Then step number 3, other goods and services. Other goods and services. Okay. Other goods and services from whom? From unregistered person. Other goods and services from unregistered person divided by total inputs and input services. Total inputs and input services. Okay. Total inputs and input services. Other goods and services from unregistered person divided by total inputs and input services excluding those 5. What are they? Excluding TDR, FSI, long-term lease, electricity, petrol, diesel, then natural gas, excluding this, okay, in the denominator. So total inputs and input services excluding this. Cement should be taken, cement should be taken in the denominator, but in the numerator, cement already considered here, second step. So other goods and services means other than cement divided by total. We need to see what is the percentage. So if this percentage is, into 100, if this percentage is, so greater than, one second. So is it less than or equal to 20%? So then no GST under RCM. No GST under RCM. So if it is less than or equals to 20%, because 20% is allowed. If it is greater than 20%, what we need to do? Pay GST under RCM. Pay GST under RCM at what rate? At 18% on differential above 20%. On differential above 20%. So this is what we need to keep in mind. Okay. For example, so let's take a situation. We are making purchases of inputs from RP, URP, input services and cement. Okay. Input services and cement. So inputs 100 from registered person, 20 from unregistered person, input services 80 and 40, cement 90 and 10 from unregistered person. Now in that case, how much is the GST payable under RCM? First we need to see the total of this. What is the total of this? 100 plus 80, 180, 180 plus 20, 200, 290, 300, 340, correct? 340 lakhs. Now, step number 1 not applicable because we don't have cement. We don't have capital goods. So, step number 2 will be applicable cement. Cement purchased from unregistered person 10. So, therefore, on 10 lakhs, we need to pay GST at 28%. So, that will be 2,80,000. Then step number 3 will be applicable. That is other inputs and input services from unregistered person. What is that? 20 plus 40, 60. 60 divided by total 340. So 340 into 100. So 60 divided by 340 into 100 is 17.60 divided by 340. So 17.65%, which is less than 20%. So we don't have to pay any GST. So therefore total GST under RCM is 2,80,000. Suppose if this 20 plus 40 has changed to somewhere like 60 and 60. So now in that case the total will be 400, and first one same, no change. And the next case 60 plus 60, 120. 120 divided by 400 into 100, which is 30%, more than 20%. So therefore what we need to do, we need to take the difference. What is the difference? 10%. 10% of what? 400. 10% of 400, that is 400 lakhs into 10%, and that extra 10% will be taxable at what rate? 18%. So therefore 400 into 10% means 40 lakhs. 40 lakhs into 18%, so that will be 7,20,000. So total GST payable under RCM will be 7,20,000 plus 2,80,000, that is 10 lakhs. Hope you understood. So these are the three steps you need to remember. Step number 1, capital goods from unregistered person, pay GST under RCM at applicable rates. Cement from unregistered person, pay GST under RCM at 28%. Other goods and services from unregistered person divided by total inputs and input services. When you take total inputs and input service, you should not take TDR, FSI, long-term lease, electricity, petrol, diesel and natural gas. And into 100, you need to see is it less than or equals to 20%, because that is allowed. And no need to pay any GST under RCM. If it is beyond 20% on the difference amount only, you need to pay GST under RCM at 18%. On the differential amount above 20%. So these things, this point actually 9 subsection 4 can be tested in MCQ like this. They will give a data like this and they will ask you to compute how much is the GST payable under RCM. That is with respect to this. Then 9 subsection 5. 9 subsection 5, liability to pay GST on e-commerce operator in case of notified services. What are the notified services? Total 4 notified services. We have HATE, already we discussed. In that E point, you see, in case of supply of food by a restaurant in a hotel having a declared tariff of greater than 7,500 unit per day, means there is a hotel which is like a 3-star or 4-star or 5-star hotel. That hotel, how can we know that it is a 3-star, 4-star, 5-star hotel? So wherein per day room tariff is greater than 7,500 rupees. So that type of hotel. In that hotel there will be a restaurant. In that luxury hotel there will be a restaurant. If that restaurant is supplying food through a e-commerce operator, yes, nowadays, so luxurious hotels also, restaurants are selling food through e-commerce operators, okay. So like GRT and all, so what they are doing, so their luxurious hotel, they started cloud chain and this cloud kitchen concept, and they are selling food. So because people are ready to eat at paying a huge price also, like one dinner 4,500 rupees also people are ready to spend sitting at home. Yes. So dinner, yes, because 2-3 people they will be ordering together, 4,500, 6,000, like that also people are ready to spend. I know many people I am seeing, not that I am doing it, but many people I am seeing. So now from these restaurants, if food is purchased through Swiggy, Zomato, liability is not on Swiggy, Zomato, but liability to pay GST is on supplier only, that is hotel only, not on e-commerce operator. So this exception you please remember. Supply of food by a restaurant in a hotel having declared tariff greater than 7,500 per unit per day or equivalent, not covered under 9(5). Liability to pay GST is on restaurant only, not on e-commerce operator. Normally, if the restaurant is there, normal restaurant, okay, normal restaurants, if they sell food through e-commerce operator, liability to pay GST is on e-commerce operator. Now, these important points, and already we have seen in the first 2 cases, supplier should be unregistered, then only it is notified under 9(5). Next 2 cases, supplier may or may not be registered, and then also it will be notified under 9(5). So first point, when e-commerce operator is liable to pay GST on above services, they are not required to deduct TCS. There is a concept of TCS under section 52. So section 9 subsection 5 and TCS under section 52 are mutually exclusive. So which means that whenever liability to pay GST on the transaction itself is on e-commerce operator, they are not required to deduct any TCS. Then only in case of notified service under 9.5 e-commerce operator is liable to pay. Whereas in case of other than notified services like supply of goods through e-commerce operator or supply of other than these notified services through e-commerce operator like Book My Show, etc., liability to pay GST is on supplier. For example, Amazon, Flipkart, Book My Show, etc. In that case, liability to pay GST is on supplier, not on e-commerce operator. Then e-commerce operator will have liability to pay GST on what? Only on the commission or other charges that they are collecting. Then every e-commerce operator is liable to pay GST, and who is liable to deduct TCS is compulsorily required to get registered. Means those e-commerce operators who are covered under 9.5 is compulsorily required to get registered, or if they are required to deduct TCS also, they are compulsorily required to get registered under section 24. Also, every supplier of goods through e-commerce operator is also compulsorily required to get registered. Whereas supplier of services through e-commerce operator is not compulsorily required to register. They need to register as and when their aggregate turnover exceeds threshold limit. Supplier of services, which services? Notified service or other than notified services, they need to register only when aggregate turnover exceeds threshold limit. And this is the exception which I was referring to in case of transportation of goods by vessel from outside India to India, where both supplier of service and recipient of service is located outside India. Then it is taxable under RCM, where liability to pay GST is not on recipient but on a third person. Who is that third person? Importer of such goods. So with this we completed section 9, that is 9192 FCM, 93 RCM, 94 RCM, 95 e-commerce operator, liability to pay GST. Then we have TDS and TCS, the last portion in segment 2. So TDS is applicable under section 51 and TCS is applicable under section 52. So whenever we are making supplies to notified recipients, the notified recipient will be deducting 2% towards TDS on the amount that they are remitting. Who are those notified recipients? That notified recipient is government, that is central government, state government, local authority, then government agency or public sector undertaking, or government body where equity participation of government is greater than or equals to 51%. So this is the notified recipients. If we are making supply to these notified recipients, then they will be remitting some money to us now. On that money that they are remitting, they will be deducting 2% towards TDS. If it is interstate supply, 2% towards IGST. If it is intrastate supply, 1% towards CGST, 1% towards SGST. So see the rates. So notified recipient at 2%. Okay. Then, so what is the non-applicability of TDS? Suppose if the supplier is unregistered, what is the reason behind this TDS? So mainly to identify how much is the value of supply of the supplier. So because that notified recipient, when they are deducting TDS and they are remitting it to the government will know how much is the value of taxable supply of the supplier, so that he cannot suppress his turnover and he will be paying GST on the entire amount. For example, your government, from you I am receiving somewhere like 1 lakh. So now in that 1 lakh you are deducting 2%. So 2000 you have deducted. So now 2000 you are remitting against my GSTIN. Those 2000 rupees will come into my electronic cash ledger. Now government will come to know, GST department will come to know. So 2000 rupees deducted means 2%. If it is 2000, then what is the value? 1 lakh. If I show a transaction with less than 1 lakh, so using this TDS, they will be asking me, why are you declaring a value less than whatever money that you have received? So mainly for the trial only they are bringing this TDS concept. So when they want to recover GST from the supplier only, TDS is required. Supplier himself is unregistered, he is not having GST liability, then what is the need of having that TDS? So therefore TDS is not applicable if the supplier is unregistered. Our supplies are exempted or non-taxable. Again, no GST on that, so no need to have any TDS. And if the value of supply under the contract does not exceed 2,50,000 rupees, So total value of supplies under the contract does not exceed 2,50,000 rupees, then TDS is not applicable. If it exceeds 2,50,000 rupees under the contract, TDS is applicable. While determining the value of supplies under the contract, we need to include GST or exclude GST? Exclude GST. And then one more point here it is, once TDS is applicable, so we need to compute not on the contract value TDS, on the amount that is remitted. For example, I entered into contract with state government, your state government, I entered into contract with the state government for supply of face mask of 8 lakh face mask over a period of 3 months, and each face mask is 50 paise. Okay, so therefore total 8 lakhs into 50 paise is 4 lakhs. What is the total value of supply under the contract? 4 lakhs, which exceeds 2,50,000. But entire 8 lakh mask I am not delivering in once. So first month I am delivering 2 lakh mask and I receive 2 lakh rupees from you plus GST. Now now TDS is computed only on 2 lakhs. So now TDS is computed only on 2 lakhs. But 2 lakhs does not exceed 2,50,000, that we should not see. The value of supply under the contract is total 4 lakhs, which exceeds 2,50,000. So TDS is applicable, but what you are remitting to me now is only 2 lakhs. So on that only TDS you will deduct. Second month I will deliver, so 2 lakh masks. So the 2 lakhs worth of masks. So on that, you understood or not? So therefore it is depending upon the payment that you are sending. For example, first month you are giving me 1.5 lakh, second month 1.5 lakh, and balance amount in the third month, like that. So depending upon the money that you are remitting to me, depending upon that only TDS will be deducted. Please keep that in mind. Okay. Then supplies between notified recipients, that is between these recipients, if there is any supplies, then also TDS is not applicable. Okay. That is supply by other than notified recipient to this notified recipient, then only TDS. Between them, if there is any transaction, TDS not applicable. Then recipient liable to pay GST under RCM, also TDS not applicable. Then location of recipient and place of supply not in the same state. So what does it mean? So it means that, say, location of supplier is located in Tamil Nadu, who is an architect. Supplier is located in Tamil Nadu, architect. And recipient is Andhra Pradesh government, and so place of supply immobile property. Okay, place of supply is property. That place of supply property is in Tamil Nadu. Now in this case, what has happened? It is a intra-state supply. As location of supplier is in Tamil Nadu and place of supply is also in Tamil Nadu, it is an intra-state supply, chargeable to CGST and Tamil Nadu SGST. So therefore recipient is in Andhra Pradesh, so they cannot deduct 1% towards Tamil Nadu SGST because they are not registered in Tamil Nadu. Due to that reason, TDS is not applicable. So when TDS is not applicable, if it is a intra-state supply, and location of recipient and place of supply is not in the same state. Okay. It is an intra-state supply, location of recipient and place of supply not in the same state. So then in that case, so TDS is not applicable, because simple logic, here AP government cannot deduct 1% towards SGST of Tamil Nadu and remit due to that reason. So TDS itself is not applicable. So what you need to remember? Location of recipient, not supplier. Location of recipient and place of supply not in the same state, different states, then TDS is not applicable. So these are the non-applicability of TDS. TDS computed on amount remitted to the supplier by the recipient. It is computed on the amount remitted. TDS not applicable if it is an intra-state supply and recipient is in another state. That is the point we have seen. Next, look into the computation. So TDS is computed on the value of supply excluding GST, and whatever TDS that is deducted needs to be remitted to government by when? 10th of the month following every month. And they need to file one return. What is the return to be filed by TDS deductor? GSTR 7. And they also needs to give one certificate in GSTR 7A. And that certificate, previously there was a time limit, now there is no time limit. And if there is any delay in remitting the TDS or not deducting TDS, etc., then there is a late fee for delay in filing return. First, there is a interest also. Interest on a what account? So that is the TDS not deducted or deducted but not remitted. For the delay in paying TDS, interest will be payable at 18% per annum from the first day after due date till the date of payment. What is the due date? 10th of the month following every month is the due date. Till the actual date of payment there is interest. Plus late fee is also applicable for delay in filing return. What is the return? GSTR 7. So for GSTR 7 return, late fee is what? 25 rupees per day subject to maximum 1000 under each act. And are they required to file any annual return? No, they are not required to file any annual return. So these are the points related to TDS. Now TCS you see, so that like a comparison you will be able to understand. So TCS is under section 52 and TCS is to be deducted by whom? E-commerce operator. Means whenever I am making supplies through an e-commerce operator, is it notified services or other transactions? Other transactions. Because for notified services TCS is not applicable. So other transactions through e-commerce operator, e-commerce operator will be deducting 1% towards the TCS and will be remitting in my name under my GSTIN. So it will come into my electronic cash ledger which I can adjust against my liability. Now again, what is the reason for TCS? That is e-commerce operator will report say 1%, 5,000 rupees is reported as TCS. 5,000 rupees is 1% means what will be the value of the supplier. So now the supplier cannot suppress the turnover. So for that reason this TCS has been brought just like TDS only. But TCS is deducted by e-commerce operator and non-applicability of TCS. So when TCS is not applicable if the supplier is unregistered, same point, or if the suppliers are exempted or non-taxable, same point, and notified service under 9.5 already we have seen in 9.5. Extra you need to remember, payment is not collected by e-commerce operator, means payment is directly collected by the supplier. Then in that case TCS is not applicable. And so what is the time limit by which the TCS has to be paid? Same time limit, 10th of the month following every month. And are they required to give any certificate? No, but they need to file one return. What is the return? GSTR 8. Time limit of filing GSTR 8, same, 10th of the month following every month. And while computing TCS, we need to reduce the sales returns. So sales during the month through e-commerce operator minus sales returns. So payment towards contract value minus returns during the month. And is there any interest payable for delay in paying TCS? Yes, same interest provision is applicable, that is 18% per annum from the first date after due date till the date of payment. What is the due date? 10th of the month following every month. And the late fee, there is a difference, you please see. In case of TDS, the late fee will be 25 rupees per day subject to maximum 1000 rupees under each act. But in case of TCS, it is 100 rupees per day subject to maximum 5000 rupees under each act. And TCS deductor, that is e-commerce operator, is required to file an annual return in GSTR 9B by 31st December of the succeeding financial year. And there is a general penalty, that is 25,000 up to 25,000 under CGST and up to 25,000 under SGST for non-compliance. And there is a specific penalty also for the default, TDS TCS default under 122 subsection 1, which is 100% of the TDS or TCS or 10,000 whichever is higher. So this is the provisions related to TDS TCS, and this TDS TCS deducted by notified recipients or e-commerce operator is reflected in the supplier in which place? GSTR 2A, not 2B, GSTR 2A, and that amount will be going into the supplier's electronic cash ledger, not credit ledger, which means it can be used for payment of any liability, because the balance in credit ledger can be used only for payment of tax, but the balance in cash ledger can be used for payment of tax, interest, penalty, fee and others. And time limit for rectification of TCS return. TDS return, there is no time limit, like no rectification of return. But in case of TCS return, GSTR 8, we can rectify. What is the time limit for rectification? There are total 5 time limits. Now it has been streamlined as the same time limit. So that is the time limit for availment of ITC, section 16 subsection 4. Then time limit for issuance of credit note, section 34. And the time limit for rectification of GSTR 1, time limit for rectification of GSTR 3B and time limit for rectification of GSTR 8. These 5 time limits is same, 30th November of the succeeding financial year or date of filing annual return, whichever is earlier. So what are the 5 time limits which is same? Time limit is same. Time limit for availment of ITC, issuance of credit note, rectification of GSTR 1, rectification of GSTR 3B, rectification of GSTR 8. So the time limit is 30th November of the succeeding financial year or date of filing annual return, whichever is earlier. Now this is an illustration on TCS. There is a supplier who is making supplies through an e-commerce operator to the buyer. First, supplier will enter into contract with e-commerce operator to sell the mobile, and for each and every mobile sold by Flipkart e-commerce operator, Flipkart will receive a commission of 1000 rupees plus GST 18%. Now, buyer is placing an order with Flipkart for the mobile. Now, supplier delivers the mobile along with the invoice. So, invoice is for what value? 10,000 plus 28%, 12,800 rupees. Now, e-commerce operator will make delivery of the mobile and buyer will pay how much? 12,800 rupees. Now, out of this 12,800 rupees received by e-commerce operator, they have to first pay GST on the commission. So, what is the GST on the commission? Commission is how much? 1000. On that GST will be 18%. So, 1000 into 18%, first they need to pay GST on commission 180 rupees, and they need to even pay TCS. TCS will be how much? 1%. While computing TCS, remember, don't include GST. So, TCS is computed on the value excluding GST. What is the value excluding GST? 10,000. So, 10,000 into 1%, that is 100 rupees. So, this 180 rupees which is paid by e-commerce operator and 100 rupees which is paid by e-commerce operator as TCS will be reflected in the supplier's electronic credit ledger and cash ledger respectively, correct or not? So, this 180 rupees whenever e-commerce operator is paying GST, e-commerce operator will raise invoice to supplier, and in that invoice 1000 rupees plus 180 will be mentioned. So, ITC on the commission paid will be 180. Then whenever they pay TCS 100 rupees, this 100 rupees will be taken as credit by the supplier, okay? Under which ledger they will take this TCS credit? Cash ledger. And this 180 rupees will be coming in which ledger? Credit ledger. Now, what happens is that what is the amount to be remitted by the e-commerce operator? E-commerce operator has got 12,800. In that, they will deduct their commission 1000 rupees, correct? And then they pay GST on the commission also, that will be deducted. Then TCS they will deduct 100. So, what is the remaining amount that they will remit? 11,520. And now the supplier has to pay GST 2,800, correct? Gross. So, 10,000 into 28%, 2,800. But while paying the 2,800, they can take this 180 and 100 rupees as adjustment. So, 2,520 will be the net liability. Done. So, this is about TCS. So, mainly here this supplier may suppress the value. Supplier will say that he got only 11,520. And what he will do? 11,520 into, so 28 divided by 128. So that is 2,520 he will take. From the 2,520, he will reduce minus 180 minus 100. So 2,240 he will pay. He will say, so this much only I received. Because in my bank account also this much is only there. So therefore this is only my value. Like that he may suppress. Due to that reason only they brought the TCS to identify as to what is the value of that particular supplier. Is it clear? Next. In this segment 2, the last area is circulars related to supply. So, there is one query here. So, general penalty 25,000 rupees under section 125 and specific penalty TDS TCS default. So, is both applicable at the same time? No, not both applicable at the same time. That is, if TDS TCS is deducted but not paid, not deducted, then it will be specific penalty, that is 100% of the TDS TCS or 10,000, whichever is higher. But for compliance means what? Returns. For return filing, there is late fee as well as general penalty. So, many people are of the opinion that for delay in filing returns, only late fee we need to pay. No, not only late fee, there is even general penalty under section 125. That is up to 25,000 under CGST, up to 25,000 under SGST. That's the reason why clearly I mentioned there for non-compliance. Non-compliance means what? Return related non-compliance. Okay, that is if they are paying, like if they are filing the return late, etc. But if there is a default, when there will be default, not at all paid, not at all deducted or deducted but not at all paid, then there will be a default. then only this penalty will be coming into picture. Then summary of some important circulars. So first one, whether interstate movement of conveyances carrying goods or goods or people, so between distinct persons, whether it is supply or not a supply, it is not a supply. That is, there is one distinct person to another distinct person. There is a conveyance, that conveyance carrying the goods. So whether GST payable on the goods? Yes. Whether GST payable on the conveyance? No. Because the conveyance, after unloading the goods, the conveyance will be returning. What if the conveyance itself is goods? Then GST payable. For example, from Ashok Leyland factory to depot, the lorry is going. So that lorry itself is the goods there. So it is for further supply. So GST payable on that lorry. Otherwise, mere movement of goods or movement of people or mere movement of conveyance for repair purpose, no GST payable on the conveyance. Same way, on spare parts which are sent from one distinct person to another distinct person, these spare parts are not for further supply but for consumption in the recipient distinct person, then also GST not payable. For example, one factory to another factory, so they are sending some spare parts. Is it for further sale or for consumption in the second factory? Consumption in the second factory, then also GST not payable, that is this. So it is clarified that such interstate movement of train, buses, conveyance. So you just remember train, bus, truck, tanker, trailer, vessel, container, aircraft are simple conveyance. So it is clarified that interstate movement of conveyance carrying goods or passengers or both or for repairs or maintenance shall not constitute supply and not chargeable to GST. However, repair service one person is doing now. I am sending the lorry for repairs. On lorry no GST. But after doing repairs, you are providing me the repair service. So on that repair service, GST will be applicable. However, applicable GST as the case may be shall be leviable on repairs and maintenance done for such conveyance. Also, the above circular is extended to interstate movement of rigs, tools and spares and all goods on wheels like cranes, where the movement of such goods is for further supply of the same. So therefore, what does it mean? So the movement, that is spares etc., for that also it will be applicable, except in case where the movement of such goods is for further supply. So I am sending the spares to you. You are my distinct person. Tamil Nadu to Andhra Pradesh. And for what? Further supply or for consumption there? For consumption there, not a supply. For further supply, you are subsequently selling. Then when I am sending the goods to you, it will be treated as supply. And even though this circular is given in the context of interstate, but it is equally applicable for intrastate movement also between distinct persons. Okay. Then next circular, when an agent is treated as acting on behalf of principal. So two cases. If agent is raising invoice in his name for sale transaction, or in case of purchase transaction, invoice is in the name of the agent, then agent is acting on behalf of principal, then between principal and agent, it will become supply under 7(1)(c). Then whether the activity of printing of books or printing activity, will it become supply of goods or supply of services? The printing activity is divided into two. So what constitutes the principal supply? Based on that we need to treat. If the material constitutes principal supply, then it will be treated as supply of goods. If the printing activity constitute principal supply, then it will be treated as supply of service, because in printing there are two elements. One is material, that is paper and ink, and the next element, that is service element, is printing, binding, etc. Now if paper and ink constitutes the principal supply, for example tissue papers or some postcards etc., so wherein just the logo will be printed, so the printing activity is ancillary there, the material is only the principal supply, then entirely it will be treated as supply of goods. Suppose in case of books, magazines, flyers, brochures etc., so there material, that is paper and ink, is ancillary, because the printing and binding is only principal supply, then it will become supply of service, that is this. Then next, whether the activity of bus body building is supply of goods or supply of service, again we need to classify it based on principal supply. Suppose in bus body building they purchase the material like steel sheets, iron rods etc., and they do the fabrication in order to bring the structure body on the bus. So then in that case, what constitutes principal supply? Definitely the fabrication. So because the material is not the principal supply, the fabrication is only the principal supply, so entirely it will be treated as supply of service. Then whether rethreading of tires is supply of goods or services. If the old tire belongs to the recipient, you are giving me the old tire, I do the rethreading and give. So the goods belong to the recipient, means what I do is only the process. So it will come under supply of service. Suppose if I buy the old tire and sell the rethreaded tire, means it is sale of goods. Sale of rethreaded tire will be sale of goods. Then whether priority sector lending certificates is treated as goods. So priority sector lending certificates are basically purchased by one bank from the another bank in order to meet the target of deficiency in giving loan to the priority sector. So these certificates should not be treated as securities traded in the stock market, because these certificates are traded only in the e-Kuber portal and they will not be having the character of securities. Due to that reason, they are treated as goods and it will be chargeable to GST. Okay. And we discussed one point that it will be treated as interstate supply and chargeable to IGST. And even it will come under RCM, but we don't have that in syllabus. That is, whenever there is trading in PSLC, so it is RCM goods, but RCM goods we don't have in syllabus, so you don't have to remember that, but you remember that it is a deemed interstate supply. Then whether artwork sent by artist to the gallery, so is it supply at the time of sending it to the gallery, or is it supply at the time when gallery subsequently selling it to a buyer? So gallery subsequently selling it to a buyer, because if I am an artist, I am sending the artwork to the art gallery will never pay me money whenever I am sending it to the art gallery. Only when that artwork is getting sold from the art gallery, at that time only art gallery will pay money to the artist. So therefore, the supply is not on the date when artist is sending it to the art gallery. The supply happens in the hands of artist only when the art gallery subsequently sells it to a buyer. That is this circular. Then whether tenancy rights or pagadi system is chargeable to GST. Taxability of tenancy right. Tenancy right is whenever a tenant is having a lock-in tenancy agreement, that is known as tenancy right, means for a fixed period the property will be in his possession and even owner of the property is not having right to ask him to vacate. Suppose if owner of the property asks him to renounce his tenancy right, or if the tenant transfers the tenancy right to any other person, he will receive a premium amount. That premium amount is called as tenancy premium. So whenever he renounces, the owner comes and asks him, you vacate the property, then the owner has to pay a premium to that person, that is tenancy premium. Or when tenant will transfer the tenancy right to another tenant, he will collect some extra amount because he invested something on the property for infrastructure. So that extra amount that he gets is known as tenancy premium. That tenancy premium will always be taxable in the hands of the tenant. Whereas the share of tenancy premium received by the property owner, though this tenant is getting some tenancy premium, he will share some tenancy premium with the property owner. That tenancy premium received by the property owner will be taxable if the rent of that property is taxable. If the rent of that property is exempted, then the share of tenancy premium is also exempted. So, in relation to residential property exempted, in relation to commercial property, it will be taxable in whose hands? This is in whose hands? Property owner, property owner, property owner, property owner. What about tenant? In the hands of tenant, in the hands of tenant, in the hands of tenant, always taxable. In the hands of tenant, always taxable, whatever may be the type of property. Only in one case, unregistered person. In relation to residential property, when it is exempted, residential property to an unregistered person is exempted. So then only for that type of property, if tenancy premium is received by the property owner, it is exempted. So that's what you need to remember. If the rent of that property is exempted, the tenancy premium in relation to that property also exempted. If the rent of that property is taxable, tenancy premium for the property also taxable. And tenancy premium we don't have under RCM, so definitely it will be FCM. But tenant case, always it will be taxable, no need to analyze the rent of that property, etc. Then GST on director's remuneration, so this already we discussed. if the remuneration is deductible to TDS under 192, then the money received by the director is covered under his income from salaries, so which is excluded from supply. If the remuneration is chargeable to TDS under 194J, then the remuneration received by the director will come under PGBP or IFOS and it will be covered under supply. On that, the liability to pay GST is on the company or body corporate under RCM. Then del creditor agent. Del creditor agent is an agent who will be first making payment to the principal as and when the sale takes place, and thereafter recovers the money from the customer along with interest. For example, if I am a del creditor agent, you are my buyer. So you are coming and purchasing the goods. Actually, if I am a normal agent, only when you give money to me, I will deduct my commission and remit the balance amount to my principal. Okay. But if I am a del creditor agent, what I will do? First I will make the payment and thereafter leisurely I will recover it from you. So as I am giving you a credit period, I will be collecting an extra interest component from you. Okay. Now this interest is chargeable to GST or exempted. Interest is broadly divided into two in GST. In entire GST, interest comes in two places. Number one, interest on loans, advances, deposits is exempted. Interest on account of delay in receipt of consideration will be included in the value and taxable accordingly. Okay. So which means if the original supply is taxable, interest also taxable. If the original supply exempted, interest also exempted, because interest is not a standalone transaction. Interest should be included in the value of supply. That is the meaning there. So interest on account of delay in receipt of consideration. So interest, late fee, penalty for delay in receipt of consideration, don't tax it on standalone basis. It should be included in the value of original supply, value of supply. Okay. So now here, whether the interest collected by the del creditor agent will be interest on loans, advances, deposits, or interest on account of delay in receipt of consideration. For that they gave a circular. If the del creditor agent is acting on behalf of principal, which means del creditor agent is only raising the invoice to the buyer, means to the buyer who is the supplier, del creditor agent. So then whatever interest is paid to the del creditor agent is on account of delay in paying consideration. Therefore, that interest will be included in the value and chargeable to GST. If the del creditor agent is not raising invoice in his name, then for the buyer who is the supplier, principal is the supplier, then del creditor agent is mere financier. So therefore, interest collected by del creditor agent will be interest on loans, advances, deposits, and it will be exempted. Got the clarity? So invoice raised by del creditor agent in his name, then del creditor agent is the supplier. So therefore, interest collected will be interest on account of delay in receipt of consideration. So include in the value and taxable accordingly. If invoice is not raised by del creditor agent in his name, then del creditor agent is mere financier. So then interest collected by him will be interest on loans, advances, deposits, and it will be exempted. That is this. So with this we completed segment 2 fully. Okay. And let's take exemptions. Reason being, already part of the exemptions we have completed, so that's why I just wanted to complete it fully. Take page number 71. Page number 71, exemptions in GST, segment 7. First, agriculture related services. In that, the first point you see, any service in relation to agriculture or agricultural produce is exempted. That is, someone is doing agriculture or agricultural produce is there. So to that person, if I am providing any service, that is exempted. So what is the meaning of agriculture? Agriculture means, so carrying out like plantation, any kind of plantation that can be for food or that can be for other than food, like teakwood plantation, rubber plantation, every kind of plantation will come under agriculture. Not only plantation, but rearing of life forms of animals. So rearing of life forms of animals other than horses. For what purpose? Food, fiber, fuel, raw material, or any other similar products. So food, example, poultry, fisheries, etc. Fiber, that is sericulture, silkworm farming. And then we have fuel, that is cattle rearing. So for the purpose of using it in the agriculture, ploughing, etc. and all. Then then raw material, honeybee farming, then any other similar products like sheep farming for the purpose of wool or leathers, etc. So that will be coming under agriculture. So what is the meaning of agriculture? Cultivation of plants and rearing of all life forms of animals except horses. For what purpose? Food, fiber, fuel, raw material or other similar products. Now you are doing that agriculture. Now I am providing any service in relation to that agriculture, that service will be exempted. Then agricultural produce. Agricultural produce means what? The primary produce out of agriculture on which no processing is done. For example, tender coconut, no processing is done. That is agricultural produce. And some processing as is usually done. So the tender coconut dried for some more days and we remove a layer. So coconut is there. Still that is also agricultural produce, because carrying out any other process on the agricultural produce usually by a cultivator which does not alter its essential characteristics but makes it marketable for the primary market. So yes, coconut is used for primary market and it does not change the essential characteristics. Again, that coconut, if we sun dry for some more days, we get copra. That copra is also in the primary market and still essential characteristics not changed, still it is agricultural produce. But that copra, if you extract coconut oil, then coconut oil is not agricultural produce. Potato is agricultural produce, but potato chips is not agricultural produce. Coffee berries agricultural produce, but coffee is not agricultural produce. Tea leaves is agricultural produce, but not tea. And same way, sugar cane is agricultural produce, but not jaggery. Like that, the primary produce out of agriculture on which no processing is done, or some processing can be done which does not change its essential characteristics. Then paddy is agricultural produce. Is rice an agricultural produce? No. Even though paddy to rice, not much essential characteristics are changed, but this process is not usually done by the cultivator. You can see there. So here, usually done by a cultivator. Agricultural produce means any produce out of agriculture on which either no further processing is done or such processing is done as is usually done by a cultivator which does not alter its essential characteristics. So paddy to rice is not usually done by cultivator, it is done by the rice mill. Usually it is done by the rice mill. That's the reason why rice is not an agricultural produce. So paddy is an agricultural produce, but paddy to rice, that process is not done by cultivator. So rice is not an agricultural produce. But in case of rice, they have given some exemptions. What are they? Loading, unloading, packing, warehousing of rice is exempted. What about these 4 activities in relation to paddy? Anyhow, it is exempted under first point, because not only these 4 activities, any activity or any service in relation to agriculture or agricultural produce is exempted. So you need to remember 2 points so far. Number 1, any service in relation to agriculture or agricultural produce is exempted. Then rice, loading, unloading, packing and storage of rice is exempted. Then next we have third one, artificial insemination of livestock is exempted through artificial process. So whenever the reproduction happens through injections, so they will collect some money, that is exempted. Then service by way of storage or warehousing of cereals, pulses. But these goods are previously given, nuts and spices, jaggery, etc. and all those are omitted. So which means now only storage or warehousing of cereals and pulses and minor forest produce is only exempted. So therefore 4 points you need to remember. Only 4 points are there in agriculture related services. Number 1, any service in relation to agriculture or agricultural produce, loading, unloading, storage, loading, unloading, packing, storage or warehousing of rice. Then artificial insemination of livestock, storage or warehousing of cereals, pulses, minor forest produce. Minor forest produce means like Ayurvedic herbs, bamboo, honey, forest honey, which are all available in the forest. So minor forest produce is not agricultural produce because no one is going there and doing the cultivation there. Okay, so that is minor forest produce. So its storage is also exempted. Previously we had this fumigation in a warehouse, that is omitted, which means it will be taxable now. And slaughtering of animals, previously it was there as exempted and now it is omitted, which means it will be taxable. Okay, so that is, these are the 4 activities which are exempted. Then insurance services. With respect to insurance services, we don't have any changes, same only. So life insurance business provided by way of annuity under NPS trust. So National Pension System Trust, if they provide insurance service, that is exempted. You remember that way. Then next, group insurance fund. So group insurance fund means like group of people will create a insurance scheme. So wherein every person in the group will contribute towards that insurance fund, and if there is any death of the member of that group, from that insurance fund money will be paid. That is known as group insurance fund. But in this group insurance fund, which group insurance funds are exempted? Army, Navy, Air Force, Coastal Guard, Central Armed Police Forces, these 5. So Army, Navy, Air Force, Coastal Guard and Central Armed Police Forces, this group life insurance fund is exempted. Then services of general insurance business provide under government schemes. So these services, like there is an insurance company, that insurance company is providing general insurance services under government notified schemes. What are those government notified schemes? So these are all targeted to agriculture and farmers, below poverty line, women and infants, unemployed. For example, coconut palm insurance related to farmers. So then we have hut insurance below poverty line. Like that, there are some specified government schemes. So definitely, if at all they ask a question, they have to ask a specified government scheme only. They cannot create something. So therefore, for that one point and all, we don't have to remember the big list of what are all the notified insurance schemes. So remember that these notified insurance schemes will be connected to agriculture and farmers, women and infants, unemployed and below poverty line. So then it is a government notified insurance scheme. For that insurance scheme, if any premium is collected by the insurance company, that is exempted. That insurance company can be government insurance company or a private insurance company, but the scheme is notified by the government. You understood? Then Nirmaya health insurance, apart from that, Nirmaya health insurance scheme is also exempted. Then number 4, life insurance under various government schemes. So again same. The third point is with respect to general insurance, and this point is with respect to life insurance. So there is an insurance company that can be government insurance company or a private insurance company, and they are providing life insurance services, and the scheme ends with the words Yojana. The scheme ends with the words Yojana. So then it will be a government notified scheme. And apart from that, micro life insurance where the sum assured does not exceed 2 lakhs. So means not all micro life insurance is exempted. Micro life insurance with other condition is what? The sum assured does not exceed 2 lakhs. Suppose if it is a micro life insurance, but the sum assured is 3 lakhs, whether the premium collected will be taxable or exempted? Taxable. So only when the sum assured does not exceed 2 lakhs, the premium collected will be exempted. Then insurance services provided to government. So here there is an insurance company which is providing services to government. So then whatever premium that is collected from the government is exempted. Then reinsurance of any exempted insurance service is also exempted. What does it mean? Say for example, I am providing insurance services to government, that is exempted. Now I will take reinsurance of that insurance with another insurance company to mitigate my loss. So that reinsurance is also exempted. If the main insurance is exempted, its reinsurance is also exempted. Then services provided by business facilitator or business correspondent to insurance company in rural area, like how we have in banking, business facilitator or correspondent who is working in rural area exempted. Same way, insurance company also in rural area is exempted. Then next number 3, banking and other financial services. Any service provided by RBI previously was exempted, now it became fully taxable. Previously services provided by RBI was exempted, but now services provided by RBI fully taxable, and it will be taxable under FCM. Then previously one more exemption was also there. Import of services by RBI in relation to management of foreign exchange reserves was exempted. Now all import of services became taxable. We don't have that exemption. So the 2 exemptions which were for RBI got omitted. Okay. And any import of service by RBI will be taxable, and it will be covered under RCM. Then overseeing committee services to RBI will be coming under RCM, and other services will be coming under FCM. So therefore, in relation to RBI, now everything will be taxable. Everything will be taxable. But what you need to remember is that everything is taxable and everything is FCM. Only two places it is RCM. That is what? Import of services by RBI and overseeing committee services to RBI. Can you remember this way? Then next, transaction in money. Transaction in money, suppose if it is without consideration, neither it is goods nor it is services. Neither goods nor services, correct? Money definition is excluded from both goods and services. Then what if transaction in money is for a separate consideration? Then it will be treated as supply of service. If that consideration is represented by way of interest or discount, then it will be exempted. If the consideration is other than interest or discount, then it will be taxable, including interest on credit card. So interest on credit cards will be taxable, okay? And this point has been tested, that is, discounting charges on bill of exchange. Discounting charges on bill of exchange. So is it taxable or exempted? Discounting charges on bill of exchange. In May 22 exam it has been asked. Taxable. Charges is taxable. Discount is exempted. You understood? Sir, what is charges? What is discount? Discount is the interest component. Charges is the documentation charges or processing fee, etc. Wherever you see charges, definitely it will be taxable. Suppose if they have given discount on bill of exchange, exempted. Discounting charges on bill of exchange, taxable. Okay. Interest on credit card, taxable. That interest is not exempted, it will be taxable. Interest on housing loan, exempted. Documentation charges on housing loan, taxable. Processing fee collected for loans, taxable. You understood? So therefore, consideration is represented by way of interest or discount, exempted. Any other consideration including interest involved in credit card is taxable under FCM. Then number 3, services provided by a banking company. That is, there is a banking company which is providing services to its basic savings deposit account holders under Pradhan Mantri Jan Dhan Yojana, under PMJDY scheme. So lot of nil balance accounts got opened mainly for the purpose of this LPG transfer, subsidy transfers. And these nil balance account holders, even though LPG amount is not credited, still they are account holders of the bank. And therefore, what they will do, they will start using that accounts. So because, you know, once account is opened, then GPay, all these things and all they need to do. So therefore, they start using that. When they start using that, some nominal charges they need to pay for this IMPS, etc. and all. Okay. So these charges generally for a normal savings bank account will be taxable. But for this PMJDY scheme bank accounts, it will be exempted. Interest anyhow exempted here, but apart from interest, any other charges collected by bank from the savings account holders under PMJDY scheme, that interest, that other charges is exempted. But the same charges are collected by from normal savings bank account holders, then it will be taxable. Then forex transaction including money changing. So foreign exchange transaction means like whenever we are making the payments in dollars, like you are purchasing something online and you are making the payment in dollars. So now the banker, so which credit card you are using, the banker will make the payment in dollars and will debit Indian rupees to you, means he is doing the conversion. So that is the forex transaction. Money changing means directly you go to a forex dealer, you give the foreign currency and get the Indian rupees, that is known as money changing. So forex transactions are money changing between banks is exempted, between forex dealers is exempted, between banks or forex dealers and the customers, then only it will be taxable. So between banks exempted, between forex dealers exempted, between banks and forex dealers exempted. Then when it will be taxable? Bank or forex dealer and the customer, then it will be taxable. And is it covered under RCM? No. Because we know already what are covered under RCM, that is Sir, CG, got, salads. Okay. In remaining cases, it will be FCM. Then number 5. So usually processing fee will be collected by the card POS device suppliers. that is this point of sale device supplier will be there na, swiping machine. So these POS device suppliers are called as acquiring bank. So for example, HDFC Bank you take, HDFC Bank will be providing a swiping machine. Now one person will be coming and swiping the money, swiping the card. So when he swipes the card, so whether full amount will be credited to the vendor? No, full amount will not be credited. There is something called as processing fee. Whether GST is applicable on that processing fee? Yes, GST is applicable on that processing fee. However, if the swipe amount does not exceed 2000 rupees, then also there is processing fee, but GST on processing fee will be not there. Okay, so therefore GST on processing charges for a transaction up to 2000 is exempted. Now here I will give you one situation, that is I have one website. In that website I am listing this That's It book for sale, and That's It book is 350 rupees, and 350 rupees a student will purchase, 25 rupees extra shipping charges. Okay, 375 rupees. So 375 rupees will be paid. 375 does not exceed 2000, correct? 375 does not exceed 2000. This payment will be done through a payment gateway, either PayU or Razorpay or Paytm, through payment gateway. So they will be also charging processing fee. Whether on that processing fee GST is there or not? Yes. Why? Because only in case of the card transaction, read there. So only in case of card transaction, credit card, debit card, charge card or any other payment card service. Suppose if it is e-commerce transaction, even if the value does not exceed 2000, even if the transaction amount does not exceed 2000, there is GST on processing fee. Is it clear or not? So that point can be tested. Huh? I didn't get you. This is like full amount you swipe, not value of supply. So this 2000 rupees is amount, not value. Amount means what? Including GST, whatever you swipe. Okay, so swipe amount from the recipient point of view means amount. They did not use the word value, amount. So in case of e-commerce payment gateways, GST always payable on processing fees. GST always payable on processing fee. Whatever may be the amount, GST is always payable. So the exemption is only in case of card transaction if the amount does not exceed 2000. That's the reason why whenever you do any shopping in e-commerce website, use UPI, please. So full amount will be received to the vendor. I'm not talking about myself, it's okay. So generally I am telling, so because these payment gateways and all are charging like 3% and all 3%. So then on that 3% plus GST, so they are looting like anything, and UPI means full amount we will get. Okay, so not only me, everywhere it is good only. So why some banker has to enjoy that benefit? So that's the reason. Till the time UPI become chargeable, so we can use that now. And thereafter we will add an option. UPI already chargeable. No, not yet. Okay, fine, whatever it is, but so far UPI was not chargeable. So maybe they may start, maybe depending upon turnover and all they will be keeping. So maybe once the turnover crosses, then that also it will be charged. Okay, good, super. Then I will add an option called as payment through crypto and all. We accept crypto, NFTs, etc. Then say this. Services by following person in respective capacities already we have discussed, that is business facilitator, business correspondent, agent of business facilitator, agent of business correspondent earning commission from rural area branch is exempted. Okay, already we have seen this. Then there is a intermediary. that financial services intermediary is located in a multi-service SEZ. There is only one multi-service SEZ in India, that is GIFT City, Gujarat International FinTech City. So in that GIFT City, there is one intermediary. That intermediary is providing services to whom? To a person outside India, and in relation to currencies other than Indian rupees, means in relation to foreign currency. Now this service is exempted. Won't it come under export of services? It will not come under export of service, because in case of intermediary services, the place of supply will be location of supplier. So in case of intermediary in India, the place of supply is in India, it will never become export of service, because in order to become export of service, supplier should be in India, recipient should be outside India, place of supply should be outside India. But here place of supply is in India. So it will never become export of service. So due to that reason, they have given the exemption separately. So what is this exemption? There is a intermediary. What type of intermediary? Financial service intermediary. Where are they located? Multi-service SEZ in India. To whom they are providing services? To their customers outside India. And in relation to which currency they are dealing in? Foreign currency. Got it? So now they get some money from their customers. So that money received by them will be exempted. Then next, number 4, healthcare services. Healthcare services following are exempted. So previously 2 points were there. Those 2 became omitted, which means it became taxable. So healthcare service also she did not leave here. So cord blood banks, by way of preservation of stem cells, so previously it was exempted and that became taxable. Cord blood banks will be preserving stem cells, they collect some money. I used to discuss that it is exempted, so it became taxable. Fully it is taxable. Same way, biomedical waste treatment operators. So these biomedical waste treatment operators collect medical waste from different hospitals and will be recycling it. They get some charges. So that is also omitted now, which means it became taxable. So in relation to healthcare service, now only 2 are exempted. That is healthcare service to human beings, healthcare service to animals and birds. Okay. Yes, only 2. And healthcare service to human beings and healthcare service to animals and birds. But in this healthcare service to human beings also, so previously, so room charges, hospital room charges, whatever may be the amount, so it was exempted, because it is part of healthcare service. But there also it became taxable now. What is that? If it is ICU charges, any ICU, intensive care unit charges or critical care unit charges, or intensive critical care unit charges, or neonatal intensive care unit charges, whatever it is, all ICU charges exempted, whatever may be the amount. But other room charges, so other room charges, that is sleep in the footpath, go to ICU, again come back and sleep in the footpath. Other room charges does not exceed 5,000 rupees per day is exempted, and charges exceeds 5,000 rupees per day entirely taxable. So not even one hospital, a non-hospital in Chennai I can see, which is charging less than 5,000 rupees per day. So minimum charges itself is 7,500 rupees, 10,000 rupees, like that they are charging. Means literally entirely taxable. Or if I have got any disease, I need to go to some village or a town, and there only I need to take treatment if I don't want to pay this. But you may tell, sir, anyhow insurance company only will pay now. They bloody idiots, they put one clause nowadays that only if the room charges is 5,000 rupees we will give room charges, otherwise we will not give. So which means both insurance companies as well as government, left, right, center, they are looting us. Okay. So charges exceeds 5,000 rupees per day entirely taxable. Okay. Not that amount exceeding 5,000, fully it will be taxable. Then what is this healthcare services? Healthcare services by a clinical establishment, means the place where healthcare service is provided, or authorized medical practitioner, that is doctor, MBBS and above, okay, and registered with the medical council, state medical council, or paramedics, those who assist the doctors like nurse, lab technician, physiotherapist, compounders, etc., including ambulance service. So this is healthcare services. And healthcare service means what? Healthcare means what? Healthcare definition you need to remember. Healthcare means diagnosis, like X-ray, scanning, MRI, everything. Okay. Then treatment. So even a blood test, urine test, every kind of test will be coming here under diagnosis, okay. And treatment, then post treatment, keeping the patient in observation. Diagnosis, treatment, care. For what? Any disease, illness, injury, pregnancy. And in which system of medicine? In any recognized system of medicine in India, including transportation in an ambulance. So transportation of a patient in an ambulance, part of healthcare, or even separately not a part of healthcare, both are exempted. But transportation of patient is only exempted. So because one MCQ is there, so a person provided transportation of patient services and collected 10,000 rupees. On the return journey, he boarded 5 passengers, collected 500 rupees from each, and whether it will be taxable or exempted, taxable. That is transportation of passenger service. So it is not transportation of patient, okay. Now, even they may go to the next level and they may ask, renting of ambulance, taxable or exempted? Taxable. Renting of ambulance, not all ambulance exempted, like that, don't think, okay. Ambulance, only transportation of patient in an ambulance is exempted. Mere ambulance and all is not exempted. So renting of ambulance will be taxable, but does not include cosmetic surgery, plastic surgery, hair transplantation. So these three are not, first of all, healthcare services. But if these three are carried out to restore the anatomy of the body parts affected due to congenital defects. Congenital defects means by birth, like cleft lip of a baby, so broken lip. For that, if any cosmetic surgery is done, or developmental abnormalities during the growth, okay, and injury or trauma, so then in that case, a fire accident or any road accidents, etc., after that, if plastic surgeries are done, then it will be covered under healthcare services. Then what about this dental root canal treatment? Will that root canal treatment be treated as healthcare services? Yes. So root canal treatment will be treated as healthcare services. However, so keeping these braces, invisible braces, then caps and all they will put on the top of the teeth, so that will be coming under cosmetic, so it will be taxable, okay. So what if childhood itself, so the braces they have used, childhood itself the teeth was completely uneven during the growth, what happens is that front teeth will be there, back also will start coming. Yes, many people will have this issue. So this teeth will not fall, but on the back side, the next level of teeth will come. So front and back will be there. So then in that case, what will happen is that, so the teeth will be uneven size. Uneven size, they put the braces on the back side and the front side to just bring it into even size. What about this? Developmental abnormalities. Therefore, it will be exempted. Then what about IVF treatment? IVF treatment, will it come under cosmetic or plastic procedure, or it is really a healthcare service? Really, yeah. So that is not having kids is a disease. So for curing the disease only IVF treatment is there. Therefore, IVF treatment will be coming under healthcare service and it is exempted. That is an amendment. Services provided by way of assisted reproductive technology, ART or IVF, to treat infertility is covered under healthcare service and it is exempted. Then, so therefore we have understood what is the meaning of healthcare services, and this healthcare services provided to any person in a clinical establishment or authorized medical practitioner or paramedics is exempted. Same way healthcare service in relation to animals or birds is also exempted. Now look into one more circular. So this circular, even though it is given in 2018, in this only part of the circular is relevant in today's context, because renting of rooms to inpatients in hospital is exempted, like that they said, subject to above. Renting of rooms to inpatients in the hospital is exempted, yes, subject to what? 5,000 rupees per day, okay. Then next, what about food supplied to inpatients? Who are inpatients? Those who are admitted into the hospital is known as inpatients. Food supplied to inpatients is also exempted, okay. And what about medicine sold to inpatients? Exempted. What about food supplied to outpatients, visitors, etc.? So then it will be taxable. Next, we have services provided by consulting doctors to hospitals. Even that is also exempted. For example, there is a hospital which is collecting 500 rupees from the patient, outpatient consulting fees. Out of that 500, 300 rupees will be shared with the doctor. The 500 rupees collected by hospital also exempted because healthcare service provided by clinical establishment, and the 300 rupees collected by doctor also exempted because healthcare service provided by authorized medical practitioner. So both are exempted, that is this. Then we have service provided by rehab professionals. Rehab professionals means these people are not doctors, but they are basically psychology experts, and they will be working in medical establishments, educational institutions, or any rehab centers, okay, any rehab centers. If they are working in medical establishments, so then it will be exempted. That medical establishment can be a government medical establishment or a private medical establishment, so that rehab professional collecting money will be exempted. Same way educational institution, let it be government or private, so the rehab professional collecting money will be exempted. But if it is a rehab center, so definitely it should be a government or a trust owned rehab center, then only it is exempted. Because if you see that rehab center point is continuing up to this, rehab centers established by central government, state government, local or union territory, or a trust under 12A or 12AB. But for medical establishments and educational institutions, no such condition, which means private medical establishments, private educational institutions also, rehab professionals collecting money will be exempted. But if there is a private rehab center, in that if the rehab professional is earning money, so whether it will be taxable? Yes, it will be taxable. What if it is a rehab center owned by central government, state government, or a trust? So then it will be exempted. That is this. So with this, healthcare service is over. Then next, entry tickets. Following entry tickets are exempted irrespective of the ticket price, and if the ticket price does not exceed 500. Irrespective of the ticket price, so we have first 3 things related to animals. So what are they? Tiger reserve, wildlife sanctuary, and zoo. 3 things related to animals, okay. Then total 8 entry tickets, 8 entry tickets which are exempted irrespective of the ticket price. 3 related to animals: tiger reserve, wildlife sanctuary, zoo. Then 3 related to places: museum, national park, and entry to protected monuments. Museum, national park, entry to protected monuments. Then 2 sporting events. So FIFA Women's World Cup 2020, AFC Women's Asia Cup 2022. So these 2 are like already over. So I don't think so they will be asking a question on this, okay. Already those events are over in 2022 itself. So doubtful only, but it is there in the list, so we need to remember that. But what you need to mainly remember is those first 6 things. That is 3 things related to animals. What are they? Wildlife sanctuary, tiger reserve, zoo. Then 3 places: museum, national park, protected monuments, okay. Then 9 entry tickets which are exempted if the ticket price does not exceed 500. So in that 4 related to performance. 4 related to performance: dance, musical performance, concert, theatrical performance. 4 performances, okay. Dance, theatrical performance, concert, and musical performance, okay. These 4 performance related things. And sir, what about stand-up comedy? Because of late stand-up comedy is also becoming so good theatrical performance. So it will come under theatrical performance. It does not exceed 500. It will be exempted. What if it is online? Will that be coming under theatrical performance? Online tickets, like online tickets in the sense like online viewing. Online viewing will not be, no, first of all, not OIDR, that is not covered under this exemption. So theatrical, you are paying the entry ticket. First of all, this exemption is what? Entry ticket. So online, if you are watching, for that if you pay, that will not be coming under any exemption. That will be fully taxable. You buy a ticket and you go to the theatrical performance and you watch. So there the ticket charges will be exempted. So that is this 4 performance related. Then next we have, so 4 event related, circus, then award function, then beauty show and sporting event, pageant. Okay, so total 4 events. What are the 4 events? Circus, award function, pageant, that is beauty show, then sporting event, and finally one that is planetarium. So these are the 9 entry tickets which are exempted if the ticket price does not exceed 500 rupees. Then pension services, contribution under Atal Pension Yojana or any pension scheme of the state government. So only these 2 pension services are exempted. Apart from these 2 pension services, any other pension scheme, there are a lot of private people who are offering the pension services like ICICI, then even SBI, so banks, then mutual fund companies, brokerage companies, everyone is offering now pension services. Now these pension service and all will be taxable, but only 2 pension services which are exempted is APY and any pension scheme of state government. Then services by specified organizations, previously SEBI and IRDA, if any service provided by them was exempted, now it is made taxable. So SEBI also required to get a registration, IRDA is required to get a registration, and they need to pay GST. So this is omitted. Then what are the organizations that we have? ESIC, Employee State Insurance Corporation, EPFO, Employee Provident Fund Organization. Then ESIC will collect money from whom? From the factories for the healthcare of their workers. Then EPFO, again employees, employer-employee contribution to Provident Fund is there na, that EPFO. Then NCCCD, National Center for Cold Chain Development, they will collect money from the cold storages for providing them the technical assistance on operating a cold storage. Then Foreign Diplomatic Mission located in India. Foreign Diplomatic Mission is UN agencies, embassy, consulate. UN agencies like UNESCO, UNICEF, etc. Then consulate, embassy. So they will be coming under Foreign Diplomatic Mission. So these people's outward supply is exempted. Then CMPFO, like how EPFO is for Employee Provident Fund Organization, for those workers who are working in coal mines, we have Coal Mine Provident Fund Organization. And then NPS Trust already we discussed in insurance services, the same point, NPS Trust. So these are the specified organizations. If they receive money from any person, that money received by them is exempted. Then charitable and religious service. In this charitable and religious service, there is a charitable trust registered under 12A or 12AB of Income Tax Act. But not all activities of the trust is exempted under GST. Under GST, if it is a charitable activity, then only it will be exempted. So what is a charitable activity? That is defined. That is public health. Public health, it is like creating awareness about family planning, creating awareness about AIDS, or creating awareness about COVID. So these are all coming under public health. But anyhow, healthcare service is exempted. Then advancement of religion, spirituality, yoga. So all those Babas and Swamijis, okay. So they are all covered under this list and which is exempted. Then educational programs to physically or mentally traumatized persons, prisoners, persons over 65 years residing in rural area. What if persons over 65 years residing in urban area? Taxable. So residing in rural area. So this, then environmental preservation. These are the 4 activities which are covered under charitable activities. For these charitable activities, if they collect any amount, that amount received will be exempted. Then number 2, that is services by an old age home run by central government, state government, or a charitable trust under section 12A or 12AB. So these are the 4 activities, charitable activities by a trust. Apart from that, if there is a old age home, that old age home is run by a trust or by government, and to whom they should provide the services? To people aged 60 years or more. So greater than or equals to 60 years or greater than 60 years? Equal to 60 years also. And how much should be monthly charges? 25,000 rupees per month per member. 25,000 rupees, up to 25,000 rupees per month per member, then it will be exempted. So this 25,000 is all inclusive, that is for boarding, lodging, maintenance, everything together. So then it will be exempted. What if it exceeds 25,000 rupees? See, in exemptions everywhere except that incubating services, everywhere if there is a monetary limit, you cross that monetary limit, entirely it will be taxable. Okay. Then number 3, services by any person by way of conduct of religious ceremony. So that is people who conduct the religious ceremony like purohit, priest, or church father, etc. They will be receiving some money for conducting the religious ceremonies. So for that money, whatever received, that is exempted. Then services by special organizations for religious pilgrimage. Only 2 religious pilgrimages are there, Kailash Manasarovar Yatra and Hajj Yatra, and this should be provided by a special organization, means by a notified organization. Then the services provided by them, money collected will be exempted. So these are charitable and religious services exempted. Then education services. Education services, see this, first, services provided by educational institution to its students, faculty and staff is exempted. So look into point number 5. Any service provided by educational institution to its students, faculty and staff is exempted. So now, what is the meaning of an educational institution? We have 3 category educational institution. Category number 1 is up to 12th standard or equivalent. Category 2 is education for obtaining a qualification recognized by law. Category 3 is approved vocational education. And so these educational institutions providing services to their students, faculty and staff will be exempted. What if they are providing services to others like corporates, etc., placement services, that will be taxable. Then services provided to educational institution, 6th point. The difference between 5th point and 6th point is that 5th point is by an educational institution and 6th point is to an educational institution. So in case of services provided to an educational institution, so we have 3 services provided to category 1 institution is exempted, that is transportation of students, faculty, staff, security and housekeeping services, catering services. These services to category 1 only exempted, that is this is not service provided by education institution. I am providing service to education institution. What service? Transportation service or catering service or security and housekeeping service, then it will be exempted. What if these are provided to category 2, category 3? It will be taxable. Then in case of conduct of examination, admission to or conduct of examination, all 3 category institutions it will be exempted. Okay, admission to institution or conduct of examination of institution, all 3 categories it is exempted. Then online periodicals and journals, only with respect to category 2 it is exempted. So this is the matrix of exemption that you need to remember. What is that? Service provided to educational institution. Number 1, transportation, security and housekeeping, catering, only to category 1 exempted. Admission to or conduct of examination, all 3 categories exempted. Then online periodicals and journals, logically online periodicals and journals only for category 2, so that only exempted. In other cases it will be taxable. Now first point, you see, services provided by an educational institution by way of conduct of entrance examination against consideration in the form of entrance exam fee. So anyhow service provided by educational institution to its students is exempted. Then why this entrance exam fee is separately given? Because whenever we collect the entrance exam fee, so that is not from the students, because they have not yet become the students of that educational institution. They have to write the entrance exam, they need to qualify the entrance exam, then only they will become the student of that institution. That's why they have given this exemption. Now this entrance exam fee or any manner, any amount collected by education institution from its students will be exempted. So for example, different names are there. So because you are not going for colleges, you will not know. So in colleges different names will be there, eligibility certificate, then admit card, for giving hall ticket one amount will be collected, for not wearing ID card one amount will be collected, and thereafter for not wearing the dress properly, shortfall of attendance, like that, in any name they collect, all those amounts will be exempted. Application fee for entrance, fee charged for issuing eligibility certificate, fee collected for issuing migration certificate, for TC and all they will collect some amount. Okay, so all these amounts by whatever name called, that is exempted. Okay, and but it should be by an educational institution. It should be by an educational institution. If it is by a coaching center, etc. and all, fully that will be taxable. Then What about this ICSE, IB, etc. and all? Will that also be coming under education institution? ICSE board, then IB, yes. See, whatever may be the board. At school level, we don't have any issue. But when it comes to college only, it should be recognized by law. Then, second point, amount paid to training providers, that is under DDUGKY scheme. Deen Dayal Upadhyaya Grameen Kausalya Yojana, there will be some training providers. These training providers will go to the rural area and will provide the training to the people over there in relation to some skills for which they will be getting money from government, and that money received by them will be exempted. Then, so these organizations, National Skill Development Corporation, Sector Skill Council, Assessment Agent or Training Partner, these four people, if they provide any service, that money collected by them will be exempted. Then next 7, training in recreational activities relating to arts and culture. But here now there is a condition that it should be by an individual, then only it will be exempted. Suppose, and what type of arts it should be? Should it be classical or folk? Not necessary, anything it can be, okay, it can be anything. Say for example, you know, like I started one dance class, Jalsa, salsa, salsa class, like that one class I started, individual, and I provided the salsa classes for the people who are coming and charged money from them. Taxable or exempted? Exempted. Training in recreational activities relating to arts and culture, individual, exempted. Suppose if I start it in a partnership firm, and if the partnership firm is collecting money, then it will become taxable. Previously it was exempted, let it be individual or partnership firm or any person. So training in recreational activities relating to arts or culture was exempted, but now only by an individual will be exempted. Is it clear? Now arts, what kind of arts? Any arts here, that can be dance, music, swimming, every kind of arts, martial arts also covered there. Then culture, it is about languages, Upanishads, Vedas, so that will be coming under culture. Then next point, training in recreational activities relating to sports, but that sports should be registered as under section 12A or 12AB trust. Sir, this both arts and culture by an individual or only culture by an individual? Both. For both it will be. So this by an individual is for both arts as well as culture. And sports academies should be registered as a trust. Then only the money collected by them will be exempted. Then services by assessment bodies under skill development initiative scheme. So skill development initiative scheme, wherein some people from the industry will be asked to review the curriculum. For reviewing the curriculum, these assessment bodies will be paid some consideration by the government, that money received by them is exempted. Then we have two circulars relating to this, that is relating to education services. Anganwadi schools. Anganwadi schools are like daycare centers, so which will basically provide preschool education. So preschool education means it comes under category 1. So therefore, if they receive catering service, whether that catering service is taxable or exempted, exempted. And whether the money is paid by the Anganwadi school or by the government or any corporate donation, that is irrelevant. We provide services to Anganwadi schools by way of catering service, so the money received for that service will be exempted. So that is the circular. Exemption of GST provided to service provided to education institution including Anganwadi by way of serving of food including midday meal scheme sponsored by government irrespective of funding. See, funding we don't have to bother. Till the time we are providing service to that school by way of catering service, it is exempted, because Anganwadi schools will come under category 1 education institution. Then there are some examination boards. These examination boards' job is only to conduct the exam and give the rank, but they will not give any admission. For example, NEET exam, they will just conduct the exam, they give the rank. Depending upon the rank, you go in the counseling and you attend whichever college is taking you depending upon your rank. So which means that, so this particular examination board's job is only to conduct the exam. Now for conducting that entrance exam, they collect a entrance exam fee, whether that will be taxable or exempted, because we have one point which says that services entrance exam fee collected by an educational institution is exempted. Whether this examination board will come under education institution or not is the dispute. For that, CBSE gave a clarification that examination board, even though do not offer any education, you understood, even though do not offer any education, but that is required as a part of curriculum for obtaining a qualification. Therefore, examination boards are treated as educational institution and money collected by them will be exempted. So that is this CBSE circular. Central and state education boards are treated as educational institution for the limited purpose of providing service by way of conduct of examination. Therefore, National Board of Examination is an educational institution and entrance exam fee collected by them is exempted. So, these services provided by government already we have completed. In that, a small part is there, services provided to government. See that. Page number 79. That is, so government is required to do some activities as per Article 243G or 243W of the Constitution. So this is 243W of the Constitution. So government is required to do some activities as per 243G or 243W of the Constitution. So that is, government has to do some activities as per Constitution. Example, laying down road, cleaning of sewages, then water supply. These are all some activities of government as per Constitution. But is government doing it? No, government will not do that. What they will do? They will outsource it to some contractors. Now that contractor will be providing pure service to the government, that is exempted. For example, this solid waste management. Solid waste management means clearing the garbage, etc. That is household waste. So that we will dump that in a dustbin over there, and daily one vehicle will come. So take the dustbin and pour it into that vehicle, take it to the outskirts and they will dump it out. So that will be done in Chennai by one company called as Urbaser. Like that, in different places, different corporates are doing this, for which they get some money from the government, that is exempted. So pure services provided to government by way of functions which is entrusted to government under Article 243G or W of the Constitution. Okay. What if it is a composite supply involving both goods and services? Even then it will be exempted, provided the value of goods does not exceed 25% of the total. For example, laying down roads. Laying down roads is a composite supply involving both goods and services, but definitely the goods element is more than 25% of the total. So whether the exemption is available? No. But sanitization of streets, if you take, in sanitization of streets, so the value of goods is only chemicals used in that. So that does not exceed 25% of the total. So that composite supply will be exempted. That is this. Service provided by any person to government. Previously, government authority, government entity was there, and that is omitted. So only government, service provided only to government. So when I say government, I am referring to central government, state government, union territory or local authority. Okay. Then who is government authority, government entity? So they are not local authorities. So they will be like delegated. So they create urban development authority, like that. CMDA. Chennai Municipal, like Chennai Metro Development Authority, like that we have na. So they will be coming. Then water sewage boards, etc. So these boards or authorities will be coming under this. But government is as such. So central government, state government, union territory, local authority, that is corporation, municipal corporation of Chennai or Greater Chennai Corporation or Gram Panchayat, municipality, they will come under local authorities. Then with respect to functions entrusted under this, pure services are exempted, or composite supply of goods or service where value of goods does not exceed 25% of total value is also exempted. And now there is one CBSE circular. In North and all, in public distribution system, ration shops, they will be giving wheat flour. Okay, wheat flour, and here rice they will give, but their wheat flour they will give, and for that a state government has entered into contract with one person. So that person has to buy the wheat, grind it into wheat flour, fortification, that is completely segregating all those broken things and all separately. So purely that wheat flour will be there, na, that wheat flour, and that has to be given to the government. So now in this there are two elements, wheat, goods element, and grinding and fortification is service element. But definitely the goods element exceeds 25% of the total. So due to that reason, exemption is not available. Please read this CBIC circular once. Composite supply of service by way of milling of wheat into wheat flour along with fortification by any person to state government for distribution of such wheat flour under PDS is not eligible for exemption. Why not eligible for exemption? As a value of goods involved exceeds 25%. Then any training program for which greater than or equals to 75% of the total expenditure is borne by government. So it is not the money received from the government is exempted. There is a training program. Say for example, I am providing CA foundation coaching for below poverty line students and the coaching fees is 50,000 rupees, CA foundation, okay. And in this 50,000 rupees, if 40,000 rupees is paid by government and 10,000 rupees is paid from the student, okay. Now what is the contribution by the government? 40,000 divided by 50,000 is 80%, so greater than 75%. Therefore, that 40,000 received from government is exempted or entire 50,000 is exempted, the entire 50,000 is exempted, the training program is exempted here, not the amount collected from government is exempted, understood or not? Suppose if government has given 30,000 rupees and student have collected 20,000 rupees, so 30 divided by 50 is what? 60%, so it does not exceed 75%, so due to that reason, entire 50,000 rupees received, 30,000 from government and 20,000 received from student, entire 50,000 will be taxable because it is the exemption with respect to the training program. Greater than or equals to 75%, not greater than 75%, greater than or equal to, which means even if exactly 75% is borne by the government also, the training program is exempted. If the training program is for students with disabilities, then in that case, so the entire expenditure should be borne by the government, then only it will be exempted, okay. If it is normal, 75%. If it is students with disabilities, when it will be exempted? If the total expenditure is borne by government. So that is about services provided to government. And renting movable property, immobile property, we have seen building. Now look into land. Related to land, there is one exemption, that is upfront charges. So first of all, there is government land. So that government land is for development of infrastructure for finance business or for industrial plots, okay. This government land is given by state government industrial development corporation to some people. On what basis? Long-term lease basis. Long-term lease means what? Lease for a period greater than or equals to 30 years. And for this they have collected some upfront charges that is exempted. But annual charges will be taxable. Again I am repeating, state government industrial development corporation, okay. So state government industrial development corporation, SIDCO, like that you would have seen, SIDCO, SIDCO. State Government Industrial Development Corporation. This will be owning some land. That land is for what? Development of infrastructure for finance business or it's a industrial land. That land will be given on lease model. To whom? To the industries, okay. For which upfront amount, some amount will be collected plus annual royalty will be collected yearly. So yearly whatever is collected, that will be yearly lease rentals will be taxable. Please write down there. Yearly lease rentals are taxable. Yearly lease rentals are taxable. Then what is exempted? Only upfront charges is exempted. In that upfront charges, including preferential location charges, they will be collecting some preferential location charges also. Suppose if the land is near to a highway, so they will be collecting extra charges for giving a preferential location. So all these upfront charges including preferential location charges is exempted, but only annual charges will be taxable. But it should be what type of lease? Short-term lease or long-term lease? Long-term lease. Then renting of the precincts of a religious place meant for general public. That is, so there is a religious place that is meant for general public, which is given on rent. For what purpose? Accommodation. it will be exempted if it is per day less than 1000. Here the 1000 rupees point is still there. Here the 1000 rupees point is still there. Normally 1000 rupees less than or equals to 1000 rupees per day, hostels and all, it will not exceed 1000 rupees per day. So previously it was exempted. Now all hostels, even 2000 rupee hostel fee per month taxable. You understood? Why, sir? Because the 1000 rupees per day or equivalent point is removed. But in case of precincts of a religious place meant for general public, it is there. And less than 1000 rupees per day exempted. What if it is equals to or greater than 1000? Taxable. Equal to 1000 also taxable. Suppose if it is for marriage hall or any social function, etc., if the precincts are given on rent, then per day should be less than 10,000. Then it is exempted. If it is equal to or greater than 10,000 per day, entirely taxable. If it is for shops, less than 10,000 per month, less than 10,000 per month exempted, otherwise fully it will be taxable. First it should be a religious place meant for general public and it should be registered as a trust. What trust? Charitable trust? Not necessary charitable trust, any trust, because here they did not use the word 12AA, 12AB, means it can be section 10 trust also, 1023C, 1023D, some religious trust are there, it can be that trust also. And sports related services, already we have seen one part, that is sponsorship. See the other part, services provided by player, referee, umpire, coach, team manager to recognize the sports body is exempted. 5 people, player, referee, umpire, coach, team manager. If these 5 people provide services to recognize the sports body, then it will be exempted. If they provide service to unrecognized sports body, it will be taxable. Okay. For example, you take Virat Kohli receiving money from BCCI, taxable or exempted? Exempted. If he receives from RCB, then it will be taxable. Now if you see an umpire is working as a umpire for this ongoing match. So India-Australia match, and India-Australia match umpires will be receiving money from BCCI. Taxable or exempted? Exempted. Now if you see, all IPL umpires will receive money from Mumbai Indians team. So this money received by umpires from Mumbai Indians will be taxable or exempted? Taxable. That is not exempted, that is taxable. Okay. So then what about others? Apart from these 5 people, all others fully taxable. Commentators, pitch curators, selectors, technical experts, everyone will be taxable. Let it be recognized sports body or unrecognized sports body. Also, service provided by one recognized sports body to another recognized sports body. For example, say this inter-university sports board is conducting one cricket tournament on a grand manner between universities in 3 to 4 states. 3-4 states, this inter-university board is conducting cricket tournament on a grand manner, and they needed the services of BCCI in order to conduct the cricket in international standard. For that purpose, one recognized sports body, BCCI is one recognized sports body, inter-university sports board is another recognized sports body, one recognized sports body providing service to other recognized sports body. So collected money will be exempted. That is this. So one recognized sports body to another recognized sports body is exempted. So with this, we'll stop for some time. We'll take a break, and thereafter we will see the remaining exemptions. Okay, fine. Because online they were crying, sir, break, like. Fine. You did not ask, but I can understand your inner voice also. You take a break for 10 minutes and thereafter we will continue. Okay. So there are few queries to our students. Sir, nowadays in some hospital they have started music therapy as well for calmness of patients. Is that service exempted? Is it recognized system of medicine? I don't know. If it is recognized system of medicine, then it will be exempted, otherwise not. But music therapy is recognized. I think many years it is there. So maybe nowadays it is started in hospitals, but this music therapy is there for quite a long time, which I know. So might be, it could be a recognized system of medicine. So I really clueless whether it is recognized or not. But don't worry, in exam it will be given. In brackets it will be mentioned, recognized system of medicine, not recognized system of medicine, because they know that you are not a, you're not preparing for doctor course and all. No? Sir, can you please clarify that why international financial service in GIFT City is not export even though place of supply is determined under section 13? See, in case of section 13 place of supply, the location of supplier is the place of supply. Location of supplier is India. So in order to become export of service, the recipient, that is the place of supply should be outside India. As the place of supply is in India, it will not become export of service. That is the answer for that. Then Book My Show issuing tickets for movies to view online. Will it come under OIDR services? No, it will come under e-commerce operator. So supply of services through e-commerce operator, because Book My Show is not streaming the movie. If Book My Show you buy the ticket, in Book My Show app, if you watch the entire movie, it will come under OIDR service. But it is not happening that way. We just book the ticket, we go to the cinema theater and we will watch. That is not a OIDR service. Then next, whether there are any exemption in relation to Ayurvedic medicine and consultation? Yes, Ayurvedic, yoga, Unani, Siddha, Ayurvedic, then even naturopathy, these are all recognized system of medicines and it is exempted. Then whether salt is agricultural produce. So this even I have a doubt, because actually speaking salt is not an agricultural produce. Reason being, agriculture definition uses the word, so cultivation of plants or rearing of life forms of animals. And what is agricultural produce? The primary produce out of agriculture. So which means agricultural produce definition is connected to agriculture. So in agriculture, we don't have this salt farming. So due to that reason, salt is logically not an agricultural produce. Yes, okay. These are all the queries. Fine. Then services by an unincorporated association or non-profit entity to its members. It is treated as supply under section 71AA. Will you agree with me? 71AA. Unincorporated association or non-profit entity to its members, any person other than individual and its members. Suppose if it is a trade union, the amount collected as a trade union is exempted. What is a trade union? Association of traders. There is an association of traders which will be collecting membership fee from the traders. So usually all traders, like all jewelry shops, all provision stores, all medical shops will have one association. So each member is nothing but the trader. They pay the membership fees, that is exempted, whatever may be the amount, it is exempted. Okay. Then for providing exempted services, means that is generally that service itself is exempted. If the association provides that service to their members also, it will be exempted. For example, COVID vaccination is exempted. COVID vaccination is exempted. But during COVID, what has happened? Lot of apartment association, they have provided the vaccination to their flat members. You understood? So generally a hospital providing COVID vaccination is also exempted, and an association providing COVID vaccination to their members is also exempted, because the service itself is exempted. Then as a resident welfare association means apartment owners association. They will be doing lot of common area expenses like lift maintenance, parking, gardening, security, sewage cleaning, water supply, power backup, for which they will be collecting from the members in the form of maintenance charges. If the maintenance charges per month does not exceed 7,500 rupees per member, then it is exempted. If it exceeds 7,500 rupees, entirely it will be taxable. Same way, suppose if it is an industrial or agricultural labor association. So like all industrial labor or agricultural labor also will form labor unions. So that labor unions will be collecting membership fee from the laborers. Okay, so that membership fee is exempted. For this trade union as well as industrial agricultural labor association, irrespective of amount, it is exempted. Then apart from these four, any other association or entity, if they are collecting money from its members, if the amount does not exceed 1,000 rupees per annum, then it will be exempted. If it exceeds 1,000 rupees per annum, entirely it will be taxable. Say for example, no, I wanted to start one association. POSCA, Protection of Students of Chartered Accountancy Association, like that, really. So this association will fight for the students' rights, CA students' rights. So whatever harassment they get from the articles like principal and and even from ICI, etc. and all. So this POSCA will have a legal battle and required wherever till Supreme Court also it will go. So like that, no, really wait for 2 years, this association will come. Okay, and because this is work in progress and this will definitely come, and because I am not starting this but I am helping to start this. So two people who are right now completed CA and pursuing LLB, so like 2 years they are going to become advocates, and they have just started this idea to me, and I only suggested this name. So this name I suggested and they said definitely sir, we will take it forward, we need initial support and all. So I am giving them the funding, whatever funding that is required. So how many lakhs it may be. So I will sell 2-3 kidneys and we will give. And this association, if they collect say 200 rupees as membership fees per annum from a student, whether it will be taxable or exempted, up to an amount of 1,000 rupees per member per annum, that will be exempted. Is it clear? Not for the sake of this example I said, but really I mean it. Okay. Then in case of resident welfare association collects an amount exceeding 7,500 per month per member, the entire amount will be taxable. But remember, it should be first liable to get registered, otherwise this will not be coming, because there are only 5 flats. There are only 5 flats in an association, in an apartment there are only 5 flats, 5 luxury flats, and each flat will be paying 15,000 rupees as maintenance charges. Maybe each flat is having swimming pool in it, or some luxury flat it is, 15,000 rupees maintenance charges. So our rent itself is 15,000 rupees. So maintenance charges 15,000 rupees. Let them pay. What is our problem? Into 12 months, into 5 flats. What is the aggregate turnover? 15,000 into 12 into 5 is 9 lakhs. It does not exceed 20 lakhs. What is the aggregate turnover threshold limit? 20 lakhs. Even though it will be taxable, but GST not payable. Why GST not payable? Because the aggregate turnover does not exceed threshold limit. They are not required to register and pay GST. Is it clear? But don't write that the service is exempted, or don't write service is not taxable. Service is taxable, but GST not payable. Then that is this. Then transportation of passengers, we have some exemptions with respect to this. So transportation of passengers is divided into broadly 4: railways, airways, waterways and roadways. And in case of railways, other than first class or AC is exempted. What we are discussing is what are exempted. So which means first class will be taxable. First class can be AC or first class can be non-AC. Non-AC first class, local train. Non-AC first class, that is local trains. So in local trains, few compartments no one will be boarding. Okay, so those compartments are actually first class, that will be taxable. And any AC, so that can be first class, 2 tier, 3-tier, chair car, etc., that will also be taxable. And other than this means sleeper class, general ticket, or reserved second class sitting, etc., that will be exempted. Then metro, mono and tramway, in that don't see AC, non-AC and all, everything will be AC only there, okay, otherwise people will die in metro train. So AC only fully, but even then it will be exempted. Metro, mono and tramway, always it will be exempted. Monorail means bullet trains, and metro normal you know. Tramway is on the road itself, they laid on the track, that is tramway. Even aerial tramway is also exempted. What is aerial tramway? Up to the hill they will put one track. Up to the uphill they will put one track, and the train will be going in that track. That is known as aerial tramway. Okay. In Palani temple it is there. So that is aerial tramway. Tramway you see it is exempted here. Let it be aerial tramway or underground tramway or normal tramway, whatever it is, tramway is exempted. Metro, mono and tramway exempted. Then airways, if the starting point or ending point of the passenger is in northeastern states or Bagdogra in West Bengal, then it is exempted. Previously, even business class tickets were also exempted. So many people used to do a travel this way. So when they need to go from India to abroad, and if the flight cost will be somewhere like 75,000 or 80,000, business class tickets were taxable at 12% GST. So what they will do, Bagdogra airport, they will book one ticket from Chennai to Bagdogra, Chennai to northeastern state. Northeastern state, that much connectivity is not there, but Bagdogra airport is famous for this, connecting flights. So that ticket will be exempted because the ending point is in Bagdogra, West Bengal. Again, second ticket will be from Bagdogra to outside India. That ticket was also exempted because starting point is in that place. They used to save that. But 12% business class will now become taxable. So because this exemption has been modified to only economy class. This exemption is available only in economy class. Starting or ending in economy class at northeastern states or Bagdogra in West Bengal. What are northeastern states? MMTN, ASAM. MMTN, ASAM. MMTN, Manipur, Mizoram, Tripura, Nagaland. Assam, Assam. Then yes, Sikkim, Arunachal Pradesh, Meghalaya. These are the northeastern states. You can see below Manipur, Mizoram, Tripura, Nagaland, Assam, Sikkim, Arunachal Pradesh and Meghalaya. Then second exemption is viability gap funding. That is, there are some regional connectivity airports. These regional connectivity airports, in order to become functionable, so for the airlines which are operating in regional connectivity airports, they get two types of consideration, one from the passenger, another from the government. So that amount which is received from the government under viability gap funding is exempted for a period of 3 years. Means after 3 years also they will be receiving money from the government. Yes. So after 3 years also they will receive money from the government, but that will be taxable. Means up to 3 years money received from government exempted, money received from passenger will be taxable. After 3 years money received from both government and passenger will be taxable. Okay. So that is the second exemption in airways. Then waterways, inland waterways is fully exempted. Whatever may be the purpose that is used, that can be used for tourism purpose or that can be used for public transportation. But coastal waters means seaways. So within India, between places in India, other than for tourism purpose, if it is for tourism purpose, it will be taxable. If it is for public transportation, then it will be exempted. For example, Chennai to Port Blair. So Port Blair, Andaman and Nicobar. So therefore this transportation is for public transportation purpose. But in coastal waters, will it be taxable or exempted? Exempted. If it is for tourism purpose, cruise ships, etc., then it will be taxable. Then roadways. In case of roadways, we have 3 exemptions. Non-AC stage carriage. So stage carriage is like a vehicle which stops at every stage of its journey, like local bus, share auto. These are all examples of stage carriage. So stage carriage, AC, non-AC. AC will be taxable, non-AC is exempted. Then same way, contract carriage. Contract carriage mainly for point to point travel. So one place to another place. And this contract carriage will not stop anywhere between the journeys. So that contract carriage again divided into 2, AC, non-AC. In that what is exempted? non-AC contract carriage for other than hire or tourism. If that non-AC contract carriage is taken on hire, the hire charges will be taxable. If that non-AC contract carriage is used for tourism, like a packaged tour, Shirdi trip or Ooty trip or Kodaikanal trip like that, so then it is for tourism purpose, so therefore it will be taxable. Then metered cab or auto rickshaws is exempted. So these are the three exemptions in case of roadways. What are they? Non-AC stage carriage, non-AC contract carriage other than for hire or tourism, metered cabs and auto rickshaws. However, if these three are through e-commerce operator, it will be taxable, where liability to pay GST is on e-commerce operator. That is what I have given below. Exemption not available if the service are provided through e-commerce operator. Now here you tell me transportation of passengers in horse cart. Transportation of passengers in horse cart, taxable or exempted? Horse cart, you know, horse cart, taxable or exempted? Where is it given? Where is it given in exemption? Yeah, you are telling exemption. Where is it given in exemption? It is not exempted. It will be taxable. It will be taxable because not covered under this exemption, taxable. What about manual rickshaws? Rickshaw, a person pulling the rickshaw, taxable or exempted? Taxable, not covered here, taxable. Bullock cart, transporting the passengers in bullock cart, taxable. But these people will not cross the threshold limit, so therefore they are not required to pay GST, but service wise it will be taxable. What about ropeway? Ropeway, cable car, etc., taxable. Whatever we read which is not there in this exemption, if you don't know, it will be taxable. Is it clear or not? If you read it, you can understand, somewhere I read it, exempted. You read it, you could not recollect anything. Where it will come, I don't know the answer for it, taxable. Okay, so follow that, then it will be easy. Then transportation of goods following are exempted: railways, airways, waterways and roadways. Again we have goods also divided into this, and railways specified goods are exempted. What are those specified goods? The same 6 specified goods that we have seen for GTA, but this point is, it's a mistake, please remove it. It is not applicable now. Railway equipment is omitted completely. Previously railway equipment was there. For vessel, railways, etc. But now they have omitted fully. Means only 6 notified goods. These 6 notified goods transported in 3 modes is exempted. What are those 3 modes? Railways, then waterways in coastal waters. Then again GTA. Okay. What are those 6 specified goods? Agricultural produce, food grains, flours including pulses, salt, milk, and then organic manure, newspapers and magazines, relief material for natural and man-made disaster, defense and military equipment. So transported by railways, exempted. Transported by coastal waters between places in India, exempted. Transported through GTA, exempted. Then in case of railways, other than these specified goods, any other goods transported will be taxable. And we don't have RCM for railways, so it will be FCM. Airways, only one exemption, that is outside India to India. Previously one exemption was there, India to outside India, that was exempted up to 30/9/2022, and that is over, so therefore it became taxable. That's what I have given. Transportation of goods by waterways from once again, transportation of goods by airways or waterways from India to outside India is taxable with effect from 1/10/2022. Okay, previously it was exempted. So with effect from 1/10/2022 it became taxable, means for your exam it is taxable. Then next, waterways, inland waterways is fully exempted, and like how transportation of passengers in inland waterways is exempted, same way transportation of goods in inland waterways is exempted. Then coastal water, specified goods is only exempted, other goods will be taxable. Then roadways other than GTA or courier agency is exempted, which means the balancing figure for transportation of passenger by roadways is taxable. The balancing figure for transportation of goods by roadways is exempted. You please write down somewhere that balancing figure for transportation of goods, for transportation of passengers, balancing figure for transportation of passengers by roadways is what? Passengers, roadways, taxable. That's why I said horse cart, bullock cart, ropeway, cable car, everything is taxable, like that I said, because we don't have that in exemption. Same way, balancing figure for transportation of goods by roadways is exempted. So in case of roadways, what are taxable? Only two, that is goods transport agency, courier agency. In that GT also 3 cases exempted, remaining cases it will be taxable. So that is this. And what about transportation of goods by waterways? India to outside India to India, both are taxable. In case of waterways, both are taxable. In case of airways, only one is exempted. Which one? Outside India to India. Then we have some circulars in relation to this transportation, that is hiring of vehicles for transportation of their employees to and from work. So where it will be coming? Will it come under renting of motor vehicles or will it come under contract carriages? For example, if you see lot of companies will be hiring some buses for transporting their employees from the workplace to their home and again picking from the home to the workplace. Will it come under renting of motor vehicles or contract carriages? It will come under contract carriages only, because renting of motor vehicles is completely different. When it is renting of motor vehicles, so usually that renting of motor vehicles will be for a particular period of time, that too mainly the vehicle is given on rent and the operating everything is done by the person who is taking that motor vehicle on rent. Means usually driver, all these things will not be provided. That is what renting of motor vehicles is. Suppose like travels and all, when you are taking, that will be coming under contract carriages. You understood? For example, like one trip you are going from this place to Pondicherry, one trip. So this will be coming under contract carriage, not renting of motor vehicles. If you take the motor vehicle on rent on self-driven basis, that will come under renting of motor vehicles. You understood? Like you want to drive self-driven cars, Zoom cars and all are there, self-driven cars. So self-driven cars you are taking, then it will be purely renting of motor vehicles, where driver they are providing, fuel also they provide, etc. and all. Then it will be coming under contract carriage. So here it is called as contract carriage, and the same will be taxable. Hire refers to hired for a period of time during which the contract carriage is at the disposal of the service recipient. And will it be coming under RCM? Contract carriage, hiring of contract carriage to a body corporate, will it come under RCM? No. Only renting of motor vehicle to body corporate is under RCM. That's why we need to identify the difference between renting of motor vehicle and contract carriages. Is it clear or not? Because in exam what will happen? Renting of hiring of contract carriage by other than body corporate to a body corporate where the rate of GST is 5%. Now whatever mind will say, answer RCM, like that it will push, because all three conditions satisfied. Supplier other than body corporate, recipient body corporate, rate of GST 5%. But actually it is FCM. Why it is FCM? Contract carriage we don't have in RCM. We have only renting of motor vehicle under RCM. You understood or not? So be careful when you are reading it, okay? And that's why this circular has been provided that transportation of employees to and fro work falls under the service of transportation of passengers by contract carriages. Then Same way, transportation of passengers in a private ferry in coastal waters. So for what purpose? For public transportation of passengers. Will it come under taxable or exempted? So we have seen coastal waters, transportation of passengers other than for tourism purpose will be exempted. So therefore, let it be a private operated ferry or government operated ferry, till the time they are using it for transportation of people, so then it will be exempted. If it is predominantly used for tourism purpose, then only it will be taxable. Then import of services already we have completed. So looking into construction services. Construction services, already fourth point we have completed. Look into the first point and second point. So in first point, if any person is providing construction of an individual house, say I want to have an individual house, I appoint one contractor and the contractor only buy all the material required and he will construct my individual house, and this individual house will be having a budget of 80 lakh rupees. So whether it will be taxable or exempted? Exempted, because construction of an individual house. No, wrong answer. It is taxable because pure labor contract only exempted. This is not applicable to works contract services. So here what I am doing, I am asking the builder only to buy the material, builder only to do the construction. It is not pure labor contract. It is a works contract. So then it will be taxable. So when it will be exempted, I need to buy the material required for construction. I need to receive only construction service. For that, if I pay any amount, that will be exempted. Okay, individual house, irrespective of the floor area or cost. What is called as an individual house? A house occupied by a single family. Number of floors and all, is there any restriction? No. It can be 20-30 floors also. Then how it will be called as house occupied by a single family? If there is only one kitchen, it will be called as house occupied by a single family. Then second, construction, repair, alteration, renovation, etc. of the following projects is exempted. So what are they? Housing for All Mission and Pradhana Mantri Awas Yojana. These two projects, not only construction but repair also exempted. But in the first point, only construction is exempted. But in the second point, both construction, repair, alteration is exempted. You understood the difference? Then third point is, whenever we are selling a flat and that flat includes the UDS, that is land value also, then in that case 1/3 will be reduced towards the UDS. For example, the flat value is 75 lakhs. 75 lakhs you pay and you get the UDS also, some 300-400 square feet of UDS, undivided share of land also you will get. Now how much will be excluded towards the land, because GST is not payable on land. So therefore what we need to do, 75 lakhs into 2/3 only should be taken as a value, means 1/3 will be reduced towards land. And suppose if the land value is given separately, even then we need to follow the same way. Yes, for example, land value 40 lakhs and building value 50 lakhs. So total 90 lakhs. But how much will be allowed as reduction for land? Only 30 lakhs, because 50 plus 40, 90, 90 into 1/3, 30. So 30 lakhs only will be excluded towards the value of land. Is it clear or not? Means even if the land value is how much ever costly it may be, only 1/3 will be reduced towards value of land and remaining will be chargeable to GST. Okay, that too when part of the consideration is received before completion and remaining after completion, or entire consideration received before completion certificate. Because if entire consideration is received after completion certificate, entirely it is excluded from supply. We don't have to bother about the GST liability. Then next, advocate services. Here one circular is there, that is generally GST is not payable on toll charges, including by way of annuity. Like that one point is there. Please concentrate. So what is this toll charges? So first I am a builder. I am incurring some charges on laying down the road, and thereafter on the vehicles which are plying on that road, I will be collecting some charges to recover my investment. That is only called as toll charges. That's why toll charges is exempted. That toll charges can be by way of annuity also. So annuity means what? One particular vehicle will be going on a daily basis. Then every time if they pay toll charges, it will not be remunerative for them. So due to that reason, yearly they will pay some charges to me. That is known as toll charges by way of annuity. So every time you go, you pay toll charges, that is also exempted. Or you pay the toll charges by way of annuity, that is also exempted. Now here one question came up. government is giving the land to the builder to lay down the road, and they are asking the builder not to collect toll charges from the people, but they are only going to pay like annuities to the builder. Okay, will it come under toll charges by way of annuity? No, because toll charges by way of annuity means collected from the general public. But this government, when it is asking the builder to lay down the road and pay the consideration in installments, it is just the consideration which is paid in installments, not called as toll charges in annuity. Therefore, it will be taxable. Okay, see that GST is applicable on annuities paid for construction of road where certain portion of consideration is received upfront, while remaining is made through deferred payment. Annuity is spread over years. So this will not be treated as toll charges by way of annuity. Okay, normal consideration, it will be taxable. Then next one, we have exemptions under IGST Act. See there, both supplier of service and recipient of service located outside India, whether the service will be taxable or exempted. So supplier of goods, recipient of goods, or supplier of service, recipient of service. Supplier of service, recipient of service located outside India. Can we determine the place of supply? No, place of supply cannot be determined. So then whatever may be the place of supply cannot be determined, whatever the case may be. So it will always be exempted except one service. What is that one service which will be taxable? Transportation of goods by vessel from outside India to India. And in that case, who will pay GST? Importer of that goods will pay GST. That is this first point. Second point, there is a tour operator. Where the tour operator is located? In India. To whom they are providing services? Tour operator services to a person located outside India. And in relation to tour conducted in India or outside India? Outside India. Now, whatever money that Indian tour operator receives is exempted. Won't it become export of service? No, it will not become export of service, because in case of tour operator service, the place of supply will be location of supplier, intermediary. Tour operator is also an intermediary. So location of supplier will be taken, which is in India. That's why it will not become export of service. But to encourage these tour operators, they are bringing the exemption. Is it clear? What if the tour is conducted in India? Will that be exemption? No. So it will be taxable. Indian tour operator providing tour operator service to a foreign national in relation to a tour conducted wholly outside India. Now, if the tour is conducted in India, exemption not available. Okay. What if the tour is partly in India and partly outside India? There we have one amendment. So which says that that part of the consideration with respect to tour conducted outside India is exempted, or 50% of the total consideration, whichever is lower, will be exempted. See this, total consideration into number of days. It is not equal to, it is into. Please make the correction, into number of days outside India divided by total number of days, or total consideration into 50%, whichever is less. For example, if the total consideration is like say 1,20,000 and number of days the tour is conducted is 4 days out of total 6 days. So 1,20,000 into 4 by 6 is what? Or 1,20,000 into 50%, 60,000, whichever is less will be taken, that is 1,20,000 into 50%. What if 1,20,000 into 2 by 6? 1,20,000 into 2 by 6 or 1,20,000 into 50%. So 40,000 is only less. Is it clear? So total consideration into number of days outside India divided by total number of days, or total consideration into 50%, whichever is less. Here one point is there. Suppose sir, if the tour is conducted like exactly not days but even hours is there. For example, 4 days and 13 hours. 4 days 13 hours is outside India. 4 days 13 hours is outside India, and then 5 days 6 hours is in India. Tour is conducted 4 days 13 hours outside India, 5 days 6 hours in India. Then how we need to deal with? 12 or more than 12, take it as half day. Less than 12, ignore. 12 or more than 12, take it as half day. Less than 12, ignore. So therefore, what is the ratio? What is the ratio that we need to take? So total consideration into what is the number of days tour conducted outside India? 4.5 days. Why 4.5 days? 12 or more than 12 should be taken as half day. So therefore 4.5 days divided by total 5 plus 4.5, because this 6 should be ignored. So therefore 5 plus 4.5, 9.5. So this will be taken as the proportion. Is it clear? 12 hours or more than 12 hours should be taken as half day. Less than 12 hours should be ignored for the purpose of computation. Then next we have fourth one, where supplier of goods and recipient of goods is located outside India. Both seller of goods and buyer of goods located outside India. I am an intermediary connecting this seller of goods and buyer of goods. Now I get a commission. That commission what I am receiving will be exempted. That is this fourth point. Service provided by an intermediary where location of both supplier and recipient of goods outside India. Seller outside India, he wanted to find a buyer. I identified a buyer outside India. So therefore seller also outside India, buyer also outside India. I am acting as a commission agent. I get some commission. On that commission, it is exempted. Generally, won't it become export of service? No, again no, because intermediary services, location of supplier will be taken as the place of supply. Due to that reason, they have given this exemption. Okay. So now we have come across these intermediary services in multiple places. So wherein it is given as exemption. One place is banking and other financial services. So intermediary who is located in multi-service SCZ, so providing services to their customers outside India in relation to currencies other than Indian rupees, so money received by them will be exempted. Another place is, so supplier of goods, recipient of goods outside India, and the intermediary is located in India, so that commission earned will be exempted. Then tour operator in relation to tour wholly conducted outside India to a foreign national. If partly in India, partly outside India, proportionately it will be exempted. Is it clear? So these are the three places that we have come across intermediary services, but that intermediary service is exempted. Now, next one, miscellaneous exempted services that we have. Transfer of going concern as a whole or independent part thereof. That is, I have a business and that business as it is I have transferred, lock, stock, barrel, like slump sale or merger or acquisition, etc. Now, in case of transfer of business, I receive some consideration. On that consideration, I don't have to pay any GST. First of all, why the discussion come into the picture? Is transfer of business supply of goods? No, it is not goods. Anything other than goods will become service. So then it may attract GST. That's the reason why they have given exemption here. Then supply of services associated with transit cargo to Nepal and Bhutan. Nepal and Bhutan are considered as landlocked countries. So we have a MOU. Nepal is having MOU with India. So therefore, goods are originally imported into a port in India. Thereafter, the goods will be going to Nepal and Bhutan and it will be coming back. So now this goods, which are lorry vehicle which is taking the goods to the Nepal and Bhutan and returning, is known as transit cargo. For this transit cargo, if you provide any service, transportation service, loading service, unloading service or warehousing services, that services will be exempted. Previously, only to Nepal and Bhutan was there, but now they gave a circular specifying that both to and from covered in the exemptions as per CBIC circular. Both to and fro is covered in exemptions as per CBIC circular. Okay. Then services by way of collecting or providing news by independent journalists, Press Trust of India or United News of India. So that is, there is an independent journalist who will be working for multiple news channels, etc., and they collect the news and they will be selling news. The money received by them will be exempted. Press Trust of India, PTI. So PTI will disseminate the information to all the newspapers. For example, if I want to give a particular ad and that ad needs to be given in all the newspapers, so then I can go to the PTI, make some payment to the PTI, and the PTI will release the information, news article, to all the newspapers, and the newspapers will be publishing it. So this PTA collects some money that is exempted. Same way UNI, so United News of India. So this PTA and UNI will do the same work. That is, I will go to PTA, I will go to UNI, because whenever you are reading some newspapers, you will be seeing there small letters PTI, UNI, like that. So these people, I will be paying some money to them, so that they will give the information in all the sources, like all the newspapers who are all members of that PTA or UNI. Then service of public libraries by way of lending books, publications or any other knowledge enhancing content, that is only public libraries collecting the lending fee will be exempted. Suppose if it is a private library which is restricted only for few people, for example ICI library, ICI library is there, ICI library is accessible to every person? No, only to CA students. They will be asking ID card and all, na? Is ICI having library? They have library here, they have library, and they will be giving facility to the ICI students, and now they collect some lending fee, whether it will be taxable or exempted. So even though it is not covered here, but it will be coming under services provided by education institution to its students, faculty, staff, it will be exempted. Suppose if there is a British Council library, that British Council library, you need to take a membership there, then only that library you can access. Then in that case, whether it will be coming under taxable or exempted? Taxable, because it is not a public library, it is a private library. Then service by an organizer, there is an organizer of business exhibition, and where the business exhibition is held outside India, and he is providing services to a person in India, organizer in India, recipient also in India, but where the exhibition is held outside India, money earned for that organizing a event is exempted, okay, because it will indirectly encourage exports for that reason. Then services by way of public conveniences such as provision of facilities of bathroom, washroom, lavatories, urinal or toilet. So for that 1 rupee, 2 rupees pay and use toilets are there, na? That is exempted. Then this is what I have been discussing, toll charges. Service by way of accessing to a road or bridge on toll charges will be exempted, including payment of annuity by way of toll charges. So annuity means yearly we will make some payment. Now even overloading charges means what? Whenever a lorry is coming with full load, no, heavy load, so then they have to pay some overloading charges in the toll plaza, that is also exempted. And so not having fast tag, so you have to pay extra charges. So that extra charges is also exempted. Higher toll charges for not having fast tag is also exempted. Then next number 8, service by a performance artist in folk or classical art form. So there is a performance artist. Who is a performance artist? One who perform before the audience, and they should be performing in what genre? They should be performing in folk or classical art form. Of which art form? Music, dance or theatre. For example, a Bharatanatyam dancer performing in a stage show for which they are collecting some amount. How much amount it should be so that it is exempted? It does not exceed 1,50,000 per performance for a performance. For example, 2 performances receive 2 lakh rupees, exempted, because each performance it does not exceed 1,50,000, therefore it is exempted. What if that particular Bharatanatyam dancer is performing in order to promote a brand or a trade name or a logo, etc.? So then in that case the exemption is not available, means it should be purely for recreational purposes only, means that is not a product launch or one business meeting, or it is not one particular gathering, etc., not that. So it should be purely recreational purposes or entertainment purpose, that kind of event only it should be, and it should not have any kind of sponsors, sponsored by, like that it should not be there. If it is there, the moment that event is having a sponsorer, then automatically the dancer will be called as brand ambassador, and therefore amount collected will become taxable, even though it does not exceed 1,50,000. Then service by way of training or coaching in recreational activities relating to arts or culture. Arts or culture should be by an individual, sports by a charitable trust, already we discussed that there itself. So here I have given. Then satellite launch services. Satellite launch services provided by ISRO, Indian Space Research Organization. They have 2 subsidiary companies. New Space India Limited and Antrix Corporation. Only these three people will provide satellite launch service in India right now. There is no other person. So remember, satellite launch service is exempted. So these are the various exemptions, and few circulars we have. GST applicable on amount collected by guest anchors if they are registered. For example, so this reality shows are there. For reality shows, they will be bringing big celebrities as anchors. So Big Boss example. So now whatever money that they are receiving, anywhere we have come across in exemption? No. Will it be taxable? Of course, yes. Provided if their aggregate turnover exceed threshold limit, it will exceed. Long back it would have been exceeded. Then only renting of motor vehicle to a body corporate is covered under RCM, but transportation of passenger service to body corporate is not covered under RCM. Already I discussed this point. Okay. Then private ferries, this point also we discussed. So whether the private ferries, if it is used for passenger transportation, then it will be exempted. If it is used for tourism, it will be taxable. So with this we completed all the exemptions. Okay. Then, so there is one query here. Sir, for tour operator in your amendment PDF, 12 hours or more is considered as 1 day. So, 1 second here, correct here, sorry I forgot. So, it is 12 hours or more should be considered as 1 day. Yes. You are right, sorry, extremely sorry. So, 4 days, 13 hours should be considered as 5 days. So the numerator will be 5. That is 12 or more than 12 should be considered as full day, and less than 12 hours should be considered as half day. So therefore 4 days and 13 hours will be considered as 5 days, and denominator this is 5, and this will be 5 days 6 hours will be considered as 5.5. So therefore total will be 5 divided by 10.5. Sorry, I said wrongly. So 12 hours or more should be considered as 1 day, and less than 12 hours should be considered as half day. Okay. Then next we are moving on to segment 3. So please take segment 3, invoice and time of supply. Concentrate. Segment 3 we will complete today and we will leave, and tomorrow we will be starting with place of supply with fresh mind. Okay. So concentrate. Come back to page number 35, invoice and time of supply. As per section 31, we need to determine the due date of invoice. The due date of invoice is given under section 31 in this invoice and time of supply chapter. For invoice, we have total section 31, section 32, 33 and 34. These are the 4 sections related to tax invoice. And related to time of supply, we have section 12, then 13, 14. These are the 3 sections related to time of supply. So tax invoice, we are discussing first due date of tax invoice under section 31. So we have total 6 provisions. In case of goods, 3 provisions. In case of services, 3 provisions. In case of goods, section 31, subsection 147 deals with goods related provisions and 256 deals with services related provisions. So 31 subsection 1 is normal cases, and 31 subsection 4 is continuous supply of goods, and 31 subsection 7 sale on approval or on return basis. So in case of 31 subsection 1 normal cases, we need to see supply involves movement of goods, we need to take at the time of removal. Supply does not involve movement of goods at the time of delivery. So when supply involves movement of goods under the contract of supply, I am transporting goods from one location to another location, then it is on a supply involving movement of goods. So we need to take at the time of removal. For example, you place an order in Amazon and the product is packed on 15th January and you are receiving it on 20th January. So therefore, they have to raise invoice by 15th January. So then in case of door delivery contracts, we will take supply involving movement of goods. But when you go to the supermarket and you purchase a product, that is supply does not involve movement of goods. So at the time of delivery of the goods, they need to give you the invoice. So at the time of delivery. Then 31 subsection 4 in case of continuous supply of goods. Continuous supply of goods means there will be successive supply of goods for which the payments are settled on periodical basis. In case of continuous supply of goods, remember, first, whether the payments are received based on account statement or irrespective of account statement. If the payments are received irrespective of account statement, the payment received date. If the payment is received only based on account statement, then the account statement date will be taken. For example, I entered into contract with you to supply the chemicals through pipeline. Now in this case, so as per the contract, for every month you have to give 2 lakh rupees, and at the end of third month, so that is for the quarter, I will be raising an account statement to you depending upon the usage, and I will be collecting the differential amount. Say for the first quarter, April to June. So April, May, June, 2 lakhs, 2 lakhs, 2 lakhs. So you have to give it to me. Then for the quarter, I raised an account statement to you. In that account statement, I have mentioned 6,52,000 minus 6,52,000 you need to pay. Now, first 2 lakhs, second 2 lakhs and third 2 lakhs is payable irrespective of the account statement. So the date when I am receiving the 2 lakhs will be taken as the due date of invoice. Whereas that 52,000 rupees is based on account statement. So even though you are paying that 52,000 later, but the account statement date will be taken. So therefore, if the payments are received based on account statement date, if the payments are received irrespective of the account statement, then the payment received date. So that should be taken. Then it is not whichever is earlier. Then next, sale on approval or on return basis. In case of sale on approval or on return basis, so usually the goods should have been returned within 6 months. If it is not returned within 6 months from the date of removal, it is deemed that the goods are sold. So therefore, the due date of invoice is 6 months from the date of removal or date of acceptance by the buyer, that is date of supply, whichever is earlier. So this is due date of invoice in case of goods. Then due date of invoice in case of services, 31 subsection 2 normal cases, if it is banking sector within 45 days from the date of completion, and if it is banking or insurance 45 days from the date of completion, if it is any other case 30 days from the date of completion. And 31 subsection 5 continuous supply of services. What is a continuous supply of service? A service which takes more than 3 months to complete and involves periodical payment obligations is known as continuous supply of service. Both the conditions should be satisfied. It should take more than 3 months to complete and it should involve periodic payment obligation. What if it takes more than 3 months to complete but entire amount is received in single payment? Then it is not a continuous supply of service, it will become normal cases. Then within 30 days from the date of completion or 45 days, the invoice needs to be given. And in case of continuous supply of services, 3 situations are there. If the due date of installment is ascertainable from the contract, say for example, by 15th March you have to pay this much, 20th March you have to pay this much, and 31st March you have to pay this much, like that clearly dates are given in the contract, that date will be taken as the due date of invoice with respect to that component, that installment. Whereas due date of installment is not ascertainable from the contract, but the payment is linked to completion of an event. For example, upon 30% completion you have to pay this much, upon 60% completion you have to pay this much, upon 90% completion you have to pay this much. Whenever the 30% is completed, 60% is completed, 90% is completed, that is the due date of invoice, means date of completion. Then suppose if payment is not linked to completion of event and no due date of installment ascertainable in the contract, then as and when the installment amount is received. So 3 points. If due date of installment ascertainable from the contract, such due date of installment. If due date of installment is not ascertainable from the contract, then as and when payments are received. If payment is linked to completion of an event, as and when the event is completed. Then 31 subsection 6 cessation of service. Cessation of service means abruptly stopping the service. In that case, we need to give the invoice immediately upon cessation. Say for example, one actor has signed a contract to act in the movie for a period of 50 days with a remuneration of 1 lakh per day. So 50 lakhs is the remuneration. So now what happened here is that 10 days he acted in the movie and thereafter he quit movie. So means 1 lakh per day, 50 lakhs he need to get remuneration for 50 days, but 10 days only he acted, means he need to get 10 lakh rupees. So there is some proportionate amount he should get. For the proportionate amount, immediately upon cessation he need to raise the invoice. So immediately upon cessation with respect to the proportionate amount retained, they need to raise the invoice. These are the 6 subsections that we have with respect to due date of invoice under section 31, and subsection 3 is related to the general provisions. So 147 goods, 256 services, but subsection 3 is related to the general provisions related to both goods and services that we will see little later. Now we are moving on to time of supply in case of goods and services. Time of supply in case of goods is given under section 12 and time of supply in case of service is given under section 13. Now, yes, CGST Act, all these sections are of CGST Act only. And here subsection 1 talks about liability to pay GST depends upon the time of supply. So, which is common for both goods and services. Whereas 12 subsection 2 and 13 subsection 2, if you see, time of supply in case of FCM and goods FCM is 12.2, service FCM is 13.2. But the provisions are different. Situation is only same, but the provisions are different. Whereas 12 subsection 3 and 13 subsection 3, if you see, so services RCM 13 subsection 3, goods RCM 12 subsection 3. Situation is only same, but the provisions are different. And then 12 subsection 4, in case of vouchers. In case of vouchers, so both subsections talking about the same situation as well as same provision. Provision also same. Then subsection 5, residual cases. Provision is also same. Subsection 6 is situation, interest, late fee or penalty for delay in receipt of consideration. So provision also same, which means total we need to remember 7 points. How 7 points? So first, time of supply in case of goods FCM, time of supply in case of service FCM, time of supply in case of goods RCM, time of supply in case of service RCM, time of supply in case of vouchers, residual cases, and then interest, late fee, penalty for delay in receipt of consideration. If these 7 points we remember, time of supply under section 12 and 13 is over. Okay. So what are those 7 points? First, time of supply in case of goods FCM. Goods FCM 12 subsection 2. It is actual date of invoice or due date of invoice, whichever is earlier. What is the actual date of invoice? The date on which the invoice needs to be issued. What is the due date of invoice? Actual date of invoice is the date on which invoice is issued. Due date of invoice is the date on which invoice should have been issued as per section 31 subsection 1, 4, 7. So normal cases, continuous supply of goods, sale on approval or on return basis there, that will be taken as the due date of invoice. So due date of invoice or actual date of invoice, whichever is earlier, which means whether GST payable on advances in case of goods. No, GST not payable on advances because date of payment is not a date. For example, if the payment is received now and invoice is raised next month and due date of invoice also next month, means are we required to pay GST on the advance received this month in case of goods? No. But in case of a person opting for composition scheme, whether GST payable on advances with respect to goods? Yes, because in case of a person opting for composition scheme, the time of supply in case of goods will be due date of invoice, actual date of invoice or date of payment, whichever is earlier. So two provisions you need to remember. For a normal person, due date of invoice, actual date of invoice, whichever is earlier. But for a person opting for composition scheme, it is due date of invoice, actual date of invoice or date of payment, whichever is earlier. Then in case of services under FCM, we need to check whether invoice is given within the due date. If invoice is given within the due date, then invoice date or payment date, whichever is earlier. If invoice is not given within the due date, then completion date or payment date, whichever is earlier. So what is the due date of invoice? Again, we need to refer to section 31 subsection 2 or subsection 5 or subsection 6 as the case may be. For example, invoice is given within 30 days from the date of completion, then invoice date or payment date, whichever is earlier. Invoice not given within 30 days from the date of completion, then completion date or payment date, whichever is earlier. Whether GST payable on advances in this case? Yes, because date of payment is one of the date. If payment is this month, invoice is next month, whichever is earlier. So this month we have to pay GST. So then in case of goods under RCM, we need to determine the time of supply from whose perspective? We need to determine the time of supply from the recipient perspective. So therefore, we need to see the date on which goods are received by the recipient, the date on which recipient is making payment to the supplier, or 31st day from the date of invoice, whichever is earlier will be taken. So the date of receipt of goods by the recipient, the date on which payment is made to the supplier, or 31st day from the date of invoice, whichever is earlier. But in case of services RCM, we don't have the date of receipt. So it is only the date on which payment is made to supplier or 61st day from the date of invoice, whichever is earlier. And whether GST payable on advances in case of goods and services covered under RCM? Yes. So because date of payment is one of the date. For example, date of payment made is this month, but 61st day falls in the next month. So this month itself we need to pay because whichever is earlier. So therefore, three places GST payable on advances. What are they? Services FCM, goods RCM, services RCM. Goods FCM also in one place we need to pay GST on advances, that is for a person opting for composition scheme. So whenever you are referring to section 12 subsection 2, so we need to also write read with notification number. Please write down read with notification number. Read with notification number 66 of 2017. Read with notification number 66 of 2017. Then, so here there is one query here. Services related to postal department, whether book post is taxable or not. In amendment PDF it is mentioned as exempted, but in that sit book it is not mentioned. No. So book post I did not mention there as exempted. So in amendments also clearly I said that is if the envelopes, it can be book post also less than 10 grams. So it can be book post, it can be registered post, any post, but the envelope should be less than 10 grams. Then it will be exempted. Okay, that's what I mean to say. So therefore, usually book post, registered post and all, definitely weight will be more than 10 grams. So therefore, it will be naturally be taxable. There the criteria is not which mode you are sending. The criteria there is about weight. Weight is less than 10 grams or not. Envelopes with less than 10 grams. Okay. Then next, and that incubating services also I did not mention here. So that after completion of this we will make note about that incubating services. See, because everything I cannot give in this small book. Okay, try to understand. And so I am adding like whatever extra points and all I am adding, because you know the moment if I increase the size of this to include everything like a main book, then what is the need of this book? The purpose will be defeated. So that's the reason why. And so that one point only missed in exemptions, that is incubating services, but otherwise everything is covered. So don't worry about this and see this. And also here, if you want to do this investigation like this book it is there, this book it is not there, so don't spoil my mood. So you message me separately, I will reply to you. Okay, but here try to focus first on whatever is there. And this book is not for 100 out of 100, definitely no. If you are having any belief, see the book size once, and so 100 out of 100 if you are getting out of this book, waste. So that is impossible, it will not happen. So therefore I cannot make a book in the last minute revision for 100 out of 100. Then I have to quit my regular batch, I have to quit my fast track batch, only rocket revision I have to make, and for this rocket revision itself I have to charge 25,000 rupees. So no, yeah, this is a revision. So kindly try to understand, this is a revision, I am doing it for free to you, my dear YouTube, those who are watching. So please don't complain that this is not there, that is not there, all these things. So this is for revision purpose. With that disclaimer only I started. Okay, please, you should have definitely attended the classes. Any faculty for that matter, every faculty is great, and any faculty you should have attended the classes. Then only this revision will be of any use for you. If you are thinking only by attending, because these idiots also, those who cleared last attempts and all, they will not keep quiet. They will come and they will post, sir, by attending your rocket revision only, you know. So it's not true, it's not at all true, because they have attended classes, regular batch they would have attended, fast track they would have attended, with some other faculty they would have attended, and lastly they will see this rocket revision and they will be able to recollect all the provisions and they give the bloody credit to me. I don't need this credit. So they will say, by attending rocket revision only, sir, I got 60 plus marks. Then this is a false impression, false hope. Another student will be thinking, arey yaar, super, if we buy this that's it book for 350 rupees and attend 3 days rocket revision, so that we are going to get 60 plus marks. No, don't believe in that, please. You also don't believe in that. So I know many of you already attended the classes. So, but those who are believing that only 3 days, how we are, it is not possible. And I can still say that way, yes, by attending this you will be getting all those bullshit I can say, but end of the day my conscience will not agree. So tomorrow if that student fail, no, my next generation also he will scold, okay. So therefore no. So coming back to this, in case of goods FCM, so total 4 provisions we have seen so far. Goods FCM, it will be due date of invoice, actual date of invoice, whichever is earlier. For a person opting for composition scheme, due date of invoice, actual date of invoice, or date of payment, whichever is earlier. Then in case of FCM services, invoice given within the due date, invoice date, payment date, whichever is earlier, invoice not given within due date, completion date or payment date, whichever is earlier. Goods RCM, date on which goods are received by the recipient, date on which payment is made to supplier, or 31st day from the date of invoice, whichever is earlier. In case of services RCM, the date on which payment is made to supplier, or 61st day from the date of invoice, whichever is earlier. Then we have 12 subsection 4 vouchers. Vouchers are divided into 2: identifiable vouchers, non-identifiable vouchers. Identifiable vouchers means, so it can be redeemed against a particular product or service, and the product or service will be mentioned in the voucher, that is known as identifiable voucher. Whereas non-identifiable voucher means product or service will not be mentioned on the voucher, means that voucher can be redeemed against any product or service. In case of identifiable voucher, as the product or service against which it is redeemed is known or mentioned in the voucher itself, therefore it will be taken as the date of issuance of voucher itself will be taken as time of supply. Now in case, for example, you are coming to my shop, and I am giving you one voucher, identifiable voucher. So next time when you visit, you will get one medium pizza free, like that one identifiable voucher I have given. Now in that case, today itself I should consider that the medium pizza has been sold and I have to pay GST. But you are not coming to my shop, you are not redeeming that voucher, then unnecessarily I paid GST. Will I get the refund? Yes, I will get the refund. So in case of identifiable voucher, if the voucher is not redeemed but GST already paid at the time of issuance of voucher, treating that the product has been sold, so therefore we will get the refund with respect to the GST paid if the voucher is not redeemed. But in case of non-identifiable voucher, the time of supply itself is at the time of redemption of voucher. Suppose if the person is not redeeming the voucher, GST not payable, so refund question will not arise in that case. Then in residual cases, what should be taken as the time of supply? That is, in case of periodical return is required to be filed, the due date of filing such return. If the periodical returns are not required to be filed, the date of payment of the tax, this is like, so usually records are not maintained. So but for example, a particular month, September month, so some transaction is identified in the bank account and there is no records related to that transaction. Now for September month, what is the periodical returns due date? So the due date itself will be taken as the time of supply. Suppose if that person is not required to file any returns, means what, he is an unregistered person, then whenever he pays tax, that date will be taken as the time of supply. Then in case of addition to value, so interest, late fee, penalty, so interest will always be taxable on receipt basis. So whenever interest is taxable, so when interest will be taxable, if it is other than loans, advances, deposits, means it is on account of delay in receipt of consideration, it will be taxable. Wherever it is taxable, it will be taxable on receipt basis, means only when it is actually received. How to collect that interest? For that we need to give one document called as debit note. So debit note or credit note will be given by supplier to recipient. So increase in the invoice value, debit note; decrease in the invoice value, credit note. So here, because of this interest, late fee, penalty, there is an increase in the invoice value. So for that reason, supplier should be giving a debit note and collecting it from the recipient. And one more important point is that in the absence of information in the question, interest is assumed to be inclusive of GST. Is it clear? That I am writing here itself. So interest assumed to be inclusive of GST. Interest assumed to be inclusive of GST. Interest assumed to be inclusive of GST. Okay. In the absence of information. Suppose in the question they are specifically telling that interest is exclusive of GST, you take it as exclusive of GST. And if it is clearly given that interest is inclusive of GST, you take it as inclusive. When the question is silent only, I am telling, always assumed to be inclusive of GST. And it will be taxable on what basis here? Receipt basis. Actually GST is on accrual basis, but only in this place, that is interest, late fee, penalty for delay in receipt of consideration alone, it will be taxable on receipt basis. So we completed section 12 and section 13, time of supply in case of goods and services. Now in relation to this we have some additional points. First, what will be considered as the date of payment? So date of payment, suppose if from supplier point of view, if you see date of entry in their books or date of credit in their bank account, whichever is earlier. From recipient point of view, if you see date of entry in their books or date of debit in their bank account, whichever is earlier. Now in case of goods covered under FCM, whether GST payable on advances, no. But in case of services covered under FCM, whether GST payable on advances, yes. As GST payable on advances in case of services covered under FCM, if 1000 rupees is received in excess of the invoice, so that is generally invoice is for say 15,000 rupees and 15,200 rupees and the money received is 16,000 rupees. Now what is the excess amount received? 800 rupees. So for this 800 rupees, whether we need to pay GST this month? Yes. But this 800 rupees will be reflected in which month? Next month. So therefore whichever is earlier, if you see date of receipt, that 800 rupees, date of receipt this month, but date of issuance of invoice next month, whichever is earlier this month, so we need to pay this month itself. But we have a relaxation. That relaxation says if the excess amount is up to 1000 rupees per invoice, is the excess amount up to 1000 rupees per invoice? Yes. So we don't have to take whichever is earlier, we can take date of invoice itself as the time of supply. So see that up to 1000 rupees received in excess of the invoice in case of services covered under FCM, time of supply can be date of invoice or determined as per section 13 subsection 2. The supplier has option to choose. So 13 subsection 2 is what? Invoice date or payment date, whichever is earlier. But you can take only date of invoice also as the time of supply. Then in case of supply between associated enterprises, associated enterprise as per section 92A of Income Tax Act, the 26% one rule is there na. So big list of transactions. So in case of import of services from associated enterprises, generally import of services, what will be taken as the time of supply? RCM. Import of services RCM. We need to take date on which payment is made to supplier or 61st day from the date of invoice, whichever is earlier. But in case that 61st day from date of invoice not there, then you cannot determine 61st day from date of invoice, because between associated enterprises there won't be any invoice concept. Due to that reason, they have given a special provision which says that date on which payment is made to supplier or date of entry in the books of recipient, whichever is earlier. You can see that in case of supply of services between associated enterprises where supplier is outside India and recipient is in India, time of supply shall be date of entry in the books of recipient or date of payment to supplier, whichever is earlier. Then when goods are taken outside India for exhibition, is it treated as supply? No, it is not treated as supply, because goods are just taken outside India for exhibition, because it is not 71A and even it is not permanent transfer or disposal of business assets. So 71C also will not be coming. However, if the said goods taken outside India for exhibition is not brought back within 6 months, then deeming fiction under 31 subsection 7 gets attracted, which says that sale on approval or on return basis within 6 months, if the goods are taken not brought back, then on expiry of 6 months it is deemed as supply and we need to raise the tax invoice. So that is this. Then we have 6th point. So as per section 33, tax component should be always shown separately in the invoice. So whenever we are preparing an invoice, so tax component should be always shown separately, even though we may fix a price inclusive of GST. But when we prepare the invoice, in the invoice, that breakup we need to show, that is excluding GST and what is the GST component as per section 33. Then we have time of supply in case of section 14. Change in rate, that is whenever there is a change in rate between 3 dates. What are the 3 dates? Date of completion, date of invoice or date of payment. Between these 3 dates, if there is a change in rate, and Is section 14 applicable in case of both goods and services or only in case of services? Only in case of services. But when you see section 14 bare act, section 14 is actually applicable for both goods and services. But why it is applicable only for services? Because of notification 66/2017. That notification 66/2017 says that even in cases when there is a change in rate with respect to goods, the time of supply needs to be determined based on actual date of invoice or due date of invoice, whichever is earlier. So because of that reason, even in study material this point has been given, but fully they gave for both goods and services. Last in one corner they gave only for services, like that, okay. And student will read that fully and he will think, okay, for both goods and service it is applicable. In exam they will apply for goods also. No, don't apply. Only for services section 14 will be applicable. In case of goods it will be section 12 only, section 12 only. And in case of services, when there is a change in rate, between which dates there is a change in rate? Between 3 dates. What are those 3 dates? Date of completion, date of invoice, or date of payment. So now suppose if date of completion is before change in rate, service is completed before change in rate, then we need to take invoice or payment whichever is earlier as the time of supply. So completion is before change in rate, then we need to take invoice or payment whichever is earlier, date of invoice or date of payment whichever is earlier as the time of supply. Suppose if completion is after change in rate and both invoice and payment comes before change in rate, then whichever is earlier. If one is before, one is after, then whichever is later, okay. For example, say if the date of completion, if the date of completion is 15th March and change in rate is from 1st March, change in rate is from 1st March, date of completion 15th March, date of invoice is 25th March and date of payment is 31st March. So what will be taken as the time of supply? So time of supply, first of all, will it be determined under section 14? No. Time of supply will not be determined under section 14 because between these 3 dates the rate is same, because change in rate is 1-3 and after that only all these events have happened, means between these 3 days there is no change in rate. So don't apply section 14. So you need to determine normally either 12 or 13. So now suppose if there is a completion which is before change in rate, that is 25th of February there is completion and change in rate is from 1st March. Now time of supply will be determined under section 14, yes or no? Yes. And what will be taken as the time of supply? So supply is before change in rate or after change in rate? Completion is before change in rate or after change in rate? Before change in rate. So therefore invoice date or payment date, whichever is earlier, will be 25th of March. Are you understanding this? Suppose if completion is after change in rate, say 25th of March completion, and invoice is raised on 20th of February and payment is made on 31st of March. Now we need to apply section 14 or not? Yes, section 14. And completion is before change in rate or after change in rate? After change in rate. Whether both are before change in rate? No, one before, one after. So whichever is later. Which is later? 31st March. So that will be taken. Just 3 points you need to remember. Completion before change in rate, invoice or payment whichever is earlier. Completion after change in rate, both invoice and payment before change in rate, whichever is earlier. Invoice or payment whichever is earlier. One before, one after, whichever is later. And what should be taken as the date of payment? Generally, what is the meaning of date of payment? Date of entry in the books or date of credit in the bank account, whichever is earlier. However, if the payment is credited within 4 working days from the change in rate, then only we will take this for section 14. For section 14, we have a different meaning of date of payment. If the payment is credited within 4 working days from the change in rate, then we need to take date of entry in the books or date of credit in the bank account, whichever is earlier. If the payment is credited beyond 4 working days from the change in rate, only the date of credit in the bank account will be taken as the date of payment. So these 4 working days you should always be observing so carefully when you are applying this section 14. So date of payment is date of entry in the books or date of credit in the bank account, whichever is earlier, provided payment is credited within 4 working days from the change in rate. If payment is not credited within 4 working days from change in rate, don't take entry date, just the credit date. The date on which the bank account gets credited, that only will be taken as the date of payment. So we completed 3 sections in time of supply. Section 12, time of supply in case of goods. Section 13, time of supply in case of services. Section 14, time of supply in case of change in rate. Now look into this, various documents involved in GST. So here tax invoice, just now we have seen tax invoice. Who will be giving tax invoice to whom? Generally supplier will be giving tax invoice to recipient. What is the time limit? Already we discussed that time limit. But only in one case, recipient will be giving tax invoice to supplier, which case RCM and the supplier is unregistered. 2 conditions, it should be RCM and the supplier is unregistered. Then in that case, recipient will be giving the tax invoice to the supplier. And tax invoice is issued in case of taxable supplies. What if it is exempted supplies? In case of exempted supplies or supplies by a person covered under composition scheme, then the name of the document is known as bill of supply. What is the time limit for bill of supply? Same as time limit for invoice. Whatever is the time limit that is applicable for invoice, the same is applicable. And who will be giving bill of supply to whom? Supplier to recipient. And bill of supply is applicable only to a registered person. Registered person, but who is making exempted supplies. Now in case of low value supplies, what is low value supply? Value of supply less than 200 is known as low value supply. For low value supplies, neither tax invoice nor bill of supply is required to be issued, but provided 3 conditions are satisfied. What are those 3 conditions? Recipient is unregistered, means B2B or B2C? B2C. And then recipient is not in need of invoice. Recipient do not need an invoice, but a consolidated invoice or bill of supply should be generated at the end of the day. If these 3 conditions are satisfied, so neither tax invoice nor bill of supply is required in case of low value supply. What is a low value supply? Value of supply less than 200 is known as low value supply. In case of low value supply, tax invoice or bill of supply not required. In case of B2B or B2C? B2C and recipient do not require tax invoice, but all these low value supplies at the end of the day we need to prepare a consolidated document for our accounting purposes. However, in case of entry to a multiplex theatre, even though if the value of supply is less than 200, but definitely e-ticket needs to be issued and e-ticket is considered as invoice. Okay, that is that note. Then debit note and credit note. Debit note and credit note is given under section 34. And who will be giving debit note and credit note to whom? Only supplier will give debit note and credit note to the recipient. When debit note will be issued? When there is an increase in the invoice value or increase in the tax. For example, I charge 12%, but the rate of GST is 18%. To collect that excess 6%, I can give a debit note. Or I have collected 1 lakh, but actually 1,20,000 needs to be collected. For collecting the 20,000 extra, I can give a debit note. Is there any time limit for debit note? Not specified, which means there is no time limit. So because of debit note, what will be happening to the supplier? What is the consequence of debit note to the supplier? Liability will increase. That's why no time limit. Okay. Then in case of credit note, what will happen? Liability of the supplier will decrease. So whenever the credit note is reported in GSTR1, that month the liability will come down. That's why there is a time limit. What is the time limit in case of credit note? So please change it before November end of next financial year. Before November end of next financial year or date of filing annual return, whichever is earlier. Before November end, 30th November of the succeeding financial year or date of filing annual return, whichever is earlier. And when credit note will be issued here? Credit note will be issued. Situation, whenever there is a reduction in the invoice value. For example, invoice value 1 lakh. I want to give a discount of 5,000 rupees. I can give a credit note. Or sales returns or reduction in tax. Reduction in tax. Okay. So these are the cases. Taxable value is coming down or the tax is coming down or sales returns or where goods or services are both supplied or deficient. In that case, a credit note can be issued, and credit note cannot be issued in case of bad debts. That is specifically given in a circular that in case of bad debts, credit note cannot be issued. So this credit note and debit note given by supplier to recipient, and time limit is not applicable for debit note, but time limit is applicable for credit note. Then credit notes and debit notes should be reported where? Supplier has to report it in GSTR1, let it be B2B or B2C, and accordingly they need to consider the tax adjustment in GSTR 3B. And what is the consequence of debit note to the recipient? So based on debit note, recipient will be able to take the ITC, and based on credit note, recipient will reverse the ITC because his ITC balance will come down. Then revised tax invoice. So whenever a person is liable to get registered and he makes application for registration within 30 days, then in that case, from the date he is liable to get registered till the date he get the certificate of registration, on their outward supplies, they cannot give tax invoice as and when supply takes place because they will not get registration number at. So due to that reason, after registration certificate, within 1 month, they can give revised tax invoice for collecting GST with respect to outward supplies between which date? From the date they are liable to get registered till the date they get the certificate of registration. What is the time limit for giving the revised tax invoice? No, within 1 month, not 30 days, within 1 month from the date of certificate of registration. And what is the time limit within which application for registration should be made? Within 30 days. Okay. Now, what if the application for registration is not made within 30 days from the date they are liable to get registered? Then they cannot give revised tax invoice. Revised tax invoice cannot be issued if application for registration is not made within 30 days from the date on which liability to register arises. Why? Because the effective date of registration is the date on which they are liable to get registered if the application is made within 30 days. If the application is not made within 30 days, the date of registration certificate will be taken as the effective date of registration. So therefore, they cannot give the revised tax invoice in that case. So therefore, along with this, the effective date of registration also can be tested. So what is the effective date of registration? If application is made within 30 days, the date on which they are liable to register. If the application is not made within 30 days, the date on which they got the registration certificate. Then receipt voucher. Receipt voucher is in case of advances. That is, whenever we are yet to prepare an invoice and we received some money advance. So advance is any amount that is received before preparing the invoice is known as advance. In case of advances, so we need to evidence the receipt of advance. For that, supplier will be giving a receipt voucher to the recipient. So whenever advance is received by the supplier from the recipient. What if the payment is already payment is to be received after preparing the invoice? Then in that case, whether receipt voucher is required? No. So receipt voucher is required only if the payment is received before issuance of invoice. Then payment voucher. Payment voucher, who will be giving it to whom? Recipient will be giving it to supplier. In case of RCM. Whenever in case of RCM, recipient is making payment to supplier, recipient will be giving a payment voucher to the supplier. Then refund voucher. Refund voucher is connected to receipt voucher. That is, first I received advance and supply is not yet made. The advance needs to be returned. For returning that advance, a refund voucher to be given by supplier to recipient. And delivery challan. Delivery challan is a document that is accompanying the goods whenever there is movement of goods without supply. For example, goods sent on job work basis or goods sent from one place to another place, not between distinct persons like head office to branch office, not having separate registrations, then it is not a supply. Or any other case when there is movement of goods without involving any supply, including sale on approval or on return basis, etc., then that movement of goods should accompany a document called as delivery challan. Then what is the difference between receipt voucher and refund voucher? Suppose before the date of invoice, if the payment is received, that is called as advance. In case of advance, supplier shall issue receipt voucher to the recipient. And on this advance, whether GST payable. If it is goods, GST not payable, but if it is services, GST will be payable on advances. Now, on the date of invoice, so anyhow time of supply is invoice date because payment is not yet received, balance amount not yet received. Now, what if the payment is received after the date of invoice? Then whether receipt voucher is mandatory? No. But supplier may issue a receipt voucher. But here supplier shall issue a receipt voucher. Then before the date of invoice, if the amount is refunded, then what supplier will do? Supplier has to give one document called as refund voucher. But with respect to goods, GST paid? No, not yet paid. So no question of refund. But with respect to services, already GST paid. Can they get a refund? Yes, they can get a refund. Refund claimed equals to GST paid. Suppose if prepared invoice is prepared, thereafter the amount is refunded, then in that case what will happen? If the amount is refunded after preparing the invoices, two options are there. Either give a credit note. If you give a credit note, automatically liability gets reduced. But credit note has got a time limit. So within that time limit we need to give. What if we cross that time limit? We cannot give credit note. Does it mean whatever tax we pay to the government, we will not be able to get any benefit? No. We can get the refund of that under excess payment of tax. So there are two options available. If the amount is refunded or supply is cancelled after preparing the invoice, either they can give a credit note. Whenever credit note is issued, liability gets reduced, or they have another option, that is refund can be claimed. So what is an alternative to credit note? Refund. But credit note is advantageous because in the same month in which credit note is reported, the liability gets reduced. But refund, they have to make an application and they need to wait for statutory time limit of 60 days, and thereafter they will be getting the refund. If they get the refund, thereafter they will get an interest of 6% per annum. Okay, so therefore that will be a headache, and that's the reason why credit note. If credit note is not possible, yes, we have an alternative called as refund. Then next, HSN code in invoice. Usually, then one more point is there below that, section 32. An unregistered person is not supposed to collect GST from the recipient. So section 31 we have seen tax invoice. Section 32. So if you are an unregistered person, you are not supposed to collect tax. If you collect a tax, that is a prohibition. Okay, that is violation of section 32. Then section 33 we discussed. What is 33? Tax component should be shown separately in invoice. Section 34 also we discussed debit notes and credit notes. Okay, and we have some more aspects. HSN code in invoice. Usually in invoice we need to mention this harmonized system of nomenclature code, which is a 8-digit code, but not entire 8 digits we need to enter. If aggregate turnover during the previous year does not exceed 5 crores, we need to enter 4 digits, that too only in case of B2B, not in case of B2C. If the aggregate turnover during the previous year exceeds 5 crores, then we need to enter 6 digits for both B2B as well as B2C. And for services, that code will be called as service accounting code, and it will always be a 6-digit code, and there is no relaxation. Full 6 digits we need to enter. Then we have two concepts, that is e-invoice and dynamic QR code. What is e-invoice? That is for a normal invoice, when we are uploading it into the invoice registration portal and obtaining 3 things, then it will be called as e-invoice. What are those 3 things? Invoice reference number, QR code and digital signature. Then that normal paper of invoice will be called as a e-invoice. So when a normal invoice uploaded into the portal and arrived 3 things, invoice reference number, QR code and digital signature, it is called as a e-invoice. In which portal we need to upload the data? Invoice registration portal. And so then we have this e-invoice is applicable to whom? B2B or B2C? Only in case of B2B supplies, not in case of B2C. That too, if aggregate turnover in any previous year from 2017-18 to 2021-22 exceeds 10 crores. So previously the limit was 20 crores. Now they have been revised it to 10 crores. So therefore, if aggregate turnover during any previous year, from which year to which year? 2017-18 to 2021-22 exceeds or does not exceed? Does not exceed 10 crores, no need to give e-invoice. So only when it exceeds 10 crores, e-invoice is required in case of B2B supplies. And there is something called as dynamic QR code. Dynamic QR code means whenever we are collecting the payment from the recipient, by scanning the QR code only we need to collect the payment, and that QR code also not a static QR code, it will be dynamic QR code, which means the moment you scan it, the amount also will come, we can directly make the payment. But static QR code is when you scan, you need to enter the amount. But dynamic QR code and all, the moment you scan, the amount also will come, that is called as a dynamic QR code. But to whom this dynamic QR code concept will be applicable? It will be applicable for B2C supplies, for a registered person whose aggregate turnover in any previous year exceeds 500 crores. 500 crores, okay, in any previous year. So therefore, that is the connection between this. But remember, in case of e-invoice, one QR code is there. Is this QR code and dynamic QR code has got any link? No. This is generated by the portal, and dynamic QR code will be given by the payment gateways. payment gateway or third party applications or banking system, etc., they will be giving dynamic QR code. So not portal. Portal will be giving only e-invoice. In that e-invoice, one QR code is there, that will only be given by the portal. Now, so this aggregate turnover in any previous year between 2017-18 and 2021-22, if it does not exceed 10 crores, so for B2B supplies, e-invoice not required, B2C supplies, dynamic QR code not required. Suppose if it exceeds 10 crores but does not exceed 500 crores, for B2B supplies, e-invoice required, and for B2C supplies, dynamic QR code is not required. If it exceeds 500 crores, for B2B, e-invoice, for B2C, dynamic QR code in invoice. And invoice should be prepared in a prescribed format, that is INV1. And suppose if my aggregate turnover in any previous year does not exceed 10 crores, even then can I prepare e-invoice? Yes, it is optional. And whenever I prepare a e-invoice, what is the advantage of that? The data will be automatically going into GSTR1 and e-way bill portal. Then whether physical copy of the invoice is required when e-invoice is generated? No, generally physical copy of the invoice is required, original, duplicate, like that. So whether that should be carried when e-invoice is applicable? No. Physical copy of invoice not required in case where e-invoice is applicable. And QR code can be produced before the proper officer for verification. Type of transaction for which e-invoice is required? Outward supplies. All outward supplies. For inward supplies and all, e-invoice not required, only for outward supplies, because we have seen one place where invoice is prepared by recipient to supplier in case of RCM when the supplier is unregistered. There and all we don't have to prepare e-invoice, because only for our outward supply e-invoice is required. Then zero rated supplies, that is export of goods or export of services, supply of goods or services to SEZ. Then debit notes and credit notes. So for this only we need e-invoice. Then there is something called as dynamic QR code. So we need to enter these 5 fields and we need to generate one QR code, that is called as a dynamic QR code. What are the 5 fields that should be there? Supplier GSTIN, which is static, no change. And UPI ID of the supplier, no change, static. And bank account and IFSC code of the supplier, static, no change. But invoice number and date will change, and invoice amount with breakup of value and tax, that will also change. So therefore, entering these 5 fields, if we create one QR code, that is called as a dynamic QR code. And what are the exceptions of UPI ID for supplier? Whenever the payment is not directly collected by the supplier, but collected by e-commerce operator, then that e-commerce operator's UPI ID should be there, or collected by a courier agency, that courier agency UPI ID should be mentioned. So payment collected by ECO or any other person, UPI of such ECO or other person should be mentioned. Then bank account and IFSC code of the supplier. If UPI is connected to the bank account, then no need to enter the bank account and IFSC code of the supplier. So generally all UPIs will be connected to the bank account? No. So because if you are having account in a bank and if that bank is giving you UPI ID, so then it will be the case where your bank account is connected to UPI ID. But suppose if you are not having bank account with that particular UPI ID provider, for example, I have a UPI ID with OK Access and I don't have bank account with Axis Bank at all. I have bank account with some other bank, and therefore this OK Access I don't have, means my UPI ID is not connected to my bank account. So that is this. Then invoice number and date. Invoice number and date exception is like usually invoice number and date. So we cannot enter in case of retail transaction, because in retail transaction there will be multiple counters and parallelly everyone will be preparing the invoices due to that reason. So in case of retail sales, just a unique reference number if it is attached, that is sufficient. Then invoice amount with breakup of tax. So first of all, this dynamic QR code will be applicable only when the payment is received before invoice. If the payment is received after invoice or before invoice, when dynamic QR code will be applicable? Only when the payment is received after preparing the invoice. If the payment is already collected, then dynamic QR code is not required. Dynamic QR code is only for collecting the payment. So therefore, in invoice we need to mention dynamic QR code. Then when the payment should have been collected? After preparing the invoice. So therefore, if the payment is received before or at the time of generating invoice, and cross reference of such payment received is mentioned, even if it is cash receipt, that date on which cash is received is mentioned in invoice, then we don't have to prepare a dynamic QR code in invoice. Is it clear? Now, say for example, two payments are received. One is advance and the other is balance amount. Advance is before invoice and balance amount is after invoice. So, therefore, in dynamic QR code, which amount should be mentioned? Balance amount. So, part amount received before invoice and remaining after invoice, and only the balance due should be mentioned here. Okay. Then, one more point. Generally, in case of export of goods or export of services, we need to have e-invoice. Okay, e-invoice, export of goods or export of service, e-invoice. In other cases, we need to collect the payment by scanning the dynamic QR code. What if our customer is located outside India? B2C. Our customer is located outside India. It is not export of goods or export of services, and he is remitting the money to us. Now, whether UPI and all will work there? No. So, due to that reason, so what they are telling is that dynamic QR code is not required. Please see this. Location of supplier in India, location of recipient outside India, place of supply in India. So, it is not export of service, correct? Correct. Because where the place of supply should be? Outside India. And payment in convertible forex. It is not an export of service. When it is not export of service, no invoice. When there is no invoice, dynamic QR code may come. So, that is why they are telling dynamic QR code also not required. Okay. Then next, there are few cases e-invoice and dynamic QR code in invoice is not required. What are they? E-invoice is not required in case of biggest. Don't write biggest and write there the answer. Huh? Don't write. Because in one attempt, one student came to me and he told me, sir, whatever you said I wrote that only, sir, I did not get marks. I asked what you wrote, what I said, like that. Sir, you said who are not required to give dynamic QR code, like that one question came. And you know what he did? Big toe, B for, I for, like that he wrote. Okay. Hurry, if you write like that, you will never get marks. This is only to keep in your mind. And the drip and all don't write. Spelled slow, drip, MMT and USAM, MMT and ASAM. See, these are all some mnemonics for the purpose of remembering in your mind. But exam when you are writing, that elaboration only you need to write. Okay, please pa. So then there is no point in all these things. So e-invoice is not applicable in case of biggest. B for banking company, I for insurance company, and G for goods transport agency. Another G is government company or local government or local authority. Then E, exhibition of film in a multiplex theatre. Yes, SEZ unit, not SEZ developer, SEZ unit. And T, transportation of passengers by any mode. So these people, even though their aggregate turnover exceeds 10 crores, but e-invoice is not required to be issued. Then in case of dynamic QR code, it is big toe, that is the same biggest, S is removed and O is added. What is O? OIDR supplier. B same, banking company, I for insurance company, G for GTA, another G for government or local authority, and T for transportation of passengers any mode, and O is OIDR supplier located outside India making supply to non-taxable online recipient in India, and E is also same, exhibition of film in a multiplex theatre. Then this is the e-invoice process. So just for reference purpose, so first step number 1, you see what happens is that, so a taxpayer will prepare a normal invoice using his billing system or ERP system that will be converted into one file called as .json file, that is JavaScript object notation. Then he will be uploading that into invoice registration portal, and invoice registration portal will do a deduplication check and it will be affixing 3 things. What are the 3 things? Invoice reference number, digital signature and QR code, and from there it will be sent to the GST system and e-way bill system. And thereafter, so in the GST system, GSTR 1 of the supplier gets updated and GSTR 2B of the recipient gets updated, and buyer can check the authenticity of these invoices by entering the QR code or the digital signature or the invoice reference number, just to know whether this is a valid invoice, genuine invoice or not. So this is the e-invoice process, but there is one important note which you need to remember. If a supplier is required to give e-invoice but not issued e-invoice and issued a normal invoice, then recipient cannot avail ITC even though such invoice is reflected in 2A or 2B of the recipient. Okay, remember this. That is, I am required to give e-invoice, but instead I gave a normal invoice. Now I may be reporting it in GSTR1, it may come in your 2A, 2B, still you cannot take ITC because I have not given the e-invoice. Then, so please take that exemption. So we completed invoice and time of supply. In that exemptions, one point, we have not discussed, that is incubating services. Recipient should be aware. Turnover is something which is openly available. My supplier's aggregate turnover is something which is openly available. Know your GSTIN, there I have to enter and know my supplier. And my supplier, if he crossed 10 crores, see 10 crores if they cross, they are eligible to give e-invoice, like that is there, na? That we know. Because we cannot say, I don't know that provision. Ignorance of law is of no excuse. So definitely we should be knowing it. Okay, but turnover of the supplier, if it crosses 10 crores, then he need to give e-invoice. If he is not giving, bloody idiot, you give e-invoice, like that we should ask. Okay, then see this, page number 88, you just write down incubating services, incubating services exempted up to 50 lakhs, exempted up to 50 lakhs. And what are the conditions? What are the conditions here? Condition number 1, previous year gross receipts, should be less than or equals to 50 lakhs, and exemption for a period of 3 years, exemption for a period of 3 years from the date of signing contract, from the date of signing contract. Then next one, incubator services, divided into 2, approved by government, not approved by government, approved by government. If they are approved by government, fully exempted, and not approved by government, then it will be taxable. So there is one query here. Sabas take sponsorship for December season program. They also pay performing artists. Though the artists are not performing in the capacity of a brand ambassador, is their payment still taxable? No, they are not performing as a brand ambassador, because see, Sabas and all, mainly it is for recreation. They may take some sponsorship. That is not I mean to say. I mean to say the event itself is organized by the sponsors. So that means it is like promoting a brand. For promoting a brand, they will be doing it. Then it will be coming under brand ambassador. But one sabha or one cultural event, etc., there we are doing, there they may take some sponsorship money and all, that does not mean promoting a brand. Then, sir, in interior of new house for first time, if all materials is bought by owner and only interior services or carpenter service is received, will that also be exempted from GST? No, interior service will not come, only construction services. So we don't have interior services into that list of exemption. It is only the construction service. Okay. Thank you. In excess of 50 lakhs, the excess only taxable. Okay. So suppose that is what I said in everywhere in exemptions chapter. If the amount exceeds that limit, entirely it will be taxable, but only in case of incubating services. If it exceeds 50 lakhs, that excess only will be taxable. Okay. And if you have any queries, you can ask. Otherwise, you can leave. Tata, bye bye, take care. Tomorrow, please come.